Hey everyone, thank you so much for joining us today for our live presentation. Today's a special day because it's our monthly MetaStock Online Trader Summit. 8 hours, 8 great presenters, and we're really excited about today, and we're really excited that you're here. My name is Greg Lewis. I'm the Marketing Director for MetaStock. Excuse me. If you haven't heard of us before, MetaStock are the purveyors of charting software and premium market data for active traders just like yourself. Actually, just for that reason, if you haven't heard of us, I'm going to go ahead and play a video right now that tells you a little about MetaStock. And oh, by the way, we'll be starting our main presentation here in about 8 minutes and 30 seconds. What is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat. All right, I hope you enjoyed that small video presentation. Again, my name is Greg Lewis. I'm the marketing, I'm the marketing guy here at MetaStock. So we're really excited about today. Again, this is a special day because it's our 8-hour online MetaStock Summit. If you want to find out more about today's event, well, I'll let you know. We got 8 presenters. They are as follows, and in this order: Jeff Tompkins, Jake Bernstein, Ed Downs, our very own Jeff Gibby, Peter Dalal, gentleman whose name I can't remember right now just by looking at his picture, Kurt Christensen and Todd Horwitz. Steve Primo. God, sorry, Steve. Anyway, if you want to see more about today's event, just go to metastock.com/traders-summit. If you're here on YouTube, I've got it pinned right at the top of the chat, metastock.com/traders-summit, and you can see a schedule of today's event and see a description of all the presentations, and more importantly, you can see the free bonus things that are offered by each of them. I'm sorry, I haven't had much coffee yet this morning, and it's still a little early for me here in Salt Lake City. Anyway, if you register now at metastock.com/traders-summit, you can be privy to the free bonus things that are given by most of the presenters. And so that's metastock.com/traders-summit. We will be starting here in about 3 minutes. While you're waiting, I encourage you to go to right now while you're on YouTube to like and subscribe and to hit that little bell so you'll be notified about all the live events we do. We typically do 2 to 3 a week. While I'm on the subject, I apologize to anybody who tried to go to our market recap yesterday. That had to be canceled as the presenter was not feeling well, so we apologize for that. But we do just about every week a live market recap, which it's sort of an opportunity for our presenters to really just, not really sell anything, just talk about the market that week and what they think happened and what will be happening in the weeks to come. And it's really a popular event. We really enjoy it. Also, the way things go here is we are currently simulcasting on GoToWebinar as well as YouTube, and we encourage chat on both ends, especially here in YouTube. If you want to chat or ask a question or make a comment or just say hello, we really encourage that. We encourage any kind of interaction and engagement. And if usually the presenters are watching, they're not necessarily watching the chat on YouTube, but Jeff Gibby always passes those questions along to them, so don't hesitate to ask us questions in chat. And also, if we don't answer them right away, please be patient. We usually do get to it by the end of the presentation. So, all right, we have about 1 minute and 34 seconds, so I think I'm going to go mute myself and make sure that Jeff Tompkins, who is our first presenter, and Jeff Gibby are ready to go. So thank you again so much for joining us, and successful trading.
Hello, everybody. Hope you're doing well. Thanks for joining us today. Happy summer. We're in the middle of the year, if you can believe that already. And I hope you're doing well. Let's read a legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Also, Greg, I think your mic's still on, but I could be wrong. I do want to say thank you, everybody, for joining us. I hope you're excited about today. I love these events, and we got a full day today. So I do want to thank our sponsor, Stocks and Commodities Magazine. They always sponsor the event. They always do a really good job. They've been sponsoring us since we've been doing them. We've been doing them for like 8-9 years now, if you can believe that. And you can get a free issue of Stocks and Commodities if you're watching us on YouTube and you go to metastock.com/trader summit, you can register. There's all kinds of free prizes that you can sign up for, including a free issue of Stocks and Commodities Magazine. So in any case, we here, obviously we're MetaStock. And if you haven't heard about MetaStock, we're going to be talking about it quite a bit today. It's been rated #1 software in its price category for 27, this slide needs to be updated, 27 years in a row now. But we're going to be talking a lot about how you can use it to scan markets, test trading ideas, forecast prices. We're going to be talking about it a lot today. So it's a great software program. I use it every day to trade. And we're going to offer extended trials on it where you can pay for a month and get a second, a third month and see what all, I guess, the buzz is about. Anyway, let's go ahead and kind of get started today. Our first guest is a good friend of mine up in Boise, Idaho. He is a gentleman with a very, very good name, Jeff Tompkins. Jeff has been a partner of MetaStock for a number of years now. He started his business by training people how to trade on a website called udemy.com. Over the time that I've known him, in the few years I've actually known him, he's went on to start working for a hedge fund, or he actually has his own hedge fund. He might talk a little bit about that, but I just love Jeff. He's very, very easy to listen to. He's very, very specific. And I always feel like I learn something when I hear him talking. So let's go ahead and get you in here, Jeff. How are you doing today?
Good morning. I'm doing well.
Good. You sound good.
Well, good. It is early Saturday morning, so that's always a good thing.
Heck yeah. All right. So I've got, you should have okay, I can see you. Well, I can see your screen. And I'm going to go ahead and get off of the view, and I'll let you take it from here. Thanks for coming, Jeff.
Thanks for having me. Thanks for the nice introduction. You're always too kind, and welcome to everybody out there. I love doing these early Saturday morning, depending on where you are in the country, of course, early Saturday morning presentations. It's nice to see we've got a lot of serious investors and traders out there. It's real dedication if you're here on a Saturday morning. So anyway, welcome to all you guys. It's great to have you here. Jeff provided a very nice disclaimer, so I won't read ours, but just want to point out that we will be sharing some traded examples and signals with you guys on our session today, and of course, just realize that past results do not indicate future performance, as we all know. So, all right, well, I'm going to dig right in. I'll give you a little bit of background on myself before we get into the fun stuff. If you haven't attended any of my past presentations or educational events, I'm Jeff Tompkins, as Jeff Gibby mentioned, and I have 22 years of experience trading the stock options and futures markets. I received my professional training at Morgan Stanley, and I'm the founder and chief investment strategist of Altos Trading. We currently have over 50,000 members in over 100 countries across the globe, so really wide array, diverse group of traders and investors, and it's been a real pleasure to train a lot of them hands-on and get them to a point where they can be consistently successful in the markets. And that's what my goal is with all the viewers in the audience today, is to help you guys improve your results and become more consistent. And as also, as Jeff mentioned, I'm a hedge fund manager at Altos Capital, so I do manage money for my clients. And a lot of the things that I share in my educational presentations are tips, tricks, tactics, methodologies that I do use, not just in my personal trading account, but also in my hedge fund. And I'm also the founder and the creator of the Trade Trend Signal software, which I'll be talking to you guys a little bit about today on our session as well. So I want to start this out by being a little bit interactive and getting everybody involved with a little brief survey. It's kind of just a little fun survey. So if you want to pull up your chat box and go ahead and get ready to type something in. What are you guys most afraid of? So it doesn't have to be trading related. It doesn't have to be related to investing or the markets or anything along those lines. It can be, but go ahead and type in the chat box what scares you the most. It could be anything in life that you fear. Just want to get a little bit of a feeling, a little bit of a survey of what scares you guys the most. And you can type that in the Q&A as well. We got a quiet group out there. David says Trump. All right. Rich says money printing. Not reaching my full potential. That's a good one, Glenn. Black Swan events, Ernest. Ken says heights. I'm with you on that one, Ken. Neil says risk of big loss. Inflation. Terry says fear having to trade my time for dollars all my life. Craig says fear of missing out. That's a good one. John says snakes. All right, there's a lot of good answers in there. Randy says failure. Thanks for participating. Wanted to make sure everybody was awake out there. So I'll go ahead and share what I'm most afraid of, since everybody was so kind and expressing their vulnerabilities and fears. Francis says spiders. Ken, lying Democrats. A lot of funny ones in there too. But we're all afraid of something, right? That's the point. And I'm no different. I'm actually not afraid of flying. I love to fly. I'm not afraid of losing money in the markets, believe it or not. I was at one point, but after trading for many years, finally was able to develop some reliable methodologies that really eliminated that fear for me. So it's not losing money in the markets. I'm actually not even afraid of death. Of course, it's probably one of the biggest fears, along with public speaking, that people admit in surveys and things like that. But it's an inevitable thing we all face, right? And it's not actually one of my fears. What I do fear is actually what one of the audience members just mentioned themselves, and that's snakes. I am deathly afraid of snakes. I avoid them at all costs, and unfortunately, I live right down on a body of water that attracts a lot of snakes. So almost every day I go out in the yard and encounter one, and I run back in the house. So that's my biggest fear, and I'll explain why this is relevant here in just a second. But it'll all kind of tie into what we're talking about today. So thanks again, guys, for participating. Really appreciate that. And by the end of our session today, you're going to discover how you can use one simple indicator. And actually, we're gonna beef it up a little bit and use two. There is one indicator that we're going to kind of focus on in our session, and then I'll show you how you can combine that with a second indicator to help improve your accuracy. But the idea here is to accurately predict whether the market is likely to go up or down within a relatively short period of time. So we're looking at fairly near-term predictions over days or even weeks. And the great news is you can have access to this powerful information up to 3 days in advance. So I'm going to show you how you can use the indicators that we're going to look at in our session today and get advanced probabilities and basically, a forward-looking versus lagging indication of where the market is most likely to be going in the near term. And what we're going to be covering works really with any asset class, whether you trade stocks, futures, forex, options, and also regardless of your past experience or knowledge in the markets. So whether you're just starting out or you're a seasoned pro, and we have members of all skill levels, it really runs the spectrum. It's must-have information for today's markets. We're in since the Corona crash last year in some very unusual and unique market conditions. The VIX, the CBOE volatility index, has remained elevated really since the Corona crash last year. It's finally started to retreat below the 20 level, and markets have settled down a little bit. But oftentimes that can that should worry you, and it can sort of tell us that there is a higher likelihood of a volatility spike or a market sell-off. So we're going to talk about that today on our session as well. So I often get asked, how did I get started in the markets? How did I start trading and investing? And for me, it started young in life. So it was actually a junior high summer school class that I took. And back then, to date myself a little bit here, computers were kind of still in their infancy. There wasn't very much access to financial information via the internet at that time. And in this particular summer school class that I took, we didn't have computers in the class. So the instructor would hand out a copy of Investor's Business Daily each day in the class. And the way the class started on day one, he asked us to open up the newspaper, the Investor's Business Daily paper, and turn to the stock section that lists all the stocks. And I remember it, and it's kind of funny thinking back. You got pages and pages of stock symbols with their closing price from the previous day, and so it was really quite daunting to scan through all of these. It's not like today where you can just run all these fancy scans and things in all these charting platforms. So it was kind of a time-consuming process, but I remember it was kind of like throwing darts at a dartboard. I just kind of scanned through the tickers and picked out a stock that I actually recognized the company name. I grew up down in Silicon Valley in the Bay Area, so I was somewhat familiar with different tech companies that were up and coming at the time. And I remember I picked out a stock, Western Digital Corporation, and I went ahead and tracked that stock each day we came to class, and I was really quite amazed that the price of the stock kept going up. And of course, we weren't trading or investing with real money. We were, just on paper trading, as they call it now. And I thought, well, wow, this is incredible. If I'd actually invested in the stock, put real money into this, I would be making money. But unfortunately, what ended up happening is each day we came back to class, the instructor would have us pick out a new stock. And some of the stocks I picked, and admittedly many of them were randomly selected, went up, but unfortunately most of them did not. And so by the end of the summer, by the end of the summer school class, I was sitting on what would have been, or hypothetically, losses in the portfolio that I had constructed. So while I had some successes, I had many more failures, and it wasn't as easy as I thought it would be. Right? You can't just throw money into the market and hope for the best. So there were some successes, but many more failures. And it really kind of, I kind of caught the trading bug at that time. I wanted to figure out how I could multiply all the successes that I had in that class and eliminate a lot of the failures. Okay, and so that's what I strive to do for all of the students that I teach now, is to really increase your consistency, your probability of success, and reduce the inevitable losses that we all face in the market, because really that's our biggest overhead. So what I'm going to give you guys today to make it easier, and again, going back to this class, we really didn't have all the fancy indicators and different technical analysis tools that are available really at our fingertips nowadays in charting platforms like MetaStock. So we're going to use those to our advantage. A lot of them, unfortunately, don't work out very well, but there are a handful of them that can give us an extra edge in trading, and then that's what we're going to focus on. And so we're going to look at one indicator specifically that we can use to identify trends in the market and help improve our consistency and keep us on the right side of the market. Then we're going to combine that with another indicator to really boost our results. So I'm going to show you guys the correct way to use the indicator to help you make money in the markets. And there isn't going to be any guesswork involved here. The nice thing is that when you understand and discover what I'm going to reveal to you on our session today, you'll see that it really eliminates all the guesswork and tells you exactly when to buy and when to sell. And that can make a really big difference when you eliminate as much of the guesswork as possible in your decision making, because it can improve your confidence and make it more likely that you'll adhere to your system. And this particular indicator will help us identify when momentum is shifting and a new trend is starting. So if you guys want to get in early on trends and not after they've already run their course, this is for you. So we'll also cover how to eliminate a lot of your losing trades. We can never completely eliminate losing trades, and they're kind of the cost of doing business in the trading world, but there are some tips and tricks I'll give you that can help you eliminate many of those. And again, generally what I teach is applicable to any market, any time frame. So whether you're trading intraday or you're a swing trader or a longer term investor, or you trade stocks or futures, Forex, this can be applied really to any market because you'll see here shortly that the methodology is really price action based, and so of course that can be applied to really any asset class. We'll look at some trade examples together, and then if you stick with me to the end, I'll show you guys how you can copy my success and get my trade signals that I use to make a living in the markets. And I do trade for a living. It is my passion, and I do it for a very specific reason, which I'll reveal to you as well a little bit later in the session. So let's start out by imagining if we could actually predict market direction. That's probably what most, if not all, of the attendees on our session today strive to do, including myself, right? We have some degree of prediction in our trading model and our methodology or system that we're using. Now, when we talk about short-term prediction, and that would generally indicate intraday or a few days to a few weeks out in time. The human brain is actually pretty good at these short-term predictions, but we're horrible at long-range forecasting. And this is actually why we ran that little survey in the start of the session, because when we look at it as an analogy to what we can predict in our everyday life, and this is really why I'm afraid of snakes. We have no problem anticipating that a snake on the ground might bite us, right? If it feels threatened, if we're in its territory, it could lash out and bite us, right? That's instinctual to the snake, and we know that, and it's fairly easy to predict. And the good news is, we have our own defense mechanisms to help us get out of the way and protect ourselves in a very short period of time, if that were to occur. But we have a lot of trouble guessing where the snake will be the next time we go out into the yard. In fact, we almost always guess incorrectly and avoid the same spot. So for some reason, in our brains, if we see danger in a certain area, we avoid that area in the future, even though that might not be an accurate long-term prediction, because the snake is probably not going to be in the same spot when you go back out into the yard. And if you guys have ever read the book The Black Swan by Nassim Taleb, he argues in his book that we're all guilty of ascribing far too much predictability to the truly unpredictable. And this is a great analogy for the markets, because really none of us can predict where the markets are going to be in the long term. If I asked anybody on our session today, where's the S&P going to be 6 months from now, nobody could actually tell me that with any degree of certainty. And it's a bit of a breath of fresh air to admit that to yourself, that we really don't know where the market's going to go. Even the best traders in the world don't know where the market is going to go in the long term. So we need to use some degree of short-term forecasting with methods that are reliable and predictable in the near term. So how do we predict the unpredictable? Well, the good news is we don't need to try and forecast where a security will end up in the long term to be successful. We really don't. We don't need to, guess where the S&P or the NASDAQ or the Russell is going to be 6 months from now. But we do need a reliable indicator algorithm for short-term predictions. And most of us, unless you're truly a buy and hold investor, aren't in the market or exposed to the market over long periods of time. And that's really the idea behind trading, is to give us an edge by being in the market when conditions are favorable, and being in cash or out of the market when they're not. And that alone, if done correctly, can give us a real strong edge in our trading. And on top of that, because we can't predict long-term market direction reliably, we need a trailing stop algorithm to overcome that difficulty or impossibility even. So we're going to do that with one specific indicator called the parabolic SAR. Just out of curiosity, how many people out there have heard of or used the parabolic SAR? Yeah, we got a few people that have heard of it or even used it in their trading. And we're going to kind of cover, obviously not everybody on the session has used this indicator, so we'll cover sort of the basics behind it, some of the strengths and weaknesses of the parabolic SAR, and then I'll show you a really cool trick how we can improve the accuracy of it. So yeah, Mike's never heard of it. Ernest has never. Ken, Brian, John heard of it. Terry's heard of it, but not used. So, all right. Well, the parabolic SAR indicator is typically used by traders to determine trend direction and potential reversals in price. And it uses a trailing stop and reverse method called SAR. That's what SAR stands for, stop and reverse, to identify entry and exit points in a security. And the parabolic SAR indicator is plotted on a chart as a series of dots. So as you see there over on the right of your screen, you see that we've got just sort of a generic price chart with a series of dots. And those appear either above or below an asset's price, depending on the direction the price is moving. So a dot's placed below the price when it's trending upward, and above the price when it's trending downward. So it can help us identify the current market trend. So this is kind of basically how it works in a nutshell. As the price of a stock or any asset you're trading rises, the dots will also rise. And generally they start out rising slowly and then accelerate if the trend picks up. And they move a little faster as that trend develops, and eventually catch up to the price as the trend stalls out or reverses. So the chart to the right shows that the indicator can work well during strong trends. So this stock chart you see here on your screen is obviously showing a very strong trend to the upside. And you can see that the parabolic SAR dots are moving along with the price trend. Now, there's a number of problems with the parabolic SAR that we're going to touch on, and then I'll show you how you can overcome those. One of those is that it can lead to a lot of false signals, just like a lot of indicators out there that we think are going to work very well for us, serve us well in our trading when we look back on the price chart. But then in live trading conditions, unfortunately, that doesn't pan out a lot of the time. And there's a lot of reasons for that, but generally it's because of dynamic market conditions and the fact they're always changing. Trends, don't last forever. Markets often move sideways, or they become choppy and volatile, right? And so that's typically the scenario where indicators will fail us. So one of the main problems of the parabolic SAR is that it's mechanical and it will always be giving us new signals to go long or short. So if you took every single parabolic SAR signal, you'd be in the market all the time, either long or short. And that would be fine if it was 100% accurate, but it's not. And so inevitably, you're going to be in situations where you might get chopped up and get a lot of false signals. So if you use it as a standalone tool, it's going to always leave you wondering which signals to take and which to ignore, right? And that could become very difficult and lead to analysis paralysis. So the parabolic SAR really only performs best in strong trending markets. And since we can't predict long-term future price direction, we don't know necessarily if we're going to, enter a strong trending market, or we're going to be in a situation where there's a false breakout, or a rapid trend reversal, or something catches us and chops us up. Because we know that the majority of time markets are not trending; they're range bound. So I think the statistic is something like markets are range bound about 70% of the time, and only trending about 30% of the time. And so in ranging markets, when the market's just kind of moving sideways, or it's volatile and moving up and down, and we've seen a lot of that over the past year, right? We've seen markets shoot up and then shoot back down and shoot up. And this is where the parabolic SAR tends to whipsaw back and forth, and it can give us a lot of false trading signals. So let's kind of take a look at that and visualize it on a stock chart here. You can see on the left of the chart, we're in a strong uptrend, and the parabolic SAR provided a nice indication of that as the price of this asset moves up. So this would have been a good signal if you had just purely used the parabolic SAR. Would have caught this really nice uptrend. But unfortunately, if we look at the subsequent signals, this one that told us the market was going into a downtrend, as you can see, the dots switched and reversed, and we're above the price there. That didn't work out so well, right? Instead, the uptrend resumed, and this was a false signal. Same thing with the next one. We had a switch of the parabolic SAR telling us that the trend may move back in the other direction, and the price of the stock would go up. But unfortunately, that didn't happen. It actually went down after moving sideways for a few days. So another false signal. This one was also a parabolic SAR switch indicating a downtrend, which worked out there for about a week or so until it also reversed. And had you taken the signal purely off the parabolic SAR, would have resulted in a losing trade as well. And then we get another switch here. So this one would have told us the trend is reversing and going back up, but as you can see, that did not occur, and another false signal. And then finally, this last parabolic SAR switch that would have told us that the trend should be reversing to the downside, gave us another false signal, and the price of the stock actually went up. So out of these 6 signals, only one of them was accurate. So this, as you can see, can result in a lot of whipsaws just purely using the parabolic SAR. So let's talk about overcoming the parabolic SAR whipsaw problem, because it can be a good indicator if you don't follow it blindly. If you use some other tools and analysis in selecting the parabolic SAR switches. So the parabolic SAR, as I mentioned, alerts us to potential trend reversals, right? But it doesn't tell us whether there is momentum behind the reversal. So it's missing a really key component. We want to know that reversal and the prediction of an uptrend or a downtrend has momentum behind it. And more often than not, the SAR results in a false signal when used alone. So it's crucial to use a reliable and highly accurate momentum indicator to confirm the start of a new trend, right? And for those of you who use multiple indicators to confirm your forecast or your outlook for the security that you're trading, you know that when you combine the right indicators, it can give you an extra edge and help you weed out false signals. And so that's where we're going to get into Trade Trend, which is an add-on indicator for the MetaStock platform to help us identify momentum behind these parabolic SAR switches. So what we've designed TradeTrend to do in partnership with MetaStock is to accurately provide us buy and sell signals up to 3 candles in advance of the trend. So many, as you guys probably know, so many indicators out there are lagging. So they give us information based on past prices, and oftentimes by the time we get that information, it's too late. Either the trend has exhausted itself, or you jump in and it does continue for a brief period of time before it reverses on you, right? And that can lead to a lot of frustration, not to mention losses in trading. So it's really crucial to have a tool that can give you advanced notice of a potential move. And that's what the TradeTrend algorithm was designed to do, using a proprietary momentum algorithm that can read the market in real time. So it can actually judge the price action and momentum of a security in real time, and then manage that with a trailing stop, so that when the trade moves in the anticipated direction and you start to see profits in your position, you can lock those in. So that's crucial to have that tool to help you not just identify when to get into the market, but read the market momentum and the trend strength to help you stay in as long as possible and then get you out before the trend reverses. And TradeTrend does a really nice job of that in terms of predicting short-term and even long-term trends with astounding accuracy. So we have a lot of members that use TradeTrend on longer time frame charts, from daily to weekly to even monthly charts for longer term forecasting. And it can also be used for very short-term forecasting, even tick charts, 1 minute, 2 minute, 3 minute charts, to help you identify short-term market direction, whether you trade stocks, futures, Forex, and we'll look at how we can use this in different markets, and even screen for trades really very, very quickly in a matter of seconds. The markets nowadays move so quickly that you really need to be on top of price action and be very quick in your decision-making process to take advantage of these moves in the market. So the methodology behind TradeTrend is such that it's designed to really work on any time frame, because it's momentum based. So momentum and trends occur on all time frames. So the time frame is really kind of irrelevant. It's kind of more of a personal preference. What do you prefer trading? What fits your style of trading? And then using a methodology that can fit with that. So momentum is a key component of the methodology that allows this to work on any time frame. And if you trade options, this can really give you an extra edge and help supercharge your options results, regardless of what strategy you're trading. Even if you're trading a non-directional strategy, it can help tell you whether the market's not really doing a whole lot, if it's just flat or moving sideways, or if it's entering a strong trend and you're using more of a directional option strategy. And ultimately, we designed TradeTrend to help even the newest of traders trade like a pro without any guesswork involved. So it gives you everything that you need, from entry to management of the trade to exiting the trade without any guesswork. So let's do a quick demo on the MetaStock platform of TradeTrend so I can show you what it does, how it provides us accurate buy and sell signals in advance. So again, I mentioned up to 3 candles of advance warning is what TradeTrend provides you. So if you are trading off a daily chart, you get a buy or sell warning up to 3 days in advance of the anticipated move. If you're trading intraday, let's say off a 5-minute chart, it could tell you up to 15 minutes in advance of the move, the likely future direction of the security that you're trading. So it gives us some really valuable information. Let's get over to the MetaStock platform. This is the fun part. So If you guys aren't familiar with MetaStock or haven't used it, as Jeff mentioned, it's an award-winning charting platform, downloadable. You can use it right off your desktop, and you can use it to analyze really any market that you choose, whether you trade stocks, futures, forex, also in any time frame. So this is the Power Console. It's kind of my first stop in the MetaStock platform. It's where I start out looking for opportunities in the market. And you'll notice that in the Power Console, you've got a series of buttons on the left side. You've got charting, exploration, system testing, and forecasting. And so I'll kind of mention what a couple of these are and how you can use them, and then we'll focus a little bit more on the charting component. The exploration allows you to search any market with any of the indicators that are built into the platform. And you can see that MetaStock has many indicators built in, and there we have trade trend down here at the bottom of the list. And you can scan opportunities for signals in virtually any market, even international markets. You can look through equities. You can see that they have a lot of pre-built scans in the platform. Asian equities, Europe, Middle East, Africa, North America. They've got the NYSE, the NASDAQ, OTC, pink sheets, a lot of different pre-built scans in different markets like futures, etc. And you can even build your own custom scans. You can see that I've done that here. Jeff's weekly options list, Jeff's futures list. So you can set up your own basket of securities that you want to scan through. So a lot of functionality here that we don't have enough time, unfortunately, to get into the nuances with this, but just know that there's a lot of really great scanning capabilities to help you find these opportunities. So we're going to focus a little bit more on the charting aspect of trade trend. So I'm going to go ahead and pull up a chart so you can see what trade trend looks like on a stock chart. And this is a chart of the SPY, the S&P 500 ETF, and get a feel for how it can tell us the likely direction of the market. So if we look at the symbology used by trade trend, we see that there's a diamond and an arrow. So the diamond is our warning signal. So remember I mentioned that it gives us up to 3 candles of advanced warning. So we'll look at the most recent buy signal. So a green diamond gives us a buy warning, and a red diamond gives us a sell warning. So the most recent triggered buy signal occurred here on May 17th. So you can see that here with the green diamond. Now, over the next couple of days, the SPY moved down. So this was the buy warning here. So it didn't move in the anticipated direction right off the bat. But then you'll notice something interesting happen here on day 3. We see a double bottom in the SPY and a trend reversal. And then you'll notice a green arrow. So this is our confirmed entry. If you were to take this signal and go long the SPY, this would have been the candle that hit the trigger price. So on a buy signal, the trigger price is above the warning candle. So again, that was here on May 17th, and the buy entry would have been just above the high of that candle. And you can see that this candle came up and hit that entry price. And that was the trigger and the indication to get long the SPY if you were to take this signal. And then you notice that the SPY goes up, right? So it got this trend direction correct. It told us that the trend was reversing from down, and there was some sell signals here prior to the buy signal as the market was moving down, and then reversed and moved back up. And it did a pretty nice job at showing us where the reversal was going to occur. And as I zoom out here, you can see that there's some other really nice signals. Here again is this one worked a little bit differently. A buy signal here on March 29th didn't trigger on day 1. Okay, so this would have been the day on March 9th where you'd put, if you were going to take the signal, put your entry order in above the high of the candle and I'll show you here in a second how it the platform actually tells us the exact entry price. And then you can see here on day 2, we got the triggered entry, and then the SPY takes off to the upside. All right, so MetaStock has built in a really cool commentary feature to complement the signals that you see on your chart. And you can go back and actually look at any and all of these signals on your chart and identify what the suggested entry price was on that particular day. So let's see, if I click on the signal here, doesn't want to go for me. There we go. So if I click on this buy signal from March 29th, you'll see that the algorithm has predicted a move up, and the criteria for a buy setup has occurred. And based on this alignment of technical patterns, which include volume, volatility, momentum, and other trend factors, the probability of prices moving in the anticipated direction is currently at its highest. And then you'll notice that it gives us a suggested entry price. So it's saying that if we were to take this signal, we would want to enter our buy stop, and it also gives you the order type at 396.81. Okay, so again, that would have been just above the high of this candle, which was 396.75. So we don't want to get into the market unless there's follow through with the trend or in the momentum. And that's why it suggests using a buy stop order. If you're not familiar with those, that's simply an order that tells us to get in at a higher price than the current market price. Okay, and then once the trade triggers, as it did not on day 1, but on day 2, March 31st, you can see that the commentary tells us the suggested long entry trigger price was reached, initiating a long position. And as we scroll through each day here, you'll notice that it gives us a trailing stop price. So this is the management component of the strategy. It's actually reading the market and telling us that momentum is still strong. So let's keep our trailing stop price below the current mark price until the algorithm identifies if the momentum is starting to slow down. And this one went on for quite a while. It went on for a couple of weeks as the price moved up and was eventually exited on the red diamond that you see here on April 14th. So really nice signal, and you can see that the commentary instructed us exactly how to manage this trade as it was playing out. So pretty cool. Let me show you guys a couple other charts real quick. Let's look at the QQQ, which is the NASDAQ ETF. Okay, so a lot of nice signals on this chart. I'm seeing some nice buy signals here. But what I want you guys to notice is the advanced warning that you're getting from the buy warning, which is again the green diamond, before these moves actually really take off. We had some nice sell signals up here at the very top of the uptrend before the market reversed. This was a really nice one on April 29th and triggered on May 3rd, so 2 days later. Now, if the trade does not trigger, in other words, if it doesn't reach the suggested entry price after 3 candles, then the signal is null. It's null and void. It's no longer valid. And that actually occurred here on the sell signal on June 3rd. So you see we have the sell warning, but there was no follow through. And so the entry price, if you were to take a short trade off this sell signal, would have been below the low of the candle, but no follow through. And that's the little trick that I mentioned to help you guys eliminate many of your losing trades, is to, and this is actually built into the trade trend algorithm, is to use a buy stop order for a long trade or a sell stop for a short trade to help weed out false signals, right? So, so you can see here that this one didn't follow through. But we have some really nice signals and recently just got another buy signal from the algorithm. Okay, so now let's do something interesting here. Let's combine the trade trend signals with the parabolic SAR. So I'm going to add the parabolic SAR to our chart. All right, so those are our parabolic SAR dots, and I'm going to show you a trick that can help us catch a lot of these really nice trends in the market when we combine trade trend with the parabolic SAR. So what we want to look for is a warning candle that would result in a triggered entry in conjunction with the parabolic SAR trend. All right, so we want to basically look for one of these signals to occur at or near within a dot or two of the parabolic SAR switch, and use that for added confirmation. So here's when you can see that we had a parabolic SAR switch. The dots were previously above the price and switched to below the price. And at the same time, we got a buy warning from the trade trend algorithm and got a nice move up in the QQQ. This one was a sell signal. Now the sell warning came in when the parabolic SAR was still below the price, but the trigger price was right where the switch would occur, which is if price touches or exceeds the parabolic SAR dot, and that was a nice one to the downside. Here's another really nice one. So here you can see that we got the buy warning from trade trend, a switch in the parabolic SAR dots anticipating a move up in price, and a nice move to the upside. Here's another beautiful one. So price was previously in a downtrend and below the parabolic SAR dots. And you can see that we had the switch here on November 4th. We get the buy warning from trade trend, and whoosh, big move up in the QQQ. This was a really picture perfect one. So again, we get a parabolic SAR switch from downtrend, and if you had just purely taken blindly taken these off the parabolic SAR, you can see how you can get whipsawed or even move sideways. This buy signal that came in here on the switch resulted in a move up from around, a little below 270 all the way up to 305 on the Qs. So pretty nice move on that one. Here's another nice one. Scroll a little bit more. So here we got the switch after a big down move. In fact, this was a nice one too. This is a short signal, big move down. Believe this was actually the Corona crash here. Big move down, and then we get the buy signal in conjunction with the parabolic SAR switch, and look at how nicely that caught that trend reversal practically near the bottom of this sell-off before the market rebounded. So you can see how when you combine the parabolic SAR with the trade trend indicator, it can vastly improve the accuracy of identifying these opportunities, and whether you're going long or short, let you know that there's a very high likelihood of a trend reversal or even a trend continuation, as in this case where price was still kind of moving up, and we had some fairly frequent parabolic SAR switches, and then in conjunction with that switch, a buy signal from trade trend with a really nice uptrend. And you can find many of these opportunities on really any security and in any time frame that you trade. So that's really the cool thing about it, is it's very adaptable to different time frames and different asset classes. All right, so I wanted to demo that for you guys, kind of show you what it looked like on the chart. Now we have a lot of members who use these tools, trade trend in combination with the parabolic SAR to trade options. So just out of curiosity, how many options traders do we have out there? We got a big group in the room. I'm sure there's got to be few options traders out there. All right, yeah, lots of options, more than I probably expected. A lot of options traders out there. All right, well, this is interesting. I took this screenshot from CNBC back on December 4th, showing that the options trading has really become, a hot topic, a hot market to trade for people, and the volume of options trading has really skyrocketed. If we look at it pre-pandemic, it was, it's kind of always been on an upslope since options were first introduced. More and more retail traders have gotten involved with options trading. But since the pandemic, it's really gone up. And this is taken from data from Piper Sandler, showing that equity options trading is 50% above 2019 levels on all options trading platforms out there. Up 49% on the NASDAQ, 51% on the CBOE, and 58% on the ICE. So probably several catalysts behind this, from people, unfortunately losing their day jobs and looking for alternate sources of income, to people that just want more security and not having to rely on income from a day job, or being able to work from home and have the time to watch the markets and be involved in options trading. So there's a lot of reasons behind it, and it's kind of exciting, but also kind of scares me a little bit, just because I remember, like, back in the early 2000s when I started trading options, it took me a long time to become successful. It's a market that, when traded incorrectly, can result in significant loss. So I'm a bit fearful for people that are just starting out in options trading, because it can be a difficult market to trade. But when you learn how to trade it, it can be really rewarding. And certainly when you have tools like Trade Trend and the parabolic SAR, it can really help with your options trading in terms of timing entries and exits. And that can be crucial for a lot of option strategies. But these tools are really critical for timing directional option strategies. So if you trade just straight calls or puts, if you're a put seller, maybe you trade vertical spreads, credit spreads, calendar spreads. There's so many different strategies out there. Trade Trend can help you identify market trend, market direction, and hopefully, improve the accuracy and timing of your option strategy. And the beauty of options, and probably why most people trade them and get involved in them, is they're a leveraged instrument, and a small move in the stock can result in a big move in the option. So even a 5% move in a stock, and with current market volatility, we see that frequently on a day-to-day basis. We see stocks making 3, 4, 5% moves in one day. Well, that can equal a 100% options gain. And I use Trade Trend myself, as I mentioned, in leveraged markets like options and futures. And I always believe in sharing real money results with anything I teach, not just hypothetical results, because those are easy to back test and cherry pick. So this is an actual screenshot of my real money TD Ameritrade account using Trade Trend in leveraged markets to more accurately identify entry and exit points. And you can see here that it allowed me to make over $26,000 in a single day, with over $115,000 in open profits. And so this is real proof, guys. This is real money. It's not play money. And it's incredible what this can do when you apply it to markets like options or futures or even Forex. So I often get asked, Jeff, why do you do it? Well, I gave you my story of kind of how I caught the trading bug, and how I got involved in the markets and things. And so probably, like most of you out there, I I got involved because I wanted to make money. That was originally why I decided to trade, and why most people probably get into the market. But that kind of shifted for me. So at first it was about the money, but I realized it was not an easy endeavor. You know, I always say, you know, trading and investing is probably one of the more simple things you can do. You really just need a you know, a computer and an internet connection and a brokerage account. But it's really the most difficult, simple thing that we often attempt doing, and a lot of people unfortunately fail. So for me, once I kind of got past that point of failure and started to become more consistent and successful, I realized I wasn't really trading to make money. I was trading so that I could do things that I love to do, which is, you know, go out in the river behind my house and fly fish, or go backcountry skiing with my wife, or travel to Europe, or take a sailboat trip in the San Francisco Bay, my old stomping grounds. So, you know, that's really why I do it, and that's what we strive for all of our members, is to have a lifestyle that that they can enjoy, and do that with an endeavor like trading that affords you the ability to do that. So that's why I do it. So guys, I want to give you the opportunity to do that for yourself, and use Trade Trend in your own trading arsenal. So regardless of what market you're trading or time frame you're trading in, or even what account size you're starting out with or currently trading with, I really believe Trade Trend can give you the extra edge that you need to be successful in the markets. And it's really the only indicator out there that provides predictive buy and sell signals up to 3 candles in advance of the move. So to contrast that with all the other indicators that are out there on today's retail trading and charting platforms, they basically give us a signal that we have to act on immediately, whether you know, they're reliable or not, or whether there's actually any follow through. Now that's what sets Trade Trend apart, is it gives us advanced warning, and if there's no follow through, then you simply don't get into the trade. And you can even take any indicator or system you're currently using and apply the Trade Trend indicator as extra confirmation. So if you're using other indicators like the parabolic SAR or the MACD or a stochastic or an RSI, imagine what this extra layer of confirmation can do for your accuracy. So it's really undeniable that every system out there, or every indicator out there, will probably at some point produce winning trades. But the problem is they don't keep you out of the market when conditions are not favorable, and you end up giving back your profits on the losing trades. That probably sounds familiar to some of you. I know I'll be the first to raise my hand that you know, I've experienced this more times than I care to admit. But we're changing all this with the Trade Trend indicator. And again, here's some real money proof from my personal TD Ameritrade brokerage account of what I've been able to accomplish using Trade Trend in my own trading. And not every trade's going to be a winner. You can see that there are some losing trades in my screenshots here. But the beauty is Trade Trend helps us limit losses. So if the trade doesn't work out, if it's not a good signal, it gets us out fairly quickly. And when it does work out, it keeps us in as long as possible to help ride the trend. And you can see that the winning trades can far outpace the losing trades. So guys, here's my promise to you. I want to help you have days just like these, and I'm going to give you access to a tool that lets you copy my trades. And this is a one-time opportunity to join me to discover how I use accurate buy and sell signals and lock in profits with the Trade Trend trailing stop algorithm. And I reveal every one of my special techniques and indicators that make profits like I've just shown you in my own personal TD Ameritrade account with absolutely nothing held back. So we put together a really special package today for the MetaStock Summit. And here's what you get with it. 12 months of Trade Trend for stocks, ETFs, futures, Forex, whatever you trade, with exact entry and exit signals, live interactive trade sessions, members area access for replays. We record all these sessions and post them in the members area. If you're not able to attend, no big deal. You can watch these at your leisure. You get full support and personal coaching from me. So I host the sessions, and you have full access to me on these sessions to ask any question that you'd like. We also include trade adjustments to fix losing trades around a variety of different option strategies. And I also give you some of my most profitable tickers that I'm currently trading on these sessions. So guys, we want to help you cut the learning curve and trade like a pro starting as early as actually Monday, since the market's closed tomorrow on Sunday. But you will have access to this over the weekend, and you can start using it as early as Monday. All right, so to recap everything that comes with the package, you get 12 months of trade trend on MetaStock. Normally, retail price for that is $1,499. And we're also throwing in those live trade sessions. So we hold those 2 to 3 times per month, and we're throwing those in as well as part of the package valued at $550. And you also get personal coaching from me. So so many educators out there will have you join their program or their service or purchase their indicator and then kind of send you on your way and say good luck. Well, we don't do that. I'm here for you, and I will help you get up and running and be successful with Trade Trend. You also get exclusive invitation-only Facebook group access, valued at $199, as well as our course that helps you, manage and even adjust losing trades. So we all have losing trades, right? Really, the difference between kind of the average Joe or the novice trader and the pro are the ones that can manage those and even adjust them into winning trades. And we have a whole arsenal of tools that allows us to help do that. And that's going to be given to you as well in the package valued at $900. And ultimately, you guys can learn to trade stocks, futures, Forex, and options with consistency, which is, of course, priceless. So we're going to throw in a couple bonuses. Bonus number 1 is our professional trading series online course. That's over 9 hours of our best options, stocks, futures, and Forex strategies. I've taught you one of my strategies today. That's just one of many, many cool things that we have to teach. And the rest is all included in our professional trading series online course. So you'll get access to that, as well as our latest ebook, How to Create Risk-Free Trades, which is a really cool money management system that works well in conjunction with Trade Trend to help you manage trades and even turn a lot of those into risk-free or low-risk trades. And that's valued at $97. So really robust package that we're offering out at the MetaStock Summit, valued at over $5,000 if you bought all these from us individually outside of the summit. Okay, but we're going to slash that today, take 80% off the retail price, and give you access to everything that you see here for only $997. So that breaks down to only just a little under $3 a day, right? So really good value. I mean, who wouldn't spend, $3 a day or less to get everything that you see here on your screen? Really great value. We had a big group in the room. I realized these are going to probably fly off the shelf and go really fast. And we do limit these packages mainly because there's a lot of support, hand-holding, and coaching that goes along with the package. And we can only take on so many new students at a time. So we do limit this to 50 seats. Once those 50 seats are gone, we will shut the offer down. All right. So if you want to take advantage, you can go to altosTrading.com/MetaStock. And perhaps one of the guys over there at MetaStock will put this in the chat box for you as well. So you can just click the link and head on over and claim your seat. But again, altosTrading.com/MetaStock, and you can gain access to everything you see, including the trade trend indicator and the award-winning MetaStock platform. So I'm going to go ahead and wrap it up there, since I did run a little bit over. If there is time for Q&A, I'm happy to take some questions. If not, no problem. I realized that I ran over, and I apologize for that. But you can shoot us any questions that you have. Shoot those to our email at support@altostrading.com, and we're happy to answer those for you. So I'm going to go ahead and pass it back over to Jeff Gibby. And thanks for having me. Hope you guys got a lot out of the session today. It's always a pleasure to be here.
All right. Thank you, Jeff. I did promise Sheena on YouTube I would ask a question to you. Right. And I am a man of my word. So
you are.
The question was, and there was actually a lot of questions around this. You're using daily charts. Do you have a recommended time frame that you use? And do you recommend multiple time frames? So I know we're a little bit over our time, but I'll let you answer that one.
Yeah, I'll answer it real quick. So I don't day trade personally, for the reasons that I mentioned in our session today. I enjoy, getting away from my desk and computer and getting out and doing other things. But we have a lot of members that use Trade Trend to day trade, and there isn't necessarily one specific time frame that I could say is better than another. And that's kind of actually the beauty of Trade Trend is it works across all time frames. So whether you're trading very short term, tick charts or 1 minute charts, or 5 or 15 or 30-minute charts, it's going to still work in the same fashion as in terms of giving you an advanced buy or sell warning signal, and then giving you an entry price to go long or short if you take the signal. So I can tell you that we have members that really trade in all time frames, and I haven't had anyone tell me that one is better than another, but I personally trade off the daily. And yes, you can absolutely use it across multiple time frames to probably even increase the accuracy further. So if you're trading an hourly chart and you want to confirm trend direction with Trade Trend off of a 4-hour or even daily chart, that's a really great strategy to use and a great way to hone down the signals and find opportunities on shorter time frames.
Okay, perfect. Thanks. I'm trying to ask, there's a lot of questions. If you guys have questions, feel free to reach out to us. We're a little bit over on time, but our sales team can actually help you. You can give them a call at 800-882-3040 and metastock.com/sales chat, and I'll show you that in just a second. Jeff, great job. We're getting a lot of really good feedback both from YouTube and GoToWebinar. Thanks for coming. Thanks for spending.
Great. Thanks so much for having me. I hope everybody has a great rest of your weekend. Thanks again.
Okay, and I'm just going to eject you. So we'll see you later. Thanks, Jeff.
See you, Jeff. Thanks.
I had checked people just because once in a while we have the room accidentally shut down and it causes all kinds of issues. So it's not a big deal. They're prepared for it. So that's a great one of the things that is pretty handy because we are already about 7 minutes over time. Is he does do a really good job of showing how that works in MetaStock. I love the fact that there's commentary that's in there, the system tester, the scanner. There's a reason MetaStock's been rated #1 in its price category for over 27 years in a row. Actually, exactly 27 years in a row. And I think it's because of the tools that they provide and the tools that are available. So the package that Jeff talked about includes like the add-on for MetaStock, 12 months of the add-on. That's going to include your expert advisor, your system tester, your scanner, everything you need to go ahead and get started. It's going to include all of those trainings that he showed you, the live personal sessions, the personal coaching, the trading series. It's basically here at the show. It's normally $51.45 if they broke all that separately for you. Here at the summit, basically they're going to do that at $9.95. And you can get that actually from us too at metastock.com/summit deal. If you have questions, I know there's a lot of questions that we're just not going to be able to get to. I'm going to try and chat all the answers, but if you have questions, you can give us a call at 800-882-3040 or visit us online at metastock.com/sales chat. As part of this offer today, obviously we have a ton of really good speakers today, people that I really, really like that we've been working with for a number of years. But as part of what we're doing today, you can get that Trade Trend package, the Jake Bernstein. Jake's up next. He's going to talk about setup and timing triggers 2.0. You'll get Fulgent, our artificial intelligence platform for MetaStock. You'll get the Magic Trader by Peter Dalal, 3 months of that. You'll get a premium subscription to a training site that's going to help you learn in MetaStock inside and out. You'll get a year of Unleash the Power of MetaStock and 2 years of stocks and commodities. So it's a very, very big package. If you bought everything separately from us on our website, it would cost you about $4,000. Here at the event today, we're going to package everything up and give you a really good getting started with MetaStock package price. It'll be $16.91 for all of the add-ons. And this doesn't include MetaStock, but you can do what we call an extended trial on MetaStock as well. That starts at about $69 is all. So obviously, I'm kind of trying to make up a little bit for time. Get in touch with it, and we'll have more time. I'll have a whole hour to talk about MetaStock. But metastock.com/summit deal, 800-882-3040, or metastock.com/sales chat. So there you go. I do want to spend just a second to thank our sponsor, Stocks and Commodities Magazine today. They've been sponsoring the Online Trader Summit since I started doing it like 9-10 years ago. And they're a great sponsor. I've actually got a magazine way back here somewhere, but they do a really good job. We're putting together a magazine every month. You can get a free subscription. If you're watching on YouTube, go to metastock.com/tradersummit. There's going to be all kinds of free bonus offers that you can subscribe to as part of the registration process. So, including one of these stocks and commodities magazine. So we do appreciate their sponsorship. They've been helping us out, like I said, for almost a decade now. So we're going to get next to our next speaker. Jake, I can already hear you. How you doing?
I'm doing good, Jeff. How are you doing?
I am sorry that we're running a little bit late, but I'll tell you, if you need to go a little bit long, that's okay. I do want to give you a proper introduction, though, if you don't mind.
Absolutely. Thank you.
Jake Bernstein is somebody that used to live maybe 20 minutes from my house, but
Correct.
He's somebody that we've been working with a while now, like a decade or two. Jake has a very, very interesting story in terms of his backstory, and he has some really actually good stories as well. But he started as a psychologist or a psychiatrist, I can't remember. He started trading, interestingly enough, with eggs. And then he started his business. He's a very famous trader. I will add this from a personality perspective. Jake's one of the nicest guys I've ever met. I absolutely love you, Jake. So there's your intro.
Wow, that's a great bromance. Thank you. Appreciate that.
I'm going to go ahead and turn this over to you.
Okay, so let me see
Let's
if I
do
can.
this. Okay. Should pop up and say, do you want to share your screen?
Yep. Hang on a second here.
While that's happening, Walter, yeah, we're recording the session all day today. Jake, I can see your Gmail. Now I can see your fact-based rules of trading.
Okay, just hang in there. Just one moment, please. I want to go full screen on this. And Jeff, it's a pleasure to see you. I hope you and the family are doing well.
We are, yeah.
I think the last time I saw you before was it in Singapore?
I think the last time we saw each other was in California, actually, at the Tops group.
That's right. That's right.
But we have seen each other in Singapore too. Anyway, I'm going to get out of the way. Your turn.
Thank you. Pleasure and an honor to be invited to speak here. I will say that MetaStock has been around for a long time. And even though I'm not a MetaStock expert, my package is available as a plugin on MetaStock. And they are definitely responsive to traders, which is so important in this day and age. In addition to that, the MetaStock will do everything that I do. Anything I'm going to show you today, with the exception of seasonal trader, you can do on MetaStock very easily and very effectively. And I want to thank you very much. If you want to learn more about me, I'm going to say a little bit about myself, not too much. There was I think it's a 9-page interview with me in Stocks and Commodities magazine last September, which will tell you a lot about what I am and what I do. So let me just minimize a few things on my screen here, and we'll get started. One moment, please. Okay. Okay, do you see my entire screen here?
Yes, we can see your entire screen.
Okay, just one moment, please.
Well, I mean, we can see your slideshow anyway.
Yeah, the slideshow. Okay, good. Let me just change a few things. I'm not accustomed to using GoToWebinar. Everyone's using Zoom these days.
Yeah, yes, they are.
Yeah,
okay, now we're seeing a risk disclaimer.
Good. Just let me get rid of this little sideshow here. And I'm almost ready to go. Okay, so one moment, please. Just let me get rid of one thing here. Okay, so I call my presentation Fact-Backed Rules-Based Trading. The reason is really simple. I believe that in anything you do in trading, you have to have specific rules, and those rules have to be backed up by facts. The bottom line is facts are rare and very hard to come by in trading because people want you to believe ideas. They want to present ideas, and they don't want to back up those ideas with facts. In the very short period of time that's been allotted to me here today, it's very hard for me to discuss with you the most important things that I've learned in 52 years as a trader. But I'm certainly going to try and give you the essence of what I do. I'm going to begin with a saying by Will Rogers, the famous American cowboy philosopher, who said, when he was asked, Mr. Rogers, how can I make money in the stock market? He said, it's easy. Just find stocks that are going to go up and buy them. I'm going to show you how to do that today. Not with 100% accuracy, but certainly very accurately. I'd like you to take the following list very seriously, because if I had to distill the most important things I've learned about trading, it's right over here. Let me get my laser pointer ready here. Just one moment, please. Here we go. So, not necessarily in order of importance. Interpretation. If you want to make money trading, never interpret anything. Don't look at a chart and say, it looks like the market wants to go up. Looks like the market wants to go down. That does not work. It has to be definitive and clear. I'm a numbers guy. I always trade by the numbers. What do I mean by that? The numbers have to be exact. Where to get in, where to get out, where to risk, how much to make, how much you can make, what your risk is, what your trailing stop is. How accurate has the strategy been? Very important to me. Jeff Tompkins, in previous presentation, talked about parabolic SAR. Parabolic SAR was invented by Wells Wilder. I had the very good fortune of knowing Wells Wilder and traveling around the Far East with him, giving webinars and giving seminars. And Wells was very much of a numbers guy. The parabolic is a great tool if you use it correctly, but it's all about the numbers. Number 3, don't believe anything anyone tells you, including myself, unless you see it and you see the data. So don't believe anything I tell you. Don't take it on my word, just see it yourself. You have to not care in order to make money. As soon as you start caring about making money, you're going to start losing money. What do I mean by that? You have to be clinically dispassionate. You have to be disconnected from what you're doing and say, I'm in it to get the process right. I'm in it to get the procedure right. I don't care about the money, but even though you know you do, you have to avoid thinking about it. You have to avoid common thinking. Common thinking will get you common results. If you think like everyone else, you're going to lose money, because common results means you're going to lose money. Don't be affected or infected by the opinions of other traders. Even though I've been on CNBC and NBC and all those news stations and business stations, I don't listen to what any of the experts say. It's meaningless to me. I play my own game. This one over here, no good deed goes unpunished. Don't try and be a good guy or a good girl. If you're making money and someone says, what should I do with my 401k? Tell them to ask an expert. You're not a 401k expert. Whatever you tell people, you're going to be a villain if it doesn't work, and you're not going to be a hero if it does work. And if it does work and you are a hero, they're going to keep asking you for more information. Don't do it. Trade on the basis of what you know, not what you think you know. Very important. There are very few things in the market that can be known. Trade with facts, not fictions. What do I mean by that? Don't trade with the Elliott wave theory. Trade with specific strategies, some of which I will show you today. Be careful what you tell yourself, or you may start believing it. In other words, you might say to yourself, I think we're going to get inflation. I think we're going to get recession. I think the government's wrong. Don't make your trading decisions based on that information. Always have a profit maximizing strategy. If you don't know how to turn your $400 profit into a $4,000 profit, you're not going to make money in this game. Always assume that a trade has lost money the minute you enter it. In other words, as soon as I'm in a trade, I figure it's a loser. I deduct the potential loss from my account. So I know that the worst has happened and it can't happen again. In other words, I know what the worst case scenario has been. Last one, the time to worry about a trade is before you make it, not after you're in it. People call me up and they say, hey, Jake, I'm really worried about my gold trade. What should I do? And I say, well, what are you worried about? I'm worried about it's going to turn into a loss. Well, the time to have worried about that was before you made the trade. Worrying about it now is not going to do any good. In fact, if you worry about it, you're going to make a mistake. So you can check this out later on sometime if you get the PowerPoint from me. These are all the things that I've done in my career since 1967 when I made my first trade. I've written actually about 45 books. I'm a real trader. Everything I do is purely technical. Everything I do is done by computer. I've taught traders all over the world. I've appeared at 860 seminars and webinars. I'm a board member of the Foundation for the Study of Cycles, etc. I won't waste your time reading about me. I want to show you some more important things. So when I started trading actually in the summer of 1967 as a clinical psychologist in a hospital, I was making $400 a month. Nowadays, the government is paying people $400 a week to stay home from work. Changing world. I realized after working with crazy people, in fact, I worked with psychotic patients and children who were self-mutilated, that it wasn't getting me anywhere. Now, some people say that I still do the same kind of work, but I get paid a lot better. The bottom line is, no one taught me how to trade. It took me 15 years to learn how to trade. Why? Because there were a lot of books about trading, but they were all theoretical. They all said, draw the trend line here. Look at the head and shoulders formation. But they weren't defined very clearly, and if the trend line didn't fit, all you had to do was get a fatter pencil or put the ruler a little bit lower or a little bit higher to make that trend line fit. Those things didn't work for me. I searched everywhere and couldn't get the information I needed. Now, I get a lot of email and a lot of calls, and people say, Jake, I think I'm losing money because I don't have discipline. My wife tells me I need discipline. My trading partner says I need discipline. What should I do? I say, well, here's what you should do. You should find out where discipline comes from. They say, well, Jake, should I read the first book you wrote, The Investor's Quotient about trader psychology? I say, no, don't read that book because my ideas have changed. That book was written many years ago. You can't get discipline from a psychiatrist. You can't get discipline from a psychologist. You can't get discipline from a psychiatrist by laying on the psychiatrist's couch and talking about your improper potty training. It doesn't work. Discipline comes from confidence. Okay, where does confidence come from? Confidence comes from knowing what you're doing. Well, where does knowing what you're doing come from? Knowing what you're doing comes from having specific rules on strategies that work. How do you know strategies work? You go to the computer and you test them. You ask, what are the results? You have to know how to get the results. You have to understand the results. You have to trade based on the results. And that's what we do. So I'm a numbers guy. I won't do anything unless it's by the numbers, and that is totally clear. And that has been the reason for my success. Discipline comes from confidence. If you think you can get discipline by trading over and over again a losing strategy and saying, I'm going to have discipline no matter what it takes, you will then need to have your head examined because you're going to be trading a strategy that doesn't work, and you can't have discipline with something that doesn't work. So think about this. Before the pandemic, if you went to the internet and you said, show me short-term trading, in other words, you did a search on the term short-term trading, you got 433 million hits. 433 million hits. And everybody and their brother is going to be out there wanting to help you learn how to trade and charging you a bunch of money from it and saying, this will cost $4,000, but today you can get it for $9.93 or whatever it is. Everybody wants to do that. And sometimes it's good. Sometimes it works. But nothing's going to work for you unless you follow the rules. And you won't know the rules unless the rules are clear. So then the pandemic hit. People got their stimulus checks and they sat at home and they said, you know what? We want to day trade. I've heard that day trading is a really good thing to do. So they go to the internet and they search the term day trading. And guess what? 2.14 billion hits, making the situation even more difficult because you don't know what to do. You don't know what to believe and so forth. Okay. So the bottom line is, how are you going to do that? Well, let me give you some ideas today. But to make things worse, we've got more stuff to deal with. I call it the tyranny of terminology. Take your time and look at some of these terms. These terms all relate to economics, society, or trading in one way or another. And the more you think about them, the more confused you will get. Don't think about these things. They've got nothing to do with what you do as a trader. They will only confuse the hell out of you. So what are you going to do? I've told you a lot about what not to do. What are you going to do? You're going to look at patterns. Patterns are the language of the markets. Practically 90% of all trading today is done by institutions and large hedge funds, and I know that because many of them are my clients. They buy research from me. What do they do with that research? They take that research and put it into a computer where they generate algorithms and find patterns that work. So in order to do that, you need to do considerable research on indicators. The good news is there's thousands of indicators. Everyone's got their favorite pet little indicator. The bad news, 98% of them have no predictive validity. They don't predict anything. How do you find that out? You find that out by going to the computer. If you have a program like MetaStock where you can back test stuff and you can look at charts and patterns and keep a tally, that's the way to do it. There are basically three kinds of indicators. Leading indicators, these are indicators that tell you ahead of time that something's going to change. Concomitant indicators, indicators that change with the market. And lagging indicators, indicators that lag behind. In other words, the tail of the dog. The traditional approach to moving averages is a lagging indicator. It's always late. And so because it's always late, many times you're zigging when you should be zagging. Cycles are leading indicators. We'll talk about that momentarily. So we're going to focus on patterns, and what I'm going to show you some very simple patterns and very effective patterns, because in 40 minutes or an hour, I can't show you everything. Let's look at a pattern. And I apologize, this is not a MetaStock chart, but you can do anything you want on MetaStock. As I said before, I love MetaStock. I love the people at MetaStock, but I'm not a great MetaStock expert. My package on MetaStock is, however, because the smart guys at MetaStock, including Jeff, have told me what to do with it and have programmed it correctly for me. So let's look at this pattern. It's a big picture pattern. It's a cycle in short-term interest rate futures. And you'll notice how regular the cycle is. It's not perfect, but it did predict bottoms very accurately, and it predicts a top sometime in the next year or so. A top in interest rate futures means a bottom in interest rates themselves, because interest rate futures move in the opposite direction. So interest rate futures going up means interest rates going down. In and of itself, we can't use this information for trading. That's a whole different subject. We can use it for investing, however. In addition to that, we have cycles and patterns in soybeans, for example. Two cycles in soybeans, the big cycle in red and the smaller cycle in green. You can see where the smaller cycle bottomed before one of the biggest moves in history in soybeans to the upside. So we won't dwell on cycles today. That's, like I said, a whole different course, but we will look at something else. Before we go further, let me give you a list. I'm going to ask you a very important question, and I'd like you to look in the mirror and ask yourself the question, because only by being honest with yourself will you ever improve what you're doing. My goal, if you're making money, I'd like you to make more of it. If you're losing money, I'd like you to turn around from losing money to making money. And if you're making a lot of money, I'd like you to make a lot more. You can only do this by looking at this list. Excuse me. You can only do this by looking at this list and doing what's on my list. Imagine if you knew which stock, forex, or commodity to trade. You need to know whether to buy or sell. You need to know the exact time to buy or sell. Your odds of success. How often is it right? How often is it wrong? Your average profit, your average loss over many years. Excuse me. Your stop, your profit to loss ratio, your track record, average profit, average loss in points and percent, the largest profit, the largest loss, the maximum drawdown, the maximum upswing, and then the next slide. The number of consecutive losses. Why is that important? The number of consecutive losses is important because most people will quit after they lose money 3 times in a row. We know from back testing that even the best strategies in the world will lose money 6 times in a row. If you're not prepared to lose money 6 times in a row, don't even bother doing anything with your money. In fact, send it to me. I know what to do with it. Just one moment, please. I'm going to get a drink of water and clear my throat a little bit. So just bear with me for a moment. going to figure out how to turn off my microphone. If I can remember how to do that here. One moment, please. Let's go to the dashboard. Hang on, please. So just bear with me. I'll be Okay, so I'm back. Thank you for your patience with me. So one of the concepts that people use and have been using for a long time is the moving average concept. In other words, two moving averages crossing over one another. Usually these are closing moving averages. For example, the golden cross and the death cross. I've been on CNBC quite a few times, and I see what the interviewers do there. Interviewers that are now market experts used to be commentators. They talk about the market and they say, we've had a golden cross. The 50-day moving average has crossed above the 200. The market is bullish. We've had a death cross. The 50-day is below the 200-day. The bottom line is this. People can say whatever they want. You need to go to the computer and test it. If we do that, let me show you what happens. Here we go. The track record. First, the chart of the 50 and the 200. The 50 is the red line. The 200 is the blue line. So when the blue goes above the red, you're a buyer. When the blue goes below the red, you're a seller. And you look at it and you say, wow, look how much money it made. The bottom line is before it made that much money, it lost a whole bunch of money so that by the time this happened, you were out of the game. And then if you were still in the game, you gave a lot of it back. It's the nature of closing moving averages. We can go to the computer and do a back test and ask the question, what's the track record? In the last 47 repetitions of the crossover, the 50 and the 200, it's been right 27.7% of the time. If you're happy being right 27% of the time, this is a great strategy for you. If you're happy losing money 11 times in a row, it's a great strategy for you. For me, not so much. In fact, let me go to full screen on this. One moment, please. I think you'll see it a lot better. Hang on, please. Here we go. Get my laser pointer again. Okay, so if you're happy losing 11 times in a row, this is a wonderful strategy for you. But the bottom line is this. Most people, as I said before, if they lose 3 times in a row, they're out of the game. So this is a no-no for me. I've got the numbers, but I make an informed, intelligent decision based on the numbers. Compare. Let's go to a different one. Here is a strategy that I developed. Very simple. It's based on what's called the outside bar. The outside bar is an algorithmic rule. You trade above the high of the last bar. You trade below the low of the last bar. That's called the setup. And then you look for a trigger. Look at the difference. 84% accuracy over many years. Never more than 3 consecutive losses and 28 consecutive wins. You say, but it only makes $200 a trade, $230 a trade. The answer is yes, because it's only holding positions for about 2 to 3 days. We wouldn't know this if we didn't have the numbers. So when the expert gets on TV and says, we want to buy such and such, we want to do this, we want to buy this option, we want to buy that option, you need to know the numbers. The strategy that underlies that decision has to be specific, and you have to know the rules underlying that strategy. I'm going to show you some rules, and I'm going to show you some numbers. So this is the track record of that procedure. And by the way, like I said before, anything I'm showing you here, you can do in MetaStock very simply, but you're going to need to talk to a MetaStock expert because I'm not a MetaStock expert as much as I love the product and the people at MetaStock in particular, who are some of the best people, if not the best people in the business. So The first thing I want to do for you today is this. If there's nothing that I can do for you today, other than give you some ideas, there are two things that I want to do. The list that I ran through very quickly before of the 19 things you must know before you trade is the most important thing. If you can admit that you don't know most of those things, then you'll be much better off learning what those things are. If you can't get that kind of information from what you're doing, you will eventually lose money, even if you're making money right now. Number two, the trading model. Setup, trigger, and follow through. Step number one is a setup. A setup is a rule. A rule is based on a pattern. As I said before, there are many, many patterns. Jeff Tompkins showed you one based on the parabolic SAR, a very effective pattern if used the right way. Other patterns, reversal, key reversal, head and shoulders, cup and handle, flags, pennants, support, resistance. The good news, they sound pretty good. The bad news, most of them don't work. How do you know that? Again, back test, or read back test. You don't have to do it yourself if you don't want to. So we need to start with a setup. Every setup needs a trigger. So if we have a setup and it shows on the chart, we have to wait. Wait for what? Wait for a trigger. Once the trade triggers, you need follow through. Follow through consists of two parts. Part number one, where are you going to be wrong? What's your stop loss? Part number two, which most people have no idea of, how do you maximize the profit? After being in this business and making tens and thousands of trades, I will tell you this. 80% of your money is going to be made on 20% of your trades. If that's the case, those 20% of the trades have to be big. How do you make a trade big? How do you turn a $400 profit into a $4,000 profit? There are specific strategies that we can use that I teach in my sessions and which I use myself. So, setup, trigger, follow through. I'm going to show you a couple of things today that you might find interesting. We're going to use seasonality as an example of setup, trigger, and follow through. I'm going to show you some trades that are going to happen in the next couple of weeks. I'm going to show them to you long before they happen so that you'll be completely prepared and so that you will have no excuse for not doing them if I teach them to you the right way. One of the best books that was ever written about the stock market is called The Behavior of Prices on Wall Street by a guy named Art Merrill. Merrill was a specialist in looking at patterns, and one of the patterns he looked at was pre-holiday seasonality in the United States. What Merrill said is this. On the day before major legal U.S. holidays, the stock market tends to close higher on the day than it did the day before, about 77% of the time. That number used to be 75%, but it's now increased because it's getting better. I'll explain to you exactly what I mean. These patterns date back to the 1880s, and a chance occurrence of a pattern like this could only happen once in 10,000 times. In other words, this idea that Merrill had is statistically valid. It's not a supposition. It's not a theory. It's a fact. And because it's a fact, we can prove it or disprove it, and we're going to look at some proof in a minute. In other words, USA Thanksgiving, as an example, is always on a Thursday. Except for the electronic market, the market is closed on Thursday for individual stocks. The strategy is to buy on the close Wednesday and get out on the close. Buy on the close Tuesday, get out on the close Wednesday. It's a very simple strategy to take advantage of that very high probability. But I'm not going to take Art's word on this. I'm not going to take anyone's word on this. I want proof. And is it possible that the market actually turns higher before these holidays? The only way to know the answer to this question is with research. And these are, mind you, high probability trades, sometimes in excess of 80%. Why is it important to have high accuracy? Because if you're trading accurately and you're making money, you will have confidence. If you have confidence, you'll have discipline. If you'll have discipline, you'll do what you're supposed to do. And if you do what you're supposed to do, you make money. That will give you more confidence, which will give you more discipline. Pretty simple. Let me show you something. And by the way, As simple as this rule is, people still find a way to screw it up totally. Why? Because they don't listen. They want to make it better. There's ways to make it better, but not intuitively, only through back testing and actual application. So let me show you a chart. This is a chart of the Dow Jones this year. In other words, this day here was Thanksgiving Day. This was Wednesday. This was Tuesday. Buying the YM1 futures, the mini Dow futures, close of trading Wednesday, Tuesday, getting out of close of trading Wednesday was a profitable trade, adding to the accuracy of this trade. And we knew this trade in advance. We also knew the risk. We knew the target. We knew the exit. We knew the entry. We knew everything on that list of 19 things that I gave you, with one exception. Will it work this year? But there's always going to be somebody who's going to say, well, this year it's going to be different. Well, why is it going to be different this year? Because we've got COVID, because we've got a Democrat, because we've got this, because we got that. And then someone's going to say, but Jake, why didn't you buy it over here? Why did you wait that long? Well, guess what? I trade 5 specific strategies, one of which did buy it over here, in fact. So the bottom line is this. The result you get is going to be based on the strategy that you're using. But if you're not using the strategy, the result you get will always be in question. Was it luck? Was it skill? Was it intuition? Was it paranormal? What was it? The bottom line is really clear. The rule is clear. But let's go on to the next slide. If I go to the computer and I ask the question, show me for all of the Thanksgivings, for all of the Novembers, for all of the Decembers, whatever, show me what would have happened beforehand. Was there a pattern beforehand? So this is not Thanksgiving. This is actually the Memorial Day pattern we're looking at, which I published well in advance. And by the way, I always put these dates out in advance to dispel the idea that if everyone knows about it, it's not going to work. It won't work all the time, but we're talking close to 80% of the time. But if I went to the computer and I did a search, like so, and I asked the computer a question, search the entire month of May, search the entire month of June, and show me patterns around Memorial Day that have had high probability of success. Computer gives me this list right over here and says, the highest probability pattern with 74% accuracy was to buy buy June S&P futures, close of trading May 23rd, get out close of trading June the 5th, with a 2.5% stop and an average profit, average loss, and so forth. So the question is, does this listing give me all the information that I need? Absolutely. The only thing it doesn't tell me is, will it work this year? So let's take a look. This trade is in stock index futures S&P, and it says the average profit has been 26 S&P points. Here is what happened. Here's the entire list. Every trade for the last 39 years for this particular procedure. And you will notice, not only do I have a track record, not only do I have every single year, but I've got all the results displayed visually so you can see them. You will notice last year, it made its biggest profit ever by easily more than twice, even though, quote unquote, everybody knew about the trade. So it's a very, very handy excuse to say, well, it did so well last year, it can't possibly work this year. Well, let's take a look. Here is the chart for this year. Entry date, exit date, from here to here. And you'll notice that right over here, it hit a profit intraday of 30 points. Why is that important? Because right over here, it said the average profit was 26 points. So not only did we know what to do in terms of when to get in and when to get out, we also knew the profit target, because after the profit target is hit, you take some money off the table, you place a stop at break even on the rest of your position, and you're basically done with it, unless you want to wait for the exit date. So we have several strategies. We get in, we place a target, we know the stop. If the stop is not hit and it's profitable trade, we keep it to the end of the trade. And at the end of the trade, if it's still profitable, we implement a profit maximizing strategy. Very, very simple. So let's do some research. I'm going to go to the next one, which is July the 4th. And on July the 4th, for July the 4th, I'm going to go to my website, one of my websites, seasonaltrader.com. And let me see if I can log into this from here. Just bear with me for a moment, please. I think I can do it. Hang on one second. We're going to go to the internet and find Seasonal Trader. And you're going to go there right now and log in. And show you the screen. So Jeff, can you see my Seasonal Trader screen?
Yes, we can, Jake.
Very much. Appreciate that. I'm going to log in. There you go. And we're going to do a search. We're going to ask the question. For stock index futures, which would be S&P, right over here, I'm going to do a search and ask the question. Is there anything we can do historically in late June or early July? I'm going to do a search that has been correct. One moment, please. That has been correct at least 70% of the time. Let's make it 75% of the time. That has been a short-term trade, 10 days or less. I do a search, and computer comes up with this. There are 3 trades that it found. The first one and the second one are basically the same, but the second one has a lower stop. This one comes after the 4th of July, so this is the trade that takes advantage of that procedure. Let's look at the track record. Here I have the entire history of this trade all the way back to the start of trading, which you will not get from most trading strategies. So we have access to everything. Here's the entire history right over here. And we know everything. So what are we going to do? It's really simple. The rule is clear. Buy S&P futures, September, end of day, June 27th. Exit, end of day, July the 1st. Risk, your stop, your profit target in points, your profit target in percent, etc., and the complete track record. So what's the problem? Here's the problem. People are going to look at this and they're going to say, well, look how well it's done for such a long time. Look at this growth curve. Surely it's gone parabolic. It has to correct. It can't continue to do this. That should not be the question that you're asking. The question you should ask is, do you like the numbers? And can you afford the risk? The risk is what? 2.5% of the closing price on the date of entry. So, how do you figure that out? That's easy to do. And if the risk is too high, guess what? There's a micro S&P. There's a spider SPY. There are call options. There are call option strategies. All those things that you can do to take advantage of this procedure. Example, very simple, very easy to do. So let's go back to the slideshow for a moment. And I want to show you a couple of more things before I run out of time. Bear with me for a moment. Here we go. And let me go full screen. Can you see the slideshow again?
Yeah, we're still on the seasonaltrader.com.
Okay, hang on one second. What about?
Now we're back to the PowerPoint where it says follow through.
Okay, good. Thank you very much, Jeff.
My pleasure.
Okay, so this is a search we did, and that's the result we got. So within the context of what I do, this is only one of the 5 things that I do, but I have found this to be extremely reliable and very profitable on the short side and the long side, because you can go in and you can determine how long you want to be in a trade, what you want to risk. Yes.
I'm not sure exactly what happened, but now we're back on this awesome website, seasonaltrader.com.
What about now?
And now it says, now we're back on the PowerPoint.
Okay, thank you, Jeff.
My pleasure.
So I want to reiterate. What did we just do? The seasonal trade we just looked at was a setup. That setup requires a trigger. The trigger is a timing indicator, and the beautiful thing about MetaStock is there's hundreds of timing triggers. Many of the timing triggers will work if they're pointing in the right direction. So what we're doing is, once we get into that period of time for the seasonal trade to the exact date, we look at our triggers and ask the question, are our favorite timing triggers giving us a buy? If it's giving us a buy, which is consistent with the seasonal, we take the trade. One of my favorite timing triggers is what I call the 8 open close. We look at 2 moving averages, 8 close, 8 open, simple moving averages. And mind you, these are not closing moving averages. It's open versus close, which is a completely different concept than simple moving average crossovers, the entirely different concept. So please bear that in mind. So that's setup, trigger, follow through. Let's go on to the next slide here. So let's talk about this. Seasonality is statistically valid. You can't rewrite history. The history is what it is. And people keep saying it's going to change. Well, it hasn't changed in the 37 years that I've been trading seasonals. It continues to perform because it gives us all the answers we need. And you're in the driver's seat. You can make the decision. What are you searching for? Are you searching for longs? Are you searching for shorts? Are you searching for high-risk trades, low-risk trades, high probability? You decide. If you compare seasonality with what we know about many other methods, you're going to find seasonality does not require any interpretation. As I said before, one of the dirtiest words in trading is interpret. Don't interpret anything. Don't use the term looks like, because what looks like something to you may look like something entirely different than me. The numbers tell you everything you need to know. So we trade with 100% objective rules, and we implement them consistently, which is the key to discipline, which is the key to success. Most important thing you can do is manage risk. But some people say, hey, Jake, I'm a good trader. Well, Joe, what makes you a good trader? Well, I know how to manage risk. So what does that mean? Well, that means that I'm going to risk $500 on this gold trade I told you about. So you're going to risk $500 on a gold trade. Why is that? Because that's all I can afford to lose. So, Joe, do you think the market cares what you can afford to lose? You want to risk $500 on a gold market that's moving in a range of $2,000 in one day from high to low? That's insane. Your stop has to be based on what the strategy says, not what you can afford to risk. If the strategy says you need to risk $800 and you can only afford to risk $400, then that trade in that denomination is not for you. You need to take a smaller risk. So, money management, profit maximization. We have a specific strategy for maximizing profits in a long position and in a short position. So remember, the first trade, your first profit target is just to get you to the point where you're breaking even. After that, you make the real money in the big move. And that is especially true for day traders. And even though I wrote the 4 best-selling books on day trading from McGraw-Hill, the bottom line is day trading for most people is not viable because machines and computers have got it all over you, and you're competing with the biggest and best and best traders in the world. And unless you're trading big positions for small moves, you won't make money day trading. And besides that, you won't have a life. So here is the Christmas trade, 69%. And again, we can go back to the computer if we want to and do a search. So what I do is based on the following points. Very simple, very straightforward. Come back and read them sometime. If you want the PowerPoint, you can send me an email, jake@trade-futures.com, or I can send it to Jeff Gibby, and Jeff can send you my PowerPoint. So let's go forward. I have a couple more things to show you. You already did this search. I showed it to you before. And let's go forward. Definition of seasonality. So let me talk to you about this. I have spent hundreds and thousands of dollars researching systems and strategies. I know what works. I know what doesn't work. So let's talk a little bit about that. Closing-based moving averages don't work. Fibonacci, Gann, Elliott wave, they require interpretation. They don't work for me. Traditional chart patterns don't work for me. That includes market geometry like percentage corrections. Astrology, sorry, give me a break, it doesn't work. If you have a chance to read The Market Profile by J. Peter Stottlemyre, that is a book worth reading. It will explain to you exactly how markets work. Using the commitment of traders, cycles and seasonality works extremely well. The setup, trigger, and follow-through is the best model that you can use. Market sentiment, small traders, very, very accurate and very helpful. Volume-based patterns, hit or miss. Divergence, one of the best things that you can do. But let me tell you something. In the next 3 to 5 years, most trading will be based on artificial intelligence. So, ladies and gentlemen, if you're not familiar with AI, if your strategy does not include some aspect of AI, you're going to be behind the 8 ball and you're going to be losing money while so many people are making money using AI. So we looked at seasonality a number of times, and let me show you something else which we can deal with later. If I were to take a stock, for example, the Dow Jones, from 1950 forward and make one chart that looks like, I'm sorry, I shouldn't use the word looks like, one chart that represents the market, it would look like this. Notice over here, toward the end of the year, beginning in October into November and December, the most bullish part of the year, which goes all the way back to 1901 as the most bullish part of the year, that's where you're going to find most of your trades that are profitable, and that's where you're going to make most of your money. This is what that pattern looked like this year. So we also have short positions. Here's a short position in coffee with 80% accuracy going back many years. This is what the chart looks like in terms of the seasonality. But the bottom line is this. We won't take a short position unless there's a trigger. So we use setup, trigger, follow through. This is what that trade did in 2019. This is what the trade did in 2020. And so far in 2021, we have no trigger. I want to show you a couple of more things before we run out of time. So just hang in there. Just trade in Microsoft. Just hang in there for a moment, please. We're almost there. I want to give Jeff an opportunity to catch up on time lost. If you combine a portfolio of seasonal stocks and seasonal futures, we're looking at a track record here of 577 trades with an accuracy of 81%. So this goes to the theory, in fact, the very, very significant economic theory, that a combined portfolio of stocks and futures will do the best performance and have the most stability. I think there's one more thing I want to show you. Yes. I want you to look at this trade right over here. This is the heating oil chart. And there's an ETF for almost everything that I'm showing you, so you don't need to trade heating oil futures. It's not rocket science. Basically, the chart says that this period of time from March, early March, until late April has been a very bullish period of time. Going to Seasonal Trader and doing a search, we come up with the exact dates. This was the trade in 2021. So you can see the idea of seasonality is very reliable and very statistically valid. I was going to give you an offer to save you some money on some of my products and services, but I'm going to avoid that. I'm going to let Jeff take care of that through the great offer that he made, which includes my setup, trigger, follow-through timing strategies on MetaStock. So, Jeff, one moment, please. If you need to reach me, here's where I can be reached. I'm going to turn it over to Jeff now who will relay questions to me because it's a lot easier for him to do it than for me.
Yeah, we do have, we have a couple comments out of YouTube. DF says that he likes the 8 open close. It's awesome. So thank you for that.
Yeah.
Sheena says Jake Bernstein is handling out pearls of wisdom today. A very wise man.
I'm flattered. Thank you.
And then let's see. In addition to that, Monica wanted to know if you like the fallen angel pattern.
Yeah, the fallen angel pattern has worked pretty well. Unfortunately, there's not enough history. If I can see history back to 1950, we'll be more confident in it. But it usually does work pretty well.
She also had a follow-up question on whether or not you've implemented AI into the seasonaltrader.com website.
Yes, we have. I publish a newsletter every week, which includes two newsletters, 3 recommendations on stocks, 3 recommendations on futures, all of them found on seasonaltrader.com and then vetted with AI. So the AI takes a look at the trade and says, okay, this trade has a higher probability of working this year than it usually does in the past. So it's a good question. We have done that for sure.
Okay, let's see. Raj wants to know if he can see the previous slide. And also, in addition to that, he's like, so you're a futures trader. Do you trade options?
I do not trade options. I don't like the time value working against me. So I don't trade options. I mean, it's not to say I haven't traded them. I certainly have, but I don't enjoy them. They're just too stressful for me. And so I don't do that. And here's the previous slide right over here. And any other questions, I'm happy to take them.
Okay. Let's see. Jonna says, thanks so much. Good stuff. And
Wait.
William wants to know if...
You guys got tired of looking at my high school picture?
No, I've got it actually. It's my desktop background.
Thank you, Jeff. I'm ready for my
William wants to know if you think coffee is bearish right now.
This has been the most bearish time of the year historically for coffee. Unfortunately, that beautiful short sell position did not trigger. So that's the importance. Even though a seasonal says it goes down dramatically this time of year, it's not happening because there was no trigger. No trigger equals no trade.
Okay. Very cool. That catches us up. Galia wants to know, and I think this will probably be the last question we can answer, but what was the name of the author about the market profile book?
It is Art Merrill, M-E-R, that's J. Peter Stottlemyre, S-T-E-I-D-L-M-A-Y-E-R, J. Peter Stottlemyre. It's called The Market Profile Theory. Fabulous book. Truly explains how markets work. That's the good news. The bad news is you have to be able to put that concept into practice, which is extremely difficult to do. But knowing the theory will be very helpful to you as a trader.
Okay. All right, Jake, I want to thank you for coming in today. Really appreciate it.
Jeff, thanks for having me come in again. I really appreciate it. You guys are fabulous. Thanks again.
All right. Thank you.
Thanks for trading.
What a great guy. Hopefully I didn't endorse him. I felt like I'm the world's worst critics. Greg, do you think you can turn the lights on in here real quick? I could, but I just turned on the, thank you. All right, very cool. Jake does such a great job. I've done a lot of events in person in the before times with Jake, and I just love the way that he approaches the markets, the fact that he uses setup and trigger and follow through. And I would say that working with Jake to kind of put his methodologies into MetaStock has been great. I would consider Jake one of the best traders, one of the best mentors out there, and particularly to me. And so as you were well aware, we've worked with Jake to put together not only like his technical systems into MetaStock, but all of his commitment of trader templates as well as part of his package. And it's only like a one-time cost. You get all of his technical systems. And here they're listed. You've got the 5-bar moving average channel, the MAC with ADMA, the momentum moving average, power momentum, stochastic pop. Those are all fully integrated in MetaStock. You also get 33 commitment of traders templates that we've built for this package as well. And as long as you get data from MetaStock, whether it's end of day or real time, you get the commitment of trader data that's required to run those. Now, the fact that I love Jake so much, I love the fact that he uses the setup, the trigger, and follow through. So everything's very, very well defined. And we did take a lot of time to actually completely build this into MetaStock. So when you get a setup, it's going to tell you why there's a setup. When you get a trigger, it's going to tell you what you should do with it. And it'll tell you when you should get out of it. It incorporates into MetaStock the signals, as well as our commentary, which explains everything in clear English to you. It also includes scanning, of course. So you can scan through all of the markets that you're interested in, whether those markets are here in the US or overseas. We've had quite a few of you from India today asking questions. A lot of our customers actually are in India or Australia or London, and we can provide data for those as well. So the setup and timing triggers 2.0, it's obviously the second version of this. We normally do as a retail, as just a one-time cost, it's normally $500. Here, as part of the Summit special, we're going to give that to you for $399. If you don't have MetaStock already, I'm going to give you a free trial as part of that. And we also back this one with a full money back guarantee. So if you're not happy with it, you can get a refund. And but you will be happy with it. If you're not, we'll give you a refund. But I just love his methodology. It's the way he looks at the market. He does such a great job with it. So $399. One-time cost. You really don't have to make a lot of better trades to kind of justify that. It is part of our full package today. I thought it was interesting that Jake talked a little bit about AI. Ed's going to spend an hour talking about AI right now. But as part of our bundle package that we're going to do today, we're going to throw in all of that training that Jeff Tompkins was offering for with the Trade Trend program. We're going to include that setup and timing trigger 2.0. We're going to include a year of Trade Trend. We're going to include the Fulgent AI, which Ed is going to show us here in just a second. We're going to include the Magic Trader Elite, 3 months of that, 3 months of learnmetastock.com, unleash the power of MetaStock, and 2 years of stocks and commodities from Stocks and Commodities. So you could buy all of this stuff separately. I love being able to kind of bundle it into a package. Normally be $3,835. It's $1,691. With this, you can get a free trial to MetaStock, but I would recommend you pay a little bit extra and get a 3-month extended trial to MetaStock if you don't have it already. You can sign up for this at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/sales tool. Timothy asks, is this package useful for stocks? For Jake Bernstein, yes, absolutely. The commitment to trader stuff is obviously for futures, but I've been using his technical systems. You can apply them to stocks, and they work very, very well. So all of the technical systems work really, really well with stocks. So lots of questions on you're welcome, Monica, for getting your questions answered. I'm glad we could squeeze those in. Lots of questions on the recording. We are going to do a full recording, and if you're in YouTube, you've actually already got the link already. So those of you, if you want to go watch it again, you can do that right away. Within an hour, for those of you that are on GoToWebinar and in the GoToWebinar platform, we will send you the links to the YouTube within an hour of the end of the event, and that'll automatically go out. I've already set it up. So again, this is $1,691. 800-882-3040, metastock.com/sales chat, or metastock.com/summit deal. Very quickly, we are going to say thank you to Stocks and Commodities Magazine for sponsoring the event. They do a great job. If you're watching on YouTube, do yourself a favor. Go to metastock.com/tradersummit right now. Register for today's event. Sign up for like all the free bonuses that we've offered from the different presenters. But in addition to that, sign up for your free month of Stocks and Commodities. If you purchase any of the products today, you're going to get a subscription to MetaStock or Stocks and Commodities as well. I think it's a great magazine. I've been getting it since I started here in like 97. So in any case, you should get one too. All right. Next presenter is Ed Downs. I do know we are running a little bit late. Ed, I don't want you to feel like you need to go faster or anything. I'm actually up next, and I can kind of truncate my presentation to match. I am going to give you a proper introduction, though. Ed is a guy I've known in the industry since I started. I remember when I started, he was developing systems and methodologies for MetaStock. And he's also works on a product called OmniTrader. We used to sell OmniTrader in a MetaStock bundle. We kind of got out of contact for many years, but a few years ago, he kind of got in touch with us. And today he's going to show us an AI project that he's been working on for a number of years. He also has a really cool chart pattern engine that he's done for MetaStock. The technology he does is absolutely great, and it's really good to get it in MetaStock. So I think that's what I'll say about you, Ed. And I'll let you fill in any of the blanks that you think I missed. So let's go ahead and get you changed to the presenter now. All right.
Okay. Hey, thanks, Jeffrey. Always appreciate your warm introductions. They're fantastic, and enjoying watching the summit. And to follow Jake Bernstein, oh my goodness, I have to live up to that. The guy's awesome. It's so cool. But we got some good stuff to show today. And before I do that, I just want to, again, acknowledge the long relationship that I've had with Jeffrey going back to the early 90s. We worked together then. My company is Nirvana Systems. And the reason I started it was to focus on automated applications of trading and, any form of that. And of course, artificial intelligence is probably the most automated thing you can do. So we kind of hunkered down on that and created this company called Fulgent AI to kind of get the AI out there in the marketplace. And I contacted Jeffrey and said, hey, do you want me to make a package for MetaStock? And hey, here we are. So it's been awesome. Really enjoyed working with you and your staff. Such great people over there. It's just been a joy. And I so look forward to doing these things with you. Thank you for asking me to come again. Really, truly awesome. Okay, so today I am going to show you our platform. Of course, I saw the special out there, which is great that they're doing that at MetaStock. Fantastic. And I want to show you the product that we have because I think it's really cool and can help you. But the other thing I want to do today is provide some value to you about a fantastic feature in MetaStock that I think has been underserved just from looking at stuff and other presentations. And that is the option capability that it has with the data that it has. It is really a great option trading platform. And so I'm going to get into kind of how you use it for that, regardless of whether you use this platform for getting signals or any of the work from the other presenters that you're seeing today. It's just very nice. So I want to show you that. Let me go ahead and dive in here. This presentation is called, wait for it, Finding Winning Option Trades with AI. So like I say, it will be a mixture of the AI part of it that we do, because you have to have really accurate signals to do what I'm about to show you. But then there's also the option trading in MetaStock. So we're going to do both things. All right. And
hey, Ed?
Yeah.
Just real quick, I think you might be sharing the incorrect or sharing the wrong screen with us.
Ooh,
do you have the PowerPoint in full screen mode?
Yeah. Hold on.
Okay.
I'm glad you stopped me. That's good. All right, let's try again. How's that?
I think that's more what you intended. I see it.
That is it. Okay.
That's right. Yeah.
Finding winning option trades with AI. Yes.
Correct. And it takes up the whole screen. Or almost.
Thank you so much for that. Good. Okay. So yeah, we'll dive right in here. And what I want to first talk about is just the simple power of call options. And I know a lot of people are kind of afraid to trade options. And I agree with, I heard what Jake said about them. They are kind of tricky. And there is risk in trading options for sure. But there's some overlooked aspects of call options that I think are really powerful that I want to talk about. And the best way to show this is just to bring up this chart of REGN. And it shows underneath here is the chart of the actual stock. And this is an example I've had for a while, so it's not like real current, but it's something that happened in this. And so here's one of our signals that was generated, which doesn't matter much. You can use any signal, but you'll notice the stock in this period of time, and it's a pretty expensive stock, $345. So it went from 343 to 372 in this move right here. Okay, now if you were going to trade 100 shares of that, you multiply 343 times 100, and that's like 34 grand to trade that stock. So, that's a pretty big commitment to trade to get into that position. So one of the great things about trading an option, if you're buying an option that is fairly low price, like in the $2 range, $2.90 range is in this case, then you can actually trade. You can control that same position for $290. So we're going to talk a little bit later about position sizing, trading these options. You can risk a very small part of your account and do really well if you're directionally accurate. You've got to have direction down. That's the big thing about this. But if you have that, you put a little bet out there and bingo, instead of making the 8% that you'd have made on the stock and putting $34,000 out there, you make 200% on the option play. So, a very small part of your account, and those trades can really build up over time. Okay. So, but this is just the awesome power of them. And so let's talk about sort of an approach to this. Very simple strategy. I'm going to just kind of bring up here. And that is we want to buy slightly out of the money calls. Of course, we're pretty sure it's going to go up, right? I mean, you got to have that. But our expectation is about half of them are going to expire worthless, and we'll buy them going out about, let's say, I don't know, 1 week, 2 weeks, right? So just out of the money. But about half of them if we're directionally accurate, it doesn't take much to double in price. We just saw that example on that stock, REGN, going up 8%. The option doubled. That's what we're looking for. So if you could get this kind of performance trading options, what would happen to an account? And you can actually do simulations. I did this in Excel, where you say you've got 50% odds of either doubling or going to zero. And this is kind of one of those simulations. Of course, it's random, so all the curves look different. But this is one I captured. They're pretty much all profitable, as you would imagine. If you double on half and lose on half, then you're getting, an advantage in the market. And so, and actually in the simulation, you can't actually lose on the other half, because that would be break even. Obviously, you have to lose half of your bet. So the bet goes down by half on the losses, but the winners double. Okay, so you need to clarify that. So if that occurs in this simulation, then this is kind of what happens. So the answer to the question, if you do place a bet and double on half and go to 50% loss on half, the answer to that simulation is 20 to 60% gain on average. So, that'd be a great outcome. And so the point of all this is that we can make consistent profits if, first off, we have to take trades that have a high probability of closing higher in 14 days. We have to win on 50% of the time, and the average profit has to be twice the average loss, right? So, half your trades have to double, half be reduced by half. And if you can achieve those metrics, then you can get really high performance like what we just looked at. So the question is, how can you do that? How can you get the most profitable trades? And so we're going to be talking about here, before I get into the option trading itself in MetaStock, is just how we approach this. And there are a lot of ways to create trading systems. I've seen some great examples from folks presenting them here, people with enormous experience like Jake, that really know the market and know what they're doing, and they could put things together and come up with these awesome signals. And that's how typically we do that. This is just kind of an example of a rule that I put on this chart. You got, the Bollinger Band narrowing down there, and the 20-period moving average is above the 30-period. Momentum is positive. MACD is above its moving average. And, when those things are all lining up, that's a rule to trade by. It's a system, a signal. And so we can backtest that and see that, most of the time that's profitable. So it's just an example of one trading rule. Well, so I've been doing this kind of stuff for about 35 years, and I have written plenty of trading systems. Believe me, my staff has tons and tons of them. And it's always the same thing. You start with something you see in a chart, and you see something else that looks like it works with it. And, and you kind of hunker down on it, and you test it, and then you adjust it and all this stuff. Well, if you're using AI, there's actually an easier way to do it that we're going to talk about in just a second. If I look at MetaStock, all of the indicators that are in there, which is massive, it's a great fully featured platform. It's got pretty much everything I've ever seen in MetaStock. And you're going to make a trading system, that's a lot of stuff, okay? Just starting to do that, if you're trying to do it yourself, it is really, really difficult. And if you just take one of the indicators in here, let's just say relative strength index, which is very popular, RSI, and we look at that, and we're going to start with RSI and try to make a rule like the one I just showed you. Well, the problem is, which period of RSI do you use? There's infinite number of them. RSI, 8 period, 10 period, 14 period. 14 is the classic default that people use, but there's the other ones work well too. We use 7 period RSI all the time. It's very effective for short-term trading. Then there's the interpretations. So, it's going through zero. It's above or below zero. It's accelerating. It's diverging. Moving average crossover of RSI. You get the idea. There's a lot more than these. I mean, there's tons of them. So you look at that, there is an infinite number of possibilities on just that one indicator. Okay, just that one. Now, you ready to get your mind blown on this? Let's say you have 100 indicators and, just either a true or false condition, like it's crossing through zero or it's not, or you don't care. Like it's doing one of those two things, or, well, we're not going to worry about that one today. We're not going to even use it. So that's 3 states. If you look at the number of permutations of that problem. Oh, here we go. Here's the same thing. Another slide that just shows that a little different way. Sorry, add that in here from another presentation. But yeah, so all those interpretations. All right, now this is what I wanted to get to. If you have just 100 indicators with 3 states, true, false, and don't care, there are 2 septillion possible combinations of 100 indicators. And like we said, there is an unlimited number of indicator periods and interpretations. So there's a gazillion of them. So I don't even know what that number is. That's a bigger number than the number of stars in the entire galaxy. It's a huge number. So the problem is, that we're trying to solve is, how do you search that space? How do you find a profitable rule in all those combinations that are out there? And it's not easy. Okay, it's just not. So the way that we're approaching that, and like I said, I've written lots of trading systems, but what we said, in terms of automation, why not let the computer just do that itself? Like, let it go out there and look through all those combinations and do an efficient search algorithm, which is what AI does. It's pattern matching, looking for things that have worked over time. Doesn't matter what AI it is, they all do the same thing, basically that. So how do what is the way that you can do that? And of course, my next slide is going to give you the answer, which you would expect. It is through artificial intelligence. That's how we're going to search that space. And the approach that we did, there's lots of different AI technologies. There are neural networks, there's dark forest, there's tons of things. And we wrote our first approaches to AI back in 1996. And after working with several different technologies, we finally came down to the fact that the best thing for pattern matching and finding relationships between things is a genetic algorithm. And so I want to show you kind of what that does very quickly. This little thing right here is what we call it a chromosome, because this is a genetic algorithm. But anyway, it's a bunch of indicators lined up, and we usually have about 100, 200, maybe even up to 500 of them. And the ones that are purple are the ones that are being used or looked at for this particular one. So what that chromosome represents is a potential rule. We don't know if it's going to be profitable or not. We just kind of randomly populate it with RSI above 30 and momentum increasing and volume greater than it was yesterday, and all these relationships, and they're all in there. And we just say, well, let's just look at 2 or 3 of them at a time, and are they profitable? So what it does is it looks at all the data, hundreds of thousands of bars of data, and says, is that profitable over all that data going out, say, 5 bars in the future? And it'll come back and say, well, yeah, it's pretty good. It's like 60% accurate. It makes about 0.2% per trade. Well, that's pretty good. So we hold on to it and we save it off, and then we keep doing this. We actually have thousands and thousands of these in the computer running at the same time. And as it finds good combinations in this process, it starts mutating across the good ones. So it'll take part of this one and part of that one and make a new one. And so over time, the algorithm evolves the population of these chromosomes, or rules is what they are, actually, potential rules. And it keeps getting better and better and better, finding more and more and more profitable things as time goes on. It's an amazing process. So all I have to worry about is which inputs, which genes I'm going to put in the thing. And like I say, we usually use 2 to 500. So we take the ones that we know are pretty good. We have experience about what MACD can do for you and what, all these things. So we're careful about that. And then we just let it go. And it takes it, an initial run takes maybe 30 minutes, but we typically let them run overnight so they can find as many good rules as possible on the data that we're training to. So as a result, what happens is we get this thing called a knowledge base. The knowledge base has a bunch of rules in it, and each one is finding a situation in the chart that has been profitable over lots and lots of historical data. So what we always show is the out of sample, not the historical data, but the data after that. And then we're just finding these rules in here. And so with that approach, building this repository of rules, we then use that in our AI engine and basically have that running in the background attached to MetaStock, or the other way around. MetaStock attaches to it. And so what it does is it says, okay, Mr. Fulgent AI engine, I've got, this thing passes over all the measurements that it has found. And it says, all right, give me the data. So MetaStock says, here's the data for this chart. And so the Fulgent AI engine looks through all of the rules it has, all of them, matches them across this data to see if it finds any hits or any matches. and then you see them in the chart. So that's essentially what it's doing. And we're going to go to it now live. But before I do that, I just want to show you a really quick summary that there are 4 experts in this particular knowledge base: reversals, swing trades, volatility breakouts, and what I call quick move, which are very, very short moves of like 3 to 5 bars. And so let me go and show the software, and we'll just kind of look at it real quick. Like I said, this is kind of the precursor to what I want to show you in MetaStock, but I want you to understand what it is. So here it is, running on Apple, and you can see some of these signals. We also, thanks to the genius of the folks at MetaStock, show me how to do this. We can actually plot the stops that we're generating in the Fulgent strategies right on the chart. And a couple of these swing trade and reversal are designed to generate very long-term trades if they can. And so some of these go a really long ways. This one just went to here. But I'll just go through a few charts and we'll just kind of let it populate. Now on the left, what we're seeing is the expert, which is, again, is looking at any point in here. So I can click, let's say, I don't know, somewhere like here, and it'll say, okay, that is a major reversal signal from down here. And in the history, it was 70% accurate. There were 286 times that particular rule fired. Now remember, there are thousands and thousands of these little trading systems running in there, rules. And it found one and it said, okay, that particular one, 286 times, and the average profit in the history was 3.13. So this really helps you to see, well, how good is that one? Some of them are better than others. Some of them you'll see 80, 85, 90. And then, you can say, and the profit trade gets really high. So you can just wait till you see one that has historically proven to be very, very effective and trade that. We'll go through a few more here. Again, this is sort of the sideshow today, mostly, but I want you to see what the product does. Now, you notice it takes a few seconds to come up because you think about it, it is literally going through, all of that data out there and saying, do you have anything at that bar? Is there a rule that's firing on that bar, and how good is it? It has to be a certain level of goodness. So I click on that one, and that's a 76% probable trade at that point, 585 times, woohoo, now we're cooking, and average profit 2.36. It also tells you where we have the stop, that the strategy uses. They all have stops that either are very short or they follow the trades up. And so that's really, we'll do one more chart and I'm going to go to continue the presentation because I want to show you the option stuff. And try not to talk too fast, Jeffrey, but I am aware of your summit time, and we'll be able to get through all this, not a problem. So there you go. You can kind of see swing trades are awesome. Not every trade's profitable. Now here's a great one. This one goes up to here. This one is still in trade over here. But those are just the first 3 stocks in the Dow 30 from the MetaStock, from the list, the Dow 30 list in MetaStock. We have links to notes about the experts over here on our website. You can click to. It's just designed to be very simple and to help you understand how good is that signal right there, probably based on the history. Okay, so that's a pretty not good overview of it. Now, one thing I did do is I went into MetaStock, and I just love the software. This guy's done such a good job with it. And I went in there and I did a system test to just test these things against other basic systems that are in there, like the MACD, the ones that you get with MetaStock, and it did pretty good. So of all just the example systems in this test, it was quite a bit more profitable. So we know, and of course we have our own stats that we generate here. So the actual accuracy of these signals is very, very high, and that's what you got to have to do what we're talking about. It's really important. So whatever system you're using, make sure it's accurate if you're going to buy calls with the expectation of these big moves happening. And I've got lots of examples of these coming up here that I took from the current market that I'll show you. We're also going to do a little prospecting. Okay, so now let's get into the meat of this. Using option scope. This is the feature in MetaStock that I just think is killer. I've used lots of software, and it really, a lot has to do not only with MetaStock, but with the data that they're using. The Reuters data makes it possible to do what I'm going to show you. So here are the steps that I'm going to go through these on screen, and then I'm going to show you doing it actually. Okay, so what you do is you chart, get your chart up and you decide, okay, I want to trade an option on this. You really like the way the signal looks. It's got great stats. It's fantastic. So what you do is you add an inner new indicator window. Like I'm going to go through this, folks. I'm going to show exactly doing this. And so you do that, and then you right click in there somewhere and say, bring up option scope, or you can double click the line from an exploration, which you'll see me doing in a second. It brings up option scope. And these are really good parameters, either near or just out of the money, 14 days out. But honestly, see this little button up here that says clear all filters? I have started using that, and that just really simplifies things, because you can just bring up the form that they show you, this thing, and go right to the out of the money options, the next contract. It's just super easy. So you don't really need to do this, but that's kind of what we're looking for. You don't want to go out 3 months. You don't want to go out 2 days. It needs to be about 1 to 2 weeks. Somewhere in there. 10 days is a pretty good sweet spot for these moves that happen in the market. Okay, so once you do that, there are some parameters excuse me, before you trade. You kind of want at least 100 contracts being traded, and there's all these stats are right here for you in that window that show in the option scope window. 50 cents to $3. Don't trade a 10-cent option. And I would say, if you're trading a high price stock, the options are going to be $8 to $10. So it kind of just depends. That's not terrible. It's fine. But typically the ones that move are kind of in that price range. And you want the bid and ask to be pretty close together. So like this is, bid 22, bid 27, ask 32. That's what, 5 cents between them. That's a pretty small amount. It's less than 5% of the actual number. So because, whenever you take a trade, you're instantly penalized by that spread, because you're going to pay the ask, you're going to sell at the bid. So if there's a huge spread, like $1, you just lost $1 per option. So you got to really look at that. Okay, and that's good. That, of course, it all has to do with liquidity. Okay, so next one here. All right. So then you want to plot the option in a chart in MetaStock, and then you're going to drag that chart to the new window that you just created. Okay. Now, all that sounds really complicated. It's not. I've had trouble on these webinars getting data on Saturday. I finally learned my lesson, Jeffrey. So I recorded this, and I want you to tell me if the sound is coming through. We tested it, and go to webinar. If it isn't, I can narrate it, but please tell me.
Okay, I'm ready to tell you.
Process with MetaStock and trading options. Is it coming across?
Hit play. I think I could hear it. It was a little bit soft, but hit play and I'll tell you.
Oh, I hear it coming from my speaker, but I don't know. Do you hear it?
Yeah, we can. Okay. It's a little bit soft. Maybe put the speaker to the microphone.
Well, it's actually
something like that.
But I can try that.
And so just going through and looking at these, I just found one that I really liked that I want to show you and show you the process of selecting an option for it.
Yeah, that's pretty good.
Look at, and of course, this is Friday, June 11th. I'll let that come up. And I'll show you what I like here. So, of course, we have all these really nice signals here in Fulgent. But we had this swing trade signal happen about, 15 days ago. And so I do look at these older signals because they can run a very, very long ways. And so that's, one of the things you can do with this, because you can see like signals that are 5 bars back, 10 bars back, whatever. Because I didn't get any new signals today, but I've been looking through the ones that have been occurring recently. And this one is really good. Now, because it's rallied forward to consolidation, so very likely to continue going in this trade. So I want to place an option trade on it. And so what I'm going to do is first kind of prepare for that by opening or adding an inner window. So inner window, new. And that's where I want my option chart to go, because this is the process. Now I right click in here and I say, okay, option scope. And it is on Intel right there. So it's going to bring up everything. And you can limit, I typically go like about 2 weeks out, which at this point would be the 25th. And then you can get strike prices that are close. I've kind of come to the opinion that if you just let it show you what it wants to show you, that's fine. And you can go down to where, where the price is crossing, or price is right now is 57.50 by 58. So where those colors change. calls on this side and puts over there. We're just going to do calls right now because I think this chart's going up. So today is June 11th, so I can't trade those. So I just get out here to the next one, 18th would be fine. So that'd be about a week out. We can go to the 25th also. Okay. So looking at the 25th here, I noticed right away that the volume is kind of low, 184 contracts traded at current price. Let's go back up to the 18th and look at that. Again, this is where the color changes. So 6,000 contracts. And you can see the bid and the ask are only 3 cents apart, 86 to 8 by 89. So really small penalty to make the trade, a lot of volumes. This is probably a better trade if I think we're going to get movement within a week, and I do, looking at that chart. So now what I do is I go ahead and I can check this, and I can plot, open the selected options, or I can just double click that line. I'll do it this way and let it bring that up. Okay, and there it is. There's my option chart, the actual option itself. So now what I do is I want to put this on that other chart. So I go Tools, that's all right, Tools, no, sorry, not Tools. I go Window, and then Cascade, and that'll just show kind of the recent charts I brought up. So there's Intel, and here's this option. Now all I have to do is just drag this option chart into that pane I made. And there it is. And now I can just close this guy because I don't need him anymore. And we're going to let this go back up full scale. And so, you know, there's my option trading less than $1. If this thing is the, let's see, which option is that? It's the 57.5. So we're at 57.85 right now. And so, you know, if you think about it, these kinds of moves will typically go up in here somewhere. So that's 61, let's call it 62 potential. Let's just say 61. So if it goes from where it is, 58, 59, 60, 61, that's $3.5 or about $3, $3.5 in the money. So that option will go from its current price right there. And I can look at that, the crosshair, look at the data window. Here we go, and just kind of see what it is up there. That price right there at looks like about 73. Go right on it there. There we go. Yeah. So or no, sorry, 97. So a little less than $1. So if it's less than $1 now, and this is up where I think it's going to go, which could be 61, is 350 in the money. That means the option will triple. Let's see, 1 to 3. So that is a very, very good profit. So good opportunity, the right kind of pattern. Of course, there's your fulgent signal, firing it. But that's basically the process that you go through to do this. And the beautiful thing about this is now I have the option chart, and I can actually watch the price of what I'm trading up here on top of the underlier. And of course, MetaStock will retain this information for me. So that's all you do. If I bring my exploration back up here, not this one, that's the option window. We're up here and just look at some more. Let's just look at a couple of them. So this is the bars column that shows you how far back
Just one more.
the signals are. And I was looking at one that's only 6 bars back on Dominion a few minutes ago. So I'm going to bring that up real quick here. I'll do the same thing with it. So bring up that chart and we'll look at it. Okay. And same kind of thing. I've got a swing trade signal fired. We'll go ahead and zoom in here a little bit. So got a nice, you know, sort of a flag pattern here. A beautiful retracement to 38% of this move. It's pulled back. It's now gone sideways and moving up from that signal. So good place. I would expect this to get up into like 79.5 zone from 77. So it's a couple of dollars up there. So let's do the same thing. I'm going to go ahead and get option scope up here. Right click option scope, and it comes up. I'll just turn off all the filters, get all the options I can in here. And so we've got here's June 18th. So there aren't that many options on this. So you look at the volume. So volume is really low on that contract right there. The next one up, the 77.5. It is okay. It's over 100. So let's just do the process on it and see what we get. So I'm just going to double click that line. It is going to plot that option. It looks very nice. So a nice low point right here. We like that. Now I need to go back to the other chart. So here's the other way to do it. Window, Cascade. Go back to Dominion and right click in it and say Inner Window New. And now I can drag this option graph up there to it. If I grab it, there we go. And there it is. So same thing. Got it all set now. I can close that chart. And now I've got what I'm trading on top of the underlying. Huge potential here. The option's trading at about a half right now, 0.6. And this thing gains a couple dollars. It's going to be up in here somewhere. So that's like a 300% gain on the option if it does that. So and again, nice bullish pattern. Okay, so there's example number 2. Again, really easy. And then you've got these charts that you can go to each day and monitor actually what the option itself is doing. You can put stop points on them at the lows and things like that. It's just very very handy, very easy. There's my 2 option trades right there, 1 and 2. Okay.
Alrighty then. So that's just a little demo of that for you, and get the webcam back on here just for fun. Okay, and you can see that process is very simple. No matter what you're using in MetaStock, you want to trade options. It's just a few steps. The thing that's so powerful about that, again, is you get that option chart on the top of the underlying. So you can put stops on the option chart. You can put trend lines on it. You can, to get out if it goes through a trend line. There's various money management techniques. I'll talk about one here next, but so there, it's just great. I mean, I love it. Anyway, you can tell. Okay, so then the next thing here is we did the video. So option trading rules, this is kind of what I do. I never put more than 10% of my account out on call options because they're risky, as Jake said. I mean, they all 10 could not go, could not work out. So you don't want to do your whole account, on option trades like this. Maybe just 5%. And typically what I try to do is 1 to 2% of the account on the actual option itself. And we saw that $300 trade. I showed you controlling $34,000 worth of stock. So it's pretty easy to hit that with almost any account. So look at, limiting the size of each trade to a very small number. You monitor them in MetaStock, and then you can either hold to expiration or take profits if it goes up by 2, sell at 50% down. And just real simple rules. Okay. All right. So I'm going to go through real quick here. This is just some very quickly, check the time real quick. Yep, we're good. Is just some recent trades. This is an exploration I did back in February. So when the last time I did this presentation with MetaStock, and I've got some from there that I just wanted to show you a couple of them. And then I just did some, found some today. So back February, there's this one, and you can see the option chart here. Here's the signal. Here's the move. Not much movement in the chart. 4% in the chart. 71% on the February 19, 111 call. Here's 6% on GPN. 246% on that Turner call right there. Just look, not much movement. Look at this. So you think it's difficult to get a double on these things? It's not. Let's get another one here. Here's MGM. The stock goes up. Here's my Fulgent signal. Stock goes up 5%. Option goes up 74%. That's kind of fun. And the last one from that date is Xerox, 4% in the chart, 74% on that near term, just out of the money option. So the recent trades I just did that these contracts expired Friday is Twitter. Amazing. Look at this. Here's the signal all the way up to expiration. Look at that. That makes you happy when you see that happening. 216% on that Twitter, the 50 call. And Broadcom, okay, kind of a wild option chart here. That's like Jake was saying. I was really right. Don't look at the little wiggles. I mean, you're doing a seasonal trade in his case. In this case, it's an option trade. These things, especially if they're not real liquid, are going to be all over the place. I've got a plan. I'm looking at profitability and how far it goes. In this case, to expiration, up 122%. So that is a double. Now, when I say 200%, that's a triple. Just want to point that out. So up 122% is a double on the option. Pretty good. And there's a stock. Did okay. Nice little swing trade there. And I think I got one more. Boeing. Yep. boing, yeah, it didn't do that great. I wanted to show this one because the signal actually started fading. These can do this sometimes, like this one did too. And then here's the stop down here, and it ended up here. So it happens. We, let it stay with the signal, put our mental stop in here. We can do that also and get out of the option trade on that stop line on the underlying. But it goes down, then it comes back up. Didn't really go very far, but still 38% profit on that option trade. Okay, so just some examples for you to see in the market. It's fun stuff. So the last thing I have to talk to you about is going back to our product and just a few things about it, just so you know what it does and kind of what its capabilities are. The user interface, I'm going to bring it up real quick and just show you this because I can do that in about 30 seconds. And not hurrying, it just is that easy. So fortunately, again, the folks at MetaStock showed us how to add our platform in their menu. So tools, Fulgent AI, it comes up. This is the entry, the gateway to the knowledge base. And you can see I have a bunch of them in here because I've been copying them. You can do that. You can retrain them on other lists. Talk about that in a second. But here's the one I'm running right now is the standard stock default. And if I double click that, I will see those 4 experts. So I can turn some off. I can go longs and shorts, just longs. If I don't really like one of them, I can turn it off and it won't, bring it up in the charts anymore. So it's just real simple. There's also in this interface a minimum accuracy rating. So this is the historical accuracy of the rule. So you can pump that sucker up to like 80, and it will only show you trades that had 80% accuracy in the historical data. Okay, so that's pretty much what I wanted to show you there. Like I said, you can activate certain experts. We looked at that. It has in each rule the stats I showed you, which we already talked about. And that's very useful. Wherever you click in the chart, it's going to show you the current rule that fired, what it did in the historical testing. And let's see. The other thing you can do with this that's really powerful, and I wish I had 30 minutes on it, but I'm going to do the 2-minute tour. And that is that you can take that knowledge base with all the genes that it has, all the inputs, all the volume increasing and all those things, and you can retrain it on your condition and your data, either one. You can just retrain the thing as it is on your data, or you can get an indicator relationship that's a Boolean, true or false, of any kind. Doesn't matter what it is. Take any strategy from the other folks that have presented here today, and you just say, use that guy's thing because it's really good, but maybe I can improve it. You let the AI run on it, and then I took this simple little thing right here and made a profitable strategy. There's the signals from it in about 30 minutes, just by retraining on that indicator. And actually did a MetaStock test. Here's the stock thing by itself with no training. Here's the trained one. So you probably had some good things that you like, and this is just one of the things that this engine does that a lot of people really like because it's totally customized. So integrates with MetaStock. You can retrain it, get outstanding trades every day, and there it is. So this is where I pass the baton to Jeffrey for questions and about the package. But again, I just appreciate being on, Jeffrey. It's always fun. Thank you. Are you there? He's out there somewhere.
I am. I just need to I need to properly hit this microphone button. That's right, but I found it. There was a couple questions I promised we would ask for you.
Yeah.
Let's see. Uri wants to know, Ed showed how he works with options, which is impressive, but how does the AI engine work with futures to provide value?
Well, it's interesting you brought that up because it does actually, if I can show this real quick, you can retrain it on any data. So this particular knowledge base has inputs in it that are designed for stocks. So, but you can use it. You can retrain it on real-time data. You can retrain on futures, on forex, and it will train. It'll find rules with what it has got about. Each of the experts has between 200 and 300 inputs, so it will find profitable rules on those things. And all you do is just you bring it up, you make a copy of the knowledge base, and you say, okay, retrain this on this data, and you just watch it do it. It makes a little curve as it's doing it. But yes, you can train on anything. It won't be probably as effective on futures or forex, but it will find profitable rules for sure. And people are doing that. So
Very cool. So, and then Brad in YouTube says, so this method makes 20 to 60% year. But if I allocate 10% of my portfolio, I'll get 2 to 6% per year. So.
Yeah, I guess those from the simulation I did in Excel, where I just played the game of, kind of flipping a coin. Yes. Now, however, you'll notice that a lot of those trades I showed you were not doubles; they were triples and quadruples. So, it's I can't say it makes so much for you. It's like anything you're going to see on this presentation today. It's kind of up to you to engage it and do your work and find the best candidates. And depending how good you are at that, and if you get really good, you might want to increase allocation from 10% to 20. Those are all very personal decisions that you have to make. But so I just want to be clear, I'm not promoting a system that makes 20 to 60%. That was just kind of an example of what happens if you double or lose half. So, but the good question. Thank you. Yeah.
That's a good answer. Thank you. Let's see. Muhammad wants to know how many times he should train the model.
Oh, you actually never have to train it. It's already trained. We've been using the same knowledge base for a year and a half. We're about to release version 3. We've made some improvements, and that's every user is going to get that. We're getting more signals firing, and they're more accurate because of some updates we've done to our AI. But the one that's in there right now has been around for a year and a half, and it still does great signals, as you saw. So you don't have to do that. That's like, if you're just trading the NASDAQ, you could take the thing and train it on the NASDAQ, and it will work better. It was trained on the Dow 30. So it's just an option. You can do it if you want to.
Okay. Very good. That is there recommendations to retrain it if like a lot of our customers are international and maybe want to look at it on their Indian stocks, or let's say their Australian stocks or other markets that aren't U.S. Stocks? Are those areas where we would maybe retrain it?
Well, we actually have a section in the back of the manual. I think it's chapter 10. It's a very full-featured manual. It covers everything about this. And it shows you how to replace the index symbol with your index symbol from your market, because some of the inputs in there, the genes, the little things that it looks at, are based on the index, because it's relative to the index what the stock's doing. So it shows you exactly how to replace it with the ASX or whatever it is you have, and but you don't have to retrain. It's going to use that index in the knowledge base instead of the S&P. You can retrain, but you don't have to. You just say, okay, this is my index symbol, and you put it in there. So it's in the manual, very clearly shown how to do it.
Okay. Yuri wants to know how effectively it can be used for futures, and I might have asked that a little bit earlier, but Yuri just wants to know if it is effective with trading futures markets. So
I haven't traded futures with it, but I've trained it on all kinds of data, and because of many of the inputs are very simple. They're like, volume relationships and things like that it will find profitable rules, but I don't have stats for you. I can't tell you. You have to try it and see, and of course they have a generous, try it policy there at MetaStock, but I know you'll find good stuff. I just don't have a record for you to tell you.
All right. That's it. That's all of the questions.
Okay. They're good ones.
Thanks, Ed. I appreciate it. Let me go ahead and I'm going to kind of show a little bit of how the scanning works and that kind of stuff. I do want to say thanks for coming in. Thanks for bringing the AI technology into MetaStock. People love it, and it's good to have it as part of the catalog.
Very welcome, sir. Enjoyed it. Thank you.
All right. Thank you, Ed. All right. Let's see. Let's do this. Yes. Okay. Let's go to me. All right. It takes just a minute to kind of get things moving over and that kind of stuff. So let me go ahead and do this as well. What I do like about Ed is he shows off, he loves to use our new option scope platform and use that inside of MetaStock, and he does a really good job of it. He does a really good job of actually casing how that works, and that's a really, really cool tool that they just added. Jonathan says, really appreciate your time today, Ed. Have a fantastic rest of your weekend. Thanks, Jonathan. I hope you enjoyed it. And Sheena says, do you retrain up to the current date? You can. There is a section on the retraining part of the manual that actually talks about how the retraining works. And at the risk of not giving good information. I don't do a lot of retraining with the Fulgent AI engine. So I would basically, for that question, Sheena, just have you contact our support or our sales staff, and they should be able to look up the information for you. So there you go. The Fulgent AI engine is normally about $149 per month every month. What we're doing here as part of the special is we're going to do a special offer where you can get it for $99 per month. So it does work with DC in real time, which was one of the questions that came up. And it is just a subscription. So as long as it's helpful for you, you can keep using it. You can give us a call to get that added to your account at 1-800-882-3040. Or you can visit metastock.com/saleschat. We do include 3 months of the AI engine as part of our Summit Traders Action Pack, I guess. We're going to include all of that training that Jeff Tompkins talked about earlier, 12 months of Trade Trend, Jake Bernstein setup and timing triggers, 3 months of the Fulgent AI, 3 months of Magic Trader, Learn MetaStock, which is a subscription that was put together by Kevin Nelson right here, where he actually kind of walks you through how to use all of the award-winning tools of MetaStock. You'll get 2 years of Stocks and Commodities magazine as part of that. And all of that is available for $16.91. If you don't have MetaStock and you're looking as a reason to try and get started, you can add that to your subscription here. The price for that starts at about $59 for 3 months. So to find out more about that, we're going to kind of talk a lot about MetaStock now. It's my turn to talk. But you can go to metastock.com/summit deal. You can visit us at 800-882-3040, or you can go to metastock.com/saleschat. Okay. And Raj says, does this have a money-back guarantee? All of the non-subscription parts of this have a money-back guarantee, so most of it does. If you, with the lease-based products, basically you pay for the 3 months, or you pay for 1 month and get 3 months, so you can just cancel them at any time. That is a really good question. Jonathan, thanks. Everything has been great so far. Looking forward to the speakers. Definitely a great way to spend a rainy Saturday. Sorry it's raining there, but I'm glad you're spending it with us. It's sunny out here, and I think we would prefer rain because we're told we need it here in the desert of Utah. So in any case, 800-882-3040, metastock.com/saleschat, or metastock.com/summit deal. So in any case, before we kind of get into a little bit about, Greg is going to introduce me in a second, but I'm going to talk a little bit about our sponsor today, Stocks and Commodities Magazine. Stocks and Commodities Magazine we've been working with for since before I was an employee. They've been helping us, though, get people at our event and sponsoring the Trader Summit since I started it. And we've been running it for like 8 or 9 years. So you're going to get a free copy if you want it. You need to go to, if you didn't register already and ask for it, go to metastock.com/tradersummit, and you'll fill out just like your name, address, email address form, say that you want the Stocks and Commodities free issue, and they'll go ahead and send it over to you. So other questions that we're getting a lot, just some kind of QA questions. Yes, we are recording today's event. For those of you watching at YouTube, you can just back up the YouTube screen and you'll be able to see it from any point you want to. For those of you that are watching on GoToWebinar, we will actually, I have already set it up. GoToWebinar is going to send you an email with the summit recording 1 hour after we stop. So there you go. We're going to kind of go in ahead and talk to me. Greg Lewis has going to introduce me. So there you go.
Jeff,
this is Greg Lewis. Let me introduce you so you can introduce me, Greg. Greg Lewis is a friend of mine. He does all of our graphics, all of our graphic design, all of our marketing, and I really think he does a good job of graphic design. Wow. What he doesn't do such a good job of is introducing people. So here he is to introduce me.
Well, first of all, do you think you need an introduction? I think you clearly need no introduction. You're, by every definition, the face of MetaStock. So people know MetaStock, they know Jeff Gibby. Especially since he's been here almost since the inception of MetaStock. Well, no, 23 years.
Not really.
200 years?
A lot. Yeah, just
years.
150.
Okay. Yeah, Jeff Gibby is our Director of Sales and Director of Business Development. So this is difficult because I got my voice in one of my ears and it drives me nuts. if you've seen any of our presentations or any of our summits, you do know Jeff, and he's a very, very seasoned presenter, very likable, very knowledgeable, and has a very genuine, swell guy way about him that we all enjoy. How's that for an introduction, Jeff?
It's perfect.
All right.
So is it my turn?
Is there anything else I need to say while you're flipping through your chart?
I realized I didn't have the legal disclaimer in front of my part, so I went back 150 slides to where I had it. So,
Right.
so there we go. We are going to read this out loud. I'm going to take off.
You think I missed? Oh, and he has a swell dog named Snow.
Yeah, Snow Wolf. That's what happens when you have a 9-year-old name a dog.
Yeah.
You get Snow Wolf.
Well,
All
break a leg, Jeff.
Let me go ahead and read this again. All right, thanks, Greg. All right, and I'm going to get just a little bit more comfortable. So I do like to read this. We did read it earlier. I've read it probably thousands of times in my lifetime. I can recite it. Sometimes I wake up saying it. But today's demonstration is designed to instruct you on using MetaStock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. Greg, I took off my headphones. Are you saying something? Okay. Go ahead. Why don't you mute then? All right, thanks. Okay. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their trading software. Any trading strategies or any information provided in connection with the company. So there you go. I hope you guys are enjoying today. To kind of give you a little bit of a detail on who I am, as Greg said, I started here quite a number of years ago, 1997. So 20-something years ago, a lot. Not quite 25. I think I did the math, and it'll be 25 coming right up next year. So in any case, it's a great company to work for. We do sometimes act a little bit more professionally than today. But, I started here in inside sales. And when I started, I was like, hey, this will be a good job. I'm going to do it for like at least a year. And then we'll see what comes around. And I just happen to love representing the software. I love working with the people we work with. It's such a really close, tight-knit company. Some things that I'm really, really proud of are very, very frequently we'll get surveys back from our customers that have maybe contacted support, and we have, how did your support interaction go? And, typically those surveys, we ask everybody that goes in through support, and it's not uncommon that we'll get like 100% in terms of that. One of the things I think that we really do well with our culture is actually taking care of people and helping them out and helping them get with any questions that they have. We actually keep more people here in support than we keep it on our sales team and our marketing team put together. So we have more I think we have more programmers, but we have a really, really good support staff, and they do a really good job. And okay, so I started in inside sales to kind of give you get back a little bit on track, and I did that for about a decade. For another decade, I basically helped with our business development stuff. And so we basically work with Jake Bernstein because I gave him a phone call one day and I actually talked to him, and we got his methodologies pushed into MetaStock. That's the reason we work with Ed Downs. Most of the people that are speaking today are basically people that we have a great relationship with, and that they do a really good job. I would say that from that experience of working in BD, I learned a lot about trading. I myself trade right now. I trade mostly stocks. I can't really say I do options trading at all because it's been several years, but I like to trade stocks, and that matches the tempo that I do. We have been in business for a number of times, a long time, since 1982. When I started in 97, we were part of Reuters. Reuters became Thomson Reuters, who became Refinitiv. We bought ourselves back from Thomson Reuters in 2013, right here. And so this year will mark 7-8 years. So that we've been 8 years that we've actually been part of our own company. We do have a good relationship with Refinitiv. They provide all of the market data that we're going to be playing with today. They cover basically 92% of the global market cap. So it's a great, it's been a good relationship. It's been even better since we're no longer actually part of the company. And we've been able to kind of maintain a good relationship with them. If you have questions, let me know. I'll be kind of monitoring chats through YouTube. When I glance over here, I'm looking at YouTube. When I glance over here, I'm looking at GoToWebinar. But if you have questions, please let me know. And I have if you guys have symbols you want to look at, type them in right now, because we're going to be looking. One of the things I hate, one of the things I don't want to do is when I hate overly prepared presentations. For me, I could go in and show you really good examples, ideal examples of when to buy and sell based on using MetaStock. But what I'd like to do and what I prefer to do is actually look at the symbols you're interested in. I think it gives you a little bit more of a good idea of how well it works and when it works and when things don't work, okay? So symbols, if you're enjoying today, let me know. How are we doing? We put a lot of work into kind of putting these events together. So far, I think we're doing pretty good, but I hope you agree. So in any case, the one thing I will say about, and I actually don't have a slide here, but the one thing I am actually very, very proud of, and that I say every time we start a presentation, is our software, MetaStock, has been rated #1 in its price category 27 years in a row. There's a lot of things that it does, but every single year for the last 27 years, it's been rated #1. So very, very consistently. And there's a lot of things that we'll kind of talk about. We've been talking a lot about it today when it comes to MetaStock, and there's certainly a lot of great things that MetaStock can do for you. A lot of times when I come in and I start talking about MetaStock, I like to show the system tester, which allows us to test trading ideas. I love the scanner. I use the scanner probably every time I want to take a trade, and probably just about every day. Some days I find myself a little bit too busy to be trading, but when I'm trading, I'm usually running an exploration to find the trade that I want. We also have an expert advisor, and we will play a lot with the expert advisor. Basically goes in and helps you identify. And I have classes that talk about all of those. Today, the class that I've decided to do is a little bit different. It's called Hidden Gems in MetaStock. I'm going to show you a few. We're going to get a little bit off of the beaten path when it comes to MetaStock. I'm going to show you a couple of the things that I actually really, really think you should know about, especially if you've been using MetaStock for a while. So, Talit asked the question, does this AI applicable for intraday charts? Talit, that's a really good question. The AI that Ed Downs just got done talking about does apply. Thank you for the question. Looks like Galea and Lulu are actually, Galea and D. Freeman are already throwing charts. So that's great. We're going to actually play with those charts a little bit, and I'm just going to show you kind of a couple of different methodologies on when it comes to MetaStock. So the first hidden gem in MetaStock is actually a system that was developed out of India. The gentleman that developed the system is a guy by the name of Rahul Mohindar. He does assist, basically Rahul, let me tell you about Rahul for just a second. He is a business partner of MetaStock. He's been a partner of MetaStock for 2 years longer than I've been an employee, so 26, 27 years now. He helps us sell MetaStock in India. He's a big fan of the product. And one of the things that he does is he owns several offices in India. He teaches people how to trade in India. And if you happen to be in India and you want to look up the company, the name of the software company is Viratech Software in India. He's been a very, very good partner of ours for decades, really. And I want to say about 15 years ago, he was in our office. He comes in our office. Well, before Corona, he'd come in our office every year. And I think that'll probably normalize now that things are getting a little bit back to normal. But we haven't seen him for a couple of years, but he generally is in our office and we're talking about the business every year. He usually either comes in with his brother or his dad. 1 year, I want to say it's about 10 or 15 years ago, we asked him to show us what it was trading in MetaStock, or what he was teaching people how to trade. And what he actually showed us is the RMO trade model. This is the very first trading methodology that I've ever used. I like to show it. And there's a few reasons that I like to show it. It is a trend following system. And the trend is like your friend, or rising tide lifts all boats. There's a lot of things around that. But the first thing I want to show you today is the RMO trade model. Okay. We talked about who Rahul was, and he's basically, he also does a lot of trading in CNBC and CNN India. And there's a few reasons I really like to show RMO. It's easy. There's 3 rules. It's objective, so I'm not going to basically be looking at it's all rules based. We're not going to be trying to make decisions about what's going in the market, whether or not there's going to be a new stimulus package, or whether if there's inflation in the future, or what the last stimulation did, or name your variety of emergency, what quantitative easing was meaning during the housing crisis. We're not looking at those things. What we're looking at is trend. Okay, it employs solid money management. So at no point are we going to basically get into a trade where we don't understand where we're going to get out of that trade. I also like it because it works on all time frames. We'll play mostly with daily today. It works on a lot of different instruments, and it's pretty simple 3-step process. So we have a couple of symbols here from Galea and De Freeman. And we'll go ahead and start with those. And let's see, we've got a couple of symbols here as well. We won't have a lot of time to look at every single symbol. I do want you to know it doesn't work on everything. I'd say based on showing this hundreds and hundreds of times, it works pretty well. I'd give it about 75, 80%. Generally works on stocks that trend really well. Like your Apples, your eBays, your Teslas, those type of things, stocks that are in a move. But generally stuff that's flatter, it's a lot harder to kind of trend trade with stuff that doesn't move. And I'd say just a rough guess, probably about 75% of the stock. So let's go ahead. I've got MetaStock open. I'm going to go ahead and kind of just close down some charts here. And what we're going to do is we're going to look at some of these stocks with the RMO trade model. Okay, so this is what we call the power console of MetaStock. Right here, we're going to play with charts quite a bit today. We're going to do a little bit of scanning too. We probably won't have time. I mean, we definitely won't have time to kind of go into some of the other tools like the system tester or the forecaster, which is our patented forecaster module. Let's go ahead. I'm going to go ahead and kind of just type in a few symbols right here. And I do want, there are a couple of different ways you can get to symbols, but in the, we've got lists of like the whole S&P 500 for here, right here, for example. We do cover a lot of data. Like in MetaStock, I have right now access to 296,000 different stocks. But one of the things that I think they've done fairly well is actually organize those. So if I'm interested in just finding options, or let's say I'm interested in North America and I want to look at optionable stocks, I have a list that I can scan against. Or ETFs, I've got a list that I can scan and do analysis against. But since we know what stocks we're going to pull up right now, what I'm going to do is just pull them up. So we're going to, the first one that is asked for, courtesy of Galea, is Patan. So I'm going to go ahead and put that in here. We're also going to look at Lulu, which I think is Lululemon. I'm pretty sure of that. I also think with the Reuters symbol, it's going to be Lulu.o, which is correct. I don't have actually a position of Lulu right now. I have in the past. Let's go ahead and look at also WM. This is for Philip. WM, HA, and MO. Let's go ahead. I'll just type all of those in there. We probably won't look at all of these. WM. GSK, GlaxoSmithKline, kind of GSK, which I think GSK doesn't require an extension. GSK, yep, I'm correct. And HA, that's enough for today. Okay. Jonas says, will this work on volatile stocks, not just momentum stocks? Well, it will. What it does generally tend to work better on stocks that trend in a specific direction. Okay, so let's go ahead and kind of open this up here. We're going to open up all 4 or 5 of these, and we'll just take a look at the stocks you're interested in. So what I've done is, as I'm opening these up, it looks like I got HA wrong, so I'm going to go ahead and just cancel and let that one open up. I forgot to apply the right template to a chart, which is actually my mistake. I usually make a point to get the right template on here. But what I'm going to do is I'm just going to apply the RMO trade model here real quick. So a template in MetaStock is what just defines all of the different methodologies or what indicators are going to be used. And I'm just going to go ahead and quickly apply the RMO trade model to all of these charts. My apologies. Usually what I do is actually apply it while I'm opening up the charts. It just makes it a little bit quicker, but I just made a little bit of a goof. So apply template, RMO, okay. Apply, no. Okay, waste management. Sorry about this, guys. It's actually, I'll get these all attached, right? Apply template, okay. RMO, okay. apply. No, we don't need to save that one. Okay. Dang it. Here we go. And then Lululemon, apply template, Armo trade level. Okay. And then apply. No. Okay. One more. We'll just do one more, and then we'll have them all with all of the indicators. Again, if I would have just put the right template on here when we started, I'm going to have to go through and kind of fix it, but it's not too hard to fix, so we'll just fix it. No. Okay. All right. Now what I want to do is actually I've minimized all the charts, but we've got all of the indicators that we're going to use. I'm just going to go ahead and kind of make these all kind of tiled a little bit. Okay. Ooh. Okay. Well, that's not really what I want. Okay, let's go ahead and we'll start with let's see. Just kind of trying to get a good idea of what I like here. Any of these will probably work. What I'm going to actually look at right first is WM. So there we go. We'll look at the one for Philip here to start with. Okay, as I said before, with Rahul and his models, what he likes to do is look at the trend. Okay, the trend is your friend, befriend the trend, et cetera, et cetera, et cetera. And since we're going to be trading with the trend, what he's done a lot of work with down in India is to develop ways to look at the trend objectively. So if I do my job well today, what I'm going to do is I'm going to show you how to evaluate the trend using the Armo trade model. And as long as I kind of do that successfully, you'll be able to understand exactly how to identify the trend on a chart. Okay. And the first thing that we do when Rahul talks about trends, he's talking about them in very, very specific time frames. So the first thing that we're going to look at is the primary trend or the long-term trend. Then we're going to look at the short-term trend. And then we're going to look at ways to trade based on that overlying stock thing. Okay, so if I want to take a look at the trend, there's a couple of different ways to look at what Rahul calls the primary trend, which is just the long-term trend. This right here is the Rahul Mohinder oscillator. I've made it full screen. And what I'm basically, again, it's a very, very simple thing to read. If you're talking to Rahul, the big methodology or the big thing that he likes to talk about is simplicity. With this, he's very, very specific in saying that the size of this indicator, the shape of the indicator, they don't matter. What we're looking at is just an easy way to identify the trend. So if I'm looking at this, we're going to basically make some very, very clear statements. Right now, and since early March 9th, to be precise, the RMO has been above zero. This green line has been above its zero line. Okay, with the perspective of this particular stock, that means that this stock has been bullish long term. Okay, so what does that mean? Well, with Rahul, as long as it's bullish long term, it means two things very significantly. It means one, we're allowed to go long, we're allowed to take long positions, and two, we're not allowed to take short positions, and that's all it means. So we're not, if we're looking at this back in March when it went from bearish to bullish, we're not going to be taking a position based on that. What we're looking to do is say, okay, well, we're allowed to take long positions. Since it's bullish, I'm not going to take any short positions. We want to trade with the direction of the overall trend, okay? And that's all we look at for this sign. Are we above zero or are we below zero? That's it. Keep it simple. Okay, right here, the other thing that you can look at is you can notice, because I'm going to point it out right now, there's a ribbon, we call this a trend ribbon on the bottom of the chart here, that's either above zero, in which case it's going to say that the RMO is bullish, or it's below zero, which is going to say that the RMO is bearish. So if I'm looking right now at Waste Management, which is the stock you gave me, Philip, I'm going to say that ever since March, we've been in a bullish phase. Okay. And that's it. That's the only assessment that we can make right now. The second thing that we want to look at with RMO is we want to look at the short-term trend. So first we want to look at the primary trend or the long-term trend. Now we're going to look at what the short-term trend is doing. Okay, and to do that, I'm going to actually look at a couple of indicators. Rahul calls this swing trade number 2 and swing trade number 3. Okay, what I'm going to do is I'm going to make a little bit of a change in MetaStock. I like MetaStock because it's easy to change things, but there is a display difference that I like when I'm looking at RMO. I like to look at this pink line as a histogram, but I like to look at the blue line as a line. So I'm just going to change that. And then one of the things in MetaStock is if anytime I want to change something, I just double click on that. So what I'm going to do is I'm going to double click on this. It's going to bring up a style. I'm going to change it to a line. I'm going to go ahead and click on OK. And now I'm just looking at a line, okay? The first indicator, though, that we're going to look at is we're going to look at this pink indicator in the background, okay? And you'll notice a few things. I'm going to point them out to you. You'll notice that this is a lot quicker to go up and up down. It's a lot quicker to go above 0 and below 0 because it's looking at the shorter term trend. So it's looking at shorter time frames, and it's making an assessment based on, because it's looking at shorter time frames, it's going to be more reactive to price than the RMO trade model. Okay, but that's how you really need to know about it. The swing trade number 2, what it's designed to do is help you identify what the short-term trend is doing, and you read it the same way. So right now, the short-term trend is down below 0. Okay, which means that short-term at least. Waste management is bearish, okay? If we were looking at it right here, just a few bars ago, since early March, I'm going to say about March 4th to June 7th, or was that earlier this week? June 7th, it was in a bullish state, but now it's entering a bearish state. So what does that mean? Well, of course, with waste management, we have to trade the very end of the chart, right? So if we're looking at waste management today with RMO, we're trying to make a decision of whether we want to go long. Long term, we're bullish. We just looked at that. The RMO is bullish, but short term, we're bearish. Okay, and we want those to match. Okay, if I'm bullish long term, but I'm bearish short term, I don't have a clear signal of what I believe the stock is going to do. And my answer to that is I'm not going to do anything. I'm going to wait until they match. Okay. Generally speaking, it's either going to keep going. We're on a shelf. It's been kind of pulling back since right here. We're either going to continue to pull back and enter a bearish phase, in which case things are going to go bearish, or we're going to set a really good resistance level that we can, and the stock will continue to go up. Okay. But right now we're just in this sideways phase. It's pulled back enough that maybe it's starting to get weak, but we're not weak long term. So we're not going to we're kind of at a point where if we're in this trade, we have our stop loss in place. But if we're not in this trade, we're certainly not looking at buying this. This looks expensive right now, and it doesn't have a lot of trend on a short-term basis. So does that make sense? Sandra says, I like your change of the blue line histogram better. I can follow it better. That's why I like to change it too. So, and there's a couple of other ones. I do want to say, I do appreciate all the feedback that you guys have. We probably won't have time to look at every single chart, especially because there's at least one other thing I want to show you today that I like in MetaStock. So, but if you have chart requests that you want to look at, like any of the add-ons today on charts, like maybe the Magic Trader stuff that Peter's talking about next, or the AI stuff, if you want to see specific charts, just get in touch with metastock.com/saleschat. This is going to magically appear on your YouTube window just right now, as soon as Greg can finish typing it, if he's paying attention. And we can send you any chart you're interested in, because I probably won't have a chance to talk about all of them. So, okay. All right. The other thing that I want to say is you'll notice right here, it went down below 0 right here, right? As soon as that started to happen, the bars went from blue to red. Okay. That's all. So you can look at, again, you can look at the indicators. This is bullish, and we can see it's bullish because it's above 0, or it just says it's bullish right here. Right now it's bearish because this one is short term, because it's down below 0, which it's been for 4 or 5 days. We can also see that on the chart. So if we're looking at the chart, again, one of the things I like about this is it's objective and it's easy. Bullish long term, bearish short term, I'm allowed to wait, and that's it. Okay. Now I'm going to go back a little bit into the beginning of this trend, so that can kind of show you how you would actually manage a trade. Remember, money management is a huge part of this. So let's say that just for the point of kind of the discussion here, that we started looking at waste management on March 1st, right here, right before this move up, right before this big bullish inflection. right? And what I'm going to do here is I'll just zoom in a little bit, okay? So if we're looking at this stock right here, and then right here on this line, oh, I forgot to explain the last rule, okay? Okay, I think I can do it as we go, okay? Well, actually, no, let's just explain it right here on the fly. The third thing, because there's 3 steps as part of this, is that we want to look for is what Rahul calls a change of momentum or a change of direction or a change of force, okay? And let me go back in here. I'm going to zoom out just a little bit here. And we're going to talk about these 2 indicators again, okay? This one, as we were talking about, the pink one before, is the swing trade number 2. Rahul calls it the swing trade number 2, measures the short-term trend. The blue line that I changed to a line earlier is called swing trade number 3. And if you didn't guess, it's actually looking at the medium-term trend. So between all 3 indicators, we're looking at the long-term trend, the short-term trend, and the medium-term trend. The thing about the blue line, and the reason I like to look at it as a line, is because I don't care if it's above 0 or below 0. What I'm looking at, the swing trade number 2 and the swing trade number 3 for, is to find what Rahul calls a change of direction or a change of momentum or a change of force. And so let me explain what I mean by that. If we're in a bullish trend up, your swing trade number 2 or the short term, the purple line, is going to kind of start going up. If that starts to waver and it starts to come back down, it's going to start to go down. When that happens, at some point, it's either going to, if it's in a bullish move up, it'll cross up above, the pink line will cross up above the medium-term trend or the blue line, and that's a bullish shift of momentum or a shift of force, okay? Once we kind of get to an area where there's more sellers than buyers and the stock starts to pull down, what you're going to see is you're going to see a bit of a sell-off. You're going to see a bearish shift of momentum or shift of force or shift of direction. And all that means is you have a temporary shift of momentum. That's why Rahul calls it a shift of momentum or a shift of force, okay? When that crossover happens on the chart, what you're going to see is if it's a bearish crossover, you'll see a sell signal show up on the chart, okay? If it's a bullish crossover, what you're going to see is a bullish shift of momentum on the chart, okay? And we put that as a buy arrow, we put that as a sell arrow, okay? Now, if I'm looking here at this bullish shift of momentum, okay, I'd say, okay, yeah, we have a bullish shift of momentum. That's why I have a buy signal on the chart. I'm long-term bullish and I'm short-term bullish, and that means I can buy, okay? But if we're looking right here, if I'm not in this stock and I'm getting this shift of momentum to the downside, I'm still bullish long-term, I'm still bullish short-term. At this point, I'm just going to wait to see what happens, okay? I want to trade in the direction of the trend. And that's it. It's a very, very simple rule set. So now that I've properly explained all of the rules, let me back up in this waste management chart and kind of show you how Rahul is very, very specific about where to put in your entries, your stops, how to move these, because I think a big part of trading, at least my opinion, is in money management. You know, there's a saying out there that there's old traders and that there's bold traders, but there aren't bold old traders. There are people, you know, that you can win 90% of the time, but if you're going 100% in every time, you can still lose all of your money, right? A big part of getting into a trade, and maybe the more important part of getting into the trade, is knowing when to get out of that trade. So now we can go back a little bit. Let's take a look, and we'll just kind of show you how this would work back. And now we're going to pretend, now that I've explained this to you a little bit more, we'll start in March, and we'll kind of show you how this works. Okay. So right here back in March, we would have been bearish long-term. Okay. We would have basically saying bearish long-term right here. We're down below 0. And if we kind of zoom out, we were actually bearish for a while. There's a little bit of a bullish streak in there, but for a while it's been bearish and kind of just grinding a little bit lower, not moving in any specific great quick way down, but kind of grinding lower. Okay. In March, it kind of started to set up a little bit of maybe like a pivot bottom pattern here. We had that shift of momentum. If we're looking at this on March 1st, we're going to say, okay, rule number one, are we bullish or bearish long-term? Okay. Well, we're bearish long-term. We can't go long. Okay. Okay. Rule number two, are we bearish or bullish short-term? We're bearish short-term too. We can't go long. Okay. So at this particular time, even though we have the shift of momentum, we'd be more interested in looking at a short position, maybe off of this signal, than we would in a long position. Okay. So at this particular time, we're not going to do anything. We're going to wait. That's what the rules say. Okay. We're going to wait. Okay. The very next day, what we get is we get a bullish short term. So we went from red to blue, which indicates short term. We're starting to get bullish. The stock is starting to go in the in a bullish direction, and now we're starting to get a bullish inflection on the chart. Okay, it's not till 2 or 3 days later that we go actually bullish long term. So all the way up from here, this is the very first time on Waste Manage where we're actually allowed by the rules to take a long position on this trade. Okay, so at this particular time, we'd be looking to go long here off of this signal. And this signal is as valid as long as there's no expiration on it. It doesn't have to happen within a day or two. Okay, that's a question I just got from actually Kevin Nelson a couple of days ago. Okay, now when everything lines up though, so we've got the buy signal here. It takes a little bit of time to go bullish long-term and to go bullish short-term. When everything lines up, then we can structure a trade. Now, Rahul is very, very specific about how to structure a trade. I'm going to do my best to explain the rules that he uses in his trading. When he wants to structure a trade, what we're going to do is we're going to look at the high of the bar that we're going to take that long position on. So here is where everything kind of matched up. Okay, we're going to look at the high of this bar. We're going to look at the high of the bar before it, and we're going to put our stop right above the higher of those two bars. So this high is here, this high is here, this is the higher high, and I'm going to put my entry right just a penny or two above it. A penny or two is the exact phrasing that Rahul uses when he shows people how to trade with the RMO. Okay? All right. So if the stock goes up above this high, we're going to buy. Okay? The other thing that we want to look at is a stop loss. Okay, so and Rahul has 2 different methods that he teaches for a stop loss. I'm going to show you both of them, and I'll tell you which one I prefer. So if I'm looking at going long, I want to know where I'm going to get out of this. I'm going to be wrong sometimes, maybe not all the time, maybe not a good percentage of the time, but I'm going to be wrong, right? And so what I want to be able to do is be wrong and still have an account afterwards, right? So the first way that he looks to kind of place his stop loss, or the first way he teaches, is to look at the lows. So if this is where I'm buying, this is the low of that bar, here is the low of the day before, this low is lower, and then you could put in a stop loss right below that activity, right here, for example. Okay, that's the first method that he uses. The one that I prefer is gives it a little bit more room, which means you take a little bit more risk, but I like to look for the most recent pivot low. Okay, so if I'm looking right here to go long, okay, on this bar, a pivot low, if you're not familiar with it, some people also call it a fractal low, but it's a low surrounded by 2 higher lows. Okay, so right here, this is the first one we've got. If you look at this low, it has 2 higher lows surrounding it. This is the area, this is the price I'm going to pick to put a stop loss level on. Okay, so if in my case, instead of having a stop right here, I'm going to have a stop that's quite a bit lower based on kind of how fast it's been moving up. But it's going to be placed right based on this pivot, fractal, whatever you want to call it, low, right here. Okay, so right now, I know where I'm going to get into the market. I'm going to get into the market if this high is exceeded. This high is going to be 123.38. Okay, 123.38. If the price doesn't make it above that level, then it's going to peter off. I'm not going to buy it unless it breaks that high. It's the last piece of confirmation that Rahul wants that this is going to enter the trade that we're expecting. Okay. As soon as I get into that trade, because it goes above that level, I'm going to put in a stop loss. In this case, the stop loss is actually going to be a 110. So there's actually a bit of room between the entry price and the exit, more than I typically used to. That does happen from time to time. But I do like the idea of looking at where support exists on a chart and using that as your area to put in a resistance or to put in a stop loss. Is actually the term I meant to use. And the reason I like that is because I'm not trying to make a decision on how much I can afford to lose. I've heard a lot of people talk about that over the years. I don't think the market is interested in how much you can afford to lose, right? What I'm looking at is a support area. Where is this chart likely, if this starts to kind of slide a little bit, where is it likely to stop? And if that area holds, that's where I'm going to get out. So I'm basing it based on what the chart is telling me, not based on kind of like how much I can afford to lose or that kind of stuff, right? The market just doesn't care, okay? So again, this, just to kind of put this back into perspective for you a little bit, this bar right here is where we're making all of these decisions, okay? So, and even from there, before we penetrate that high, 1, 2, 3, 4, 5, it spends 5 days kind of in this kind of really sideways channel. And then it finally just barely breaks up enough to get us in this trade at 130, 123.38, okay? And then as soon as we get into that trade, we're going to put in our stop loss, okay? All right. Hopefully that's clear. Let's see. Yuri wants to know what's the link of the YouTube channel of this webinar. Go up to, thank you for the question, Yuri. Go to metastock.com, or I'm sorry, youtube.com/metastock. And while you're there, make sure to subscribe and like. That does help quite a bit. My contact did just something really weird. So give me just a half a second while I kind of fix it. All right. Okay. Well, one of the things that is interesting is I'm blind in this eye and I can't see out of this eye. So it makes things a little bit more interesting when contacts go weird. Thank God for contacts too, by the way. I don't think I'd be, like, I can't see the wall without them. Anyway, so here we finally trigger into that trade. Here we kind of get into that trade. We put in our stop loss, and lucky for us, it goes the direction that we expect. Okay, and quite a bit too. We went from 123, and it looks like it's sitting at about 135. And as long as it's kind of going in the direction and we've got our stop loss in, there's not a lot of management that we have to do with this. Okay, so we're happy that it's moving in the direction. What eventually happens is it kind of hits a little bit of a resistance. Stocks don't always go straight up. Sometimes they do for quite some time, but eventually it'll start to hit a little bit of a resistance. And then the market has a general tendency to move up in more of a stair-step pattern than a direct line. And you guys know that. It's very, very common sense. So what happens is we have a bit of a, here is where we had our shift of momentum to the downside, gives us a sell signal on the chart. And right here is kind of what we're looking at, right? So when this happens, as long as we stay in a bullish zone long-term and a bullish zone short-term, we're going to go ahead and stay in the trade. We might start to kind of pay a little bit more attention to it, but we expect pullbacks, especially if we're trading this for a while. And with RMO, as long as it's in a trend, you're going to stay in a trade, okay? But when you do have this pullback, we're going to basically kind of just pay a little bit more closer attention to it. If it's a temporary pullback and it resumes the current trend, which is what happens in just a couple of days, then we're going to be happy with it. But if things start to go bearish, then we want to get out of the trade, because if it goes bearish long-term and it goes bearish short-term, then we want to kind of reassess what we're looking at, okay? In this particular case, we do stay bullish long-term and short-term. The pullback happens and it lasts for right here, starts to head back up, and we have that exact same shift of momentum to the upside just 2 days later. So the same signal that got us into the trade in the first place is giving us another buy signal. And when this happened, Rahul says you can do one of two things. You have to do one of them. The second is optional. The first thing, the optional thing, is you can buy more stocks. And I never do this, okay? I never kind of double down on the position. I buy the amount of stocks that I want to buy right here. And so that's optional. I don't like to do it. I like to buy the whole position that I'm willing to risk right up front. Okay. The thing that's not optional is, we went up, we pulled back a little bit, and now we anticipate at least that the stock's going to go up. So what we want to do is we want to look for a place to lock in some of those profits. Okay. And it makes sense. Okay. The stock market moved up, it pulled back a little bit, and it resumed up. It set up a new support area. So it would make sense for us to lock in some profits by putting our stop up. And we do it the same way. So I'm just going to grab my horizontal line tool in MetaStock right here. Here we've got the additional buy signal. Here we've got a low. Here we've got another low. I'd say those lows are about the same, but I'm going to say right here is the fractal low. Okay, whether we're one of these is going to be a little bit lower. This is where the support area sits. Okay, so I'm going to then put in my new stop loss. My new stop loss is going to be right here at 131.55. Okay, and then we had a little bit of a pullback. Now here's what we're waiting for here. Okay, so we had a little bit of a pullback. We've been going sideways, and just recently, we went down below zero on our short-term trend, right? So at this point, I'm either going to wait for it to go bearish long-term, in which case I'll look to structure a short trade or get out of the market if you're not comfortable shorting, or I'll wait until we get a stop loss. Or if the trend continues, the long-term bullish trend continues, I'll have a really good place to move up my stop loss. There's a few things that this is, and I apologize, I don't think we'll have time to look at more charts than this just because, well, I'm kind of wandering, I guess. I'm taking a lot of time to explain it. But there's a few things that I like about this. It's very objective. It's not extremely exciting. You know, we're moving up our stops, and hopefully we're moving up our stops in conjunction with the trend. But the reason I like to show it is, you know, with MetaStock, I can show you like scanning, system testing, and expert advisors. And, you know, there's so many tools that we've been developing for the MetaStock architecture since the 80s. For the last 27 years in a row, it's been rated #1. This is a simple method, though. I like to show it because it's objective. I think it can help you, at least not help to start helping you trade in the proper direction. And I think it's something that can be beneficial for you if you're new to the market. So that's why I like to show it. It's not extremely aggressive. It's not extremely exciting. And I don't think trading should be. What I generally want to look at in my trading is I want to be able to look at not getting in at the exact low and not getting out at the exact high. A friend of mine by the name of Robert Deal used to go around the country with us and talk about trading. And one of his favorite sayings is, bulls will make money, bears will make money, but pigs will get slaughtered. What I'm looking to do in the trading that I'm doing, regardless of what I'm looking at, is look to determine what the overall trend of the market is, limit my losses with stop losses, and trade in the direction of the overall underlying trend. And it's just a methodology that works well for me. I'd encourage you to play with this. This is, like I said, the very first method I used to start making money with in MetaStock. And it's part of every version of MetaStock since 10.0 and later. So thanks for Rahul to kind of providing that for us. So Timothy asked the question, what about volume when entering a long trade? If you're following, and I would recommend, if you have MetaStock, thank you. But if you do start to use this, I would recommend that you look up on our youtube.com/MetaStock channel and find Rahul teaching it. He does a better job of teaching them. Typically, he does look at volume in some systems, and just look at the video and how he kind of uses volume. In particular, when I'm using RMO, I'm not looking at volume a lot. But I would recommend, Timothy, that you look at his training on our YouTube channel. He does a good job with it. Okay. Scott says, Jeff is always a great teacher of the MetaStock and the add-ons. Thank you, Scott. I appreciate that. The next thing I want to show you, because there are, well, probably one more thing. And then we're going to get to Peter, who I'm sure will do a great job. But he always does. But the next thing I want to show you, a second gem of MetaStock, is its automatic trend detection tools. And to show this to you in a way that I can do it in about 10 or 15 minutes and stay on time, what I'm going to do is, just like we did with the Rahul Mohindar templates, I'm just going to apply the template. In MetaStock, there's a lot of indicators that will automatically identify long-term, short-term support, resistance, trend lines, etc. And what we did in just like a recent version of MetaStock, because I asked the programmers to include it, was to actually provide a template that shows these levels on a chart. So I'm going to go ahead and apply the template. We'll go ahead and right-click here. We'll go to Apply Template. Okay, and I'm going to go to the name of the template as it exists in MetaStock is Dynamic Trading Tools. So I'm going to go ahead and click on Apply right here. Okay, and we'll just go ahead and not worry about saving the changes to that. When I apply this to the chart, it's going to put a lot of levels on a chart for me. And I'll just walk you through what they are very quickly. Right here, we have long-term resistance right here. Broke right here, right before it moved up, right? You'll also, I'm going to make it a little bit bigger because it's going to be hard to see on the internet. But right here, that line that I just made solid, that's actually a short-term resistance too. It's not very visible when it's kind of in its default configuration, but it is automatically drawn on the chart, okay? You'll notice that this is an upward trend line that it's been putting on the chart since it started to detect it. And this, you've also got some resistance levels like this is, I'm sorry, some support levels. This is a long-term support right here. And this is, there's also a short-term support on here as well, which I'll also make just a little bit more visible for you. Now you can see it on the chart where it's seeing those support and resistance areas. Now, a lot of people want to trade based on breakouts of support and resistance. So the fact that these are automatically kind of just programmed into MetaStock are pretty handy. I like to look at them at a chart. I might have wanted to see waste management when it was maybe getting up above this level, right? Like when it broke through this long-term support area right here, that might have been a good opportunity to go ahead and buy it. And so one of the things I love about MetaStock is our ability to scan. So this is automatically kind of drawn on there. There's an expert that kind of helps explain it to you as well. I love our expert advisor. But if as a trader, what I want them to look at is breaks through support and resistance, either on a long-term basis or short-term basis, there is a very, very easy scan that I can run. This is included as part of MetaStock, and it'll just make a list of stocks that have broken through support or resistance. And let me show you how it works real quick. So I'm going to go ahead and open up what we call our Power Console in MetaStock. I'm going to go into the scanner. Okay, we call it an Explorer. I'm not sure why we call it an Explorer, but I kind of like it. It has kind of an Indiana Jones type of a feel to it. What I'm going to do here, though, is I'm going to go in and I'm going to come into like our index constituents list here. So we have breakdowns of like all the big indexes. And what I'm going to do is just because we're going to run out of time, I could talk about, and I have talked about MetaStock for weeks and weeks and weeks on end on some of the travels and trainings that we've done. But what I'm going to do is I'm going to set up a real quick scan of the S&P 500. And what I'm going to do here is I've got a list of all of the explorations. The one that I'm looking for is called DT support and resistance. Okay, there's a couple of versions of this. This is a longer term version, so it's going to look at long-term support and resistance. It's going to look for penetrations of those. There's also a shorter term version of that, as well as trend line breakouts. You can actually scan with MetaStock to find anything that's broke through a trend line. So what I'm going to do here is we're going to run the long-term support and resistance. I'm going to go ahead and start it. Okay, I'm going to go ahead and let it run. Okay. We'll do, okay, looks like I do have two lists selected. We'll just do the local ones or the online ones real quick. It's going to go ahead and pull the data. Now, I will say while it's running, I won't be able to get through this, but it's going to run a lot faster for you because I'm not only scanning, which means it's pulling all of the S&P 500 stocks. I'm also broadcasting my face and the video, and all of that is very, very bandwidth intensive. So generally it'll run a bit faster for you if you have a bit of a decent internet connection. So, but it is going through all the S&P 500 stocks for us, and it's not really taking that long. So we'll go ahead and wait till it comes back. Okay, there you go. So right here, we've got a list of all the company names. If I want to find when they broke up or when they broke down, so break up would be break up through resistance, break down would be break down through support. I can sort by these numbers. You got like 200, 95, 0. Oh, this is the close. You've got what break up, and that has 95, break down, and that's 0. So what I'm going to do is I'm actually going to scan. Let's say we want to find stocks that have recently broke up through resistance. If I scan on this right here, this number here in this column says Activision Blizzard. I love Blizzard. It's a great company. 400, well, at least they make good software. I can't say, I'm not recommending you buy the company, but it broke up above resistance 451 days on 174% of volume. Okay, 451 days ago is way too far. I'm going to scan down or scroll down until we find something that's a little bit more recent. So that's pretty easy to do. We'll just kind of come in here and see what broke up. And we can go as little as we want. Like Clorox just broke on 12%, broke up. Campbell just broke up. We had Paycom Software open up 1 bar ago. This is a daily scan, so that would be 1 day ago. Merck & Company, Danaher, Bristol Myers. And so very, very easily, if I'm just looking for stocks that are breaking out, not above old resistance zones, this is a great way to find them. A very, very easy to use scan. A lot of people like to trade these because once you get through an old resistance level, generally has a tendency, well, I'm not going to say what it's likely to do after that, but generally there isn't historical resistance once it gets through those resistance levels. Let's put it that way. Remember, I'm not recommending any specific way of trading, just kind of giving you, this is a great tool though for me. I might want to go look at Clorox or Paycom or Campbell. All of those, if we looked at the chart, would be breaking through these support levels. So, and I like to show that because of a couple things. If you're looking for breakout trading strategies, it's also a good way to show off our scanner. But with our scanner, you can scan for just about anything that you want to. All of the stuff, obviously, like with Ed, he talked a lot about the artificial intelligence stuff that they've been working on. Peter, in just a minute, is going to talk about Magic Trader and how you can use it to scan for things. Scanning is one of my favorite parts of MetaStock because it allows me to take a list of 500 stocks and just like we just did right now, narrow that down to maybe the 5 or the 10 that actually have opportunity. Okay, and so by being able to do that, I find a lot of opportunities that I wouldn't because I'm not looking at 500 stocks every day. No way. Just don't have the time for it. Just don't have the bandwidth. And it's tools like that that are why MetaStock's been rated #1 in its price category for 27 years in a row. So there you go. Let's take a look for, Jonna said what? Let's see. Jonna said, this is a really cool indicator. MetaStock has more than what I originally thought. Great info, well explained. Thank you. I'm glad you enjoyed it, Jonathan. He then said, what is it called? It's called DT. The template is called Dynamic Trend. And we just started including it in MetaStock because I would show people how these indicators work and then send them a template by email. I'm like, let's just send it to people that have MetaStock. So there you go. That looks like the extent of the questions. We're doing well on time. Let me kind of go back in here and we'll kind of advance through a couple of slides real quick here. The other thing that I like to show is actually Haguro. And I don't think we're going to show that just because it's an easy thing to kind of skip over. I won't be able to do it any justice in 10 years. In 10 minutes. Not 10 years, 9 minutes now. And I definitely want to let Peter speak for his whole time. He does such a good job with doing these. So Haguro is very interesting. It's one of the projects. I met a guy down in Australia one year, and he ran the Australian Technical Analysis Association. And we got to talking, and we developed this methodology called Haguro. It was originally published by a guy by the name of Siki Shimzu, and I'm sure Greg is going to kind of just tell me later on that I didn't say the word right. But it's free. It's included in MetaStock, and I'm sure if you go to youtube.com/MetaStock, you'll be able to get a video of me or even Gary Burton, the guy that helped me build it, explaining what it is. It does a really good job of helping you identify weekly turning points and support and resistance. And it's one of the things I'm very, very proud of. So take a look at it. I did all the initial math for it, and I think it's cool. I think you should look at it. So, and it's included for free in MetaStock. So we'll go ahead and skip through these kinds for just a second. We're going to go ahead and talk a little bit about pricing for a minute. We have 2 versions of MetaStock. So if you're brand new to MetaStock, welcome to the stream today. I hope you're enjoying it. I hope you learned something too. I really think that everybody's done a great job. Yeah, with maybe the exception of me, but everybody's been done such a great job today, and I really appreciate kind of like them coming and spending time with us. So 250, we have two different versions of MetaStock. With the real-time version, we call it MetaStock RT. We have the DC version, we call it MetaStock Daily Charts. Okay, with MetaStock real-time, it actually includes MetaStock, which is everything I just showed you, and all the scanning and the testing, the stuff that we've been talking about all day. It also includes a product that I haven't even mentioned that's called MetaStock Zenith. And with MetaStock Zenith, just to kind of give you some quick numbers about that, it's a competitive product to, let's say, Bloomberg. They spent $1 billion designing it. It's a product that basically a lot of hedge funds and mutual funds actually use to help them identify trades, and that's included with our real-time costs. The reason I bring that up is Refinitiv, who used to be Reuters or Thomson Reuters, are famous for the news that they have. And we include a premium news service. So if you're interested in news, go to metastock or youtube.com/metastock and watch some of our Zenith videos. Some of the best news on the planet. You know, I'm a little bit biased, but they did spend $1 billion on it. It covers 98% of the global market cap. They have 250 plus reporters and 2,000 plus reporters and 200 plus news bureaus. It's a really, really, really good news feed. So that comes as part of it. You'll also get the MetaStock real time, which is all the scanning and the technical analysis that we've been playing with today. All that's as part of it. For real time, you'll pay $250 per month. Okay. We also have an end of day version of that, which is $69 per month. And the software, as I said earlier, has been rated #1 for 27 years in a row. Here's the thing, you know, what I've done today is I've put together a package that allows you to buy 1 month and get 2 months free. So if you subscribe to the first month of MetaStock, we'll give you your second and your third month of MetaStock for free. If you do that with the DC version, that's basically going to allow you to try MetaStock for about $22, $23 a month. Okay, it's really, really cool what's included. And then for the real-time version, you'll pay $250 a month, but you'll get 3 months for that. So you'll pay less than $100 a month to get MetaStock for a full month. As part of that, now, I mean, basically, like, we do have costs for all of the people that we set up and stuff like that. So we call this our extended trial. But we're confident enough with the software that if we start trading, if it starts helping you make money, you're just going to keep it. And so we're going to give you the second and the third month for free. We're going to have, in addition to that, premium training that's available. We call it the Unleash the Power of MetaStock. It's a digital workbook and an online trading course that's going to go through. It talks about RMO. It talks about system testing. It talks about scanning. It talks about all of the really cool things that we like about MetaStock. That normally, we only charge like $150 for that normally, but we're going to include it for free. In addition to that, but wait, that's not all you get. But in addition to that, we want to make sure you use it. We want to make sure you understand how all the tools work. And we offer a service for brand new customers that we call the white glove installation service. And what that does is that'll have somebody give you a call. We'll set up an appointment when you get in touch with us. We'll actually spend up to 2 hours on the software with us. Yeah, we'll answer any questions you have. We'll show you how the major tools work, and we'll make sure everything's installed for it. Because we're confident that if you start to use MetaStock, it's going to be helpful for you. And we're also confident that if it's helpful for you, you're going to keep using it. So, you know, our retention is really, really good on these extended trials. And they do such a good job of kind of helping you get started. There's also a service that I want to talk about for just a second that's called learnmetastock.com. It's run by Kevin Nelson. It's about $99 per month. So what we do with that, it's basically a website designed to teach you how to use MetaStock. He goes in and he shows you all the things. He does webinars a couple times a week. He's got hundreds of training videos. And one of the things that I would recommend that you do is you do an extended trial of that at the same time you get MetaStock. So it's $99, but you'll pay $30 basically. So you'll get through your second and third month for free. That means you'll pay about $33 a month for it. And it's worth it. It's going to show you everything that you need. It's going to show you how to use the tools. And he does a really good job with that. So that's optional. You can get it if you want to. I would recommend it. Because one of the things that I've actually brought on a new sales guy this week. And I'm making him go through the Learn MetaStock videos because it's so helpful to help him get up to speed. And he's like, dude, everybody should do this when they're new to MetaStock because there's just so much to learn. And that is the last thing I think I'm going to talk about. With MetaStock, you know, there's so many tools that are in there. It's been rated, we've been working on it since the 80s. It's been rated #1 for 27 years. Like in a row. My youngest sales guy is 28 years old now. Like he was a year old when we started winning the award. That's one of the things I love about MetaStock is I want to show you some things that'll be helpful for you. I hope you like Armo. I certainly love it. But I also think out of everything, you know, I've been in the market for so long. We've seen competitors come in. We've seen them go. One of the things that I've always loved about MetaStock is it's a product that pays for itself. #1. #2, you've seen all these products that come in that are like thousands and thousands of dollars that just people grow out of very, very quickly. So with MetaStock, it's definitely something that as you learn, it's a toolbox. As you learn how to use that toolbox better, it's going to work better for you. So to get the buy 1, get 2 month free trial, which will include that that white glove installation service, the training, the software, the data that you're interested in, you can go to metastock.com/trader summit 3-for-1. But I would recommend this give us a call. You can call us at 800-882-3040. You can visit us online at metastock.com/sales-chat. We'd love to kind of help you. We'd love you to understand, kind of be able to talk to you about the different products that are available. I'd also add that, you know, some of the speakers that we've had today are absolutely phenomenal. The Traders Pack, usually what I try and do is just cram as much value in there. So in addition to getting kind of that Learn MetaStock and the Unleash the Power of MetaStock, you can get the 12 months of Trade Trend, as well as all of the training that he talked about at the very first of this. You can get this Jake Bernstein setup and timing triggers. You can get that Fulgent AI for 3 months. Peter's going to come and he's going to show us a brand new product that the people that have tried it absolutely love called Magic Trader. He's going to do that right as soon as I get done blabbing here. Then you'll get 3 months of that. You also get 2 years of Stocks and Commodities magazine, your Unleash the Power of MetaStock. All of that's included. Normally, if you bought everything separately off of the website, it would cost you $3,985. Here, it's $1,691. So give us a call, 800-882-3040. I'm looking at my water bottle, but it's empty and wishing that it had water in it. I'm going to get that in just a second. Give it a try. There's a reason that it's been rated #1 27 years in a row. So I hope you try it. I hope you like it. The new sales guys that we brought on, and I've been training them all week. I'm like, I hope you enjoy working at MetaStock half as much as I do. But I'll say it this way too, for those of you that are getting MetaStock, I hope you enjoy MetaStock at least half as much as I do. I couldn't trade without it. 800-882-3040. So there you go. Okay. Move Camera says, love from India. It's good to have you, Move Camera. I don't know what you're asking about with the 5-8-13 moving average strategy. So drop me an email at jeffrey.gibby@metastock.com. Jose, Jake Bernstein was the speaker we had just a couple speakers ago. So there you go. I feel like I did a pretty good job there. All right, let's go ahead. Let me get my headphones on. We're going to talk about Stocks and Commodities magazine, the sponsor of the show. They've been sponsoring us for like a decade or so now with the summits. We've been working with them forever. I've gotten a Stocks and Commodities magazine. This is actually mine with my name on it. I've been getting it consistently since I think I started at MetaStock, so I've got like 25 years worth of issues. You can get a free copy. If you get that Summit Action Pack, you'll get 2 years as part of it, or you can just get a free issue. If you're watching on YouTube, just go to metastock.com/trader summit, which is magically going to appear in the YouTube chat right now, and sign the registration form. You can sign up for all of the free bonuses and that kind of stuff today. So, okay, moving on. Our next speaker is a gentleman by the name of Peter Dalal. Peter has been working with us. Oh my goodness. I tell you, I need some water. Peter has been working with us for decades now. When we just started over in FXT or in business development, he had developed an insanely popular product called FX Traders Advantage or FXDA. People loved it. We now have a new product that he's released. We released it a little bit, towards the very tail end of last year, called Magic Trader. I will say this, the people that try out Magic Trader absolutely love it. The people, it does such a great job. Peter's going to talk about the catalysts that it offers and kind of the catalyst for better trades, that kind of stuff. But I would encourage you to try out Magic Trader because the people that actually use it love it. So that's my introduction to Peter. Peter, how are you doing today? Peter, your microphone is muted. So if you just click on the mute microphone, we should be able to get you going here. Jonathan, let's see. Oh, there you are. Jonathan, my email address is jeffrey.gibby@metastock.com. You're welcome to email me. I'll also type that into the chat. Peter, how you doing?
All right. How are you, Jeff? Thank you for having me on this webinar.
You're welcome. We love having you, Peter.
Thank you.
All right. I'm gonna basically get out of the way. Your turn.
All right. Can you see my screen?
We can. Yes. What we're seeing right now is the unexpanded PowerPoint.
All right. So what we're going to do. All right.
Okay. Now, what we're seeing is kind of the speaker view, and I know exactly how to fix that.
Okay.
If you just click on where it says display settings right above that.
Yeah, display settings, yeah.
Mm-hmm. It should allow you to swap presenter and slideshow.
Okay, perfect.
Yeah, first try. All right, Peter, I'm here if you need me.
Okay, no problem. Okay, thank you for coming today. Today is 6/12, and I appreciate everybody coming here to our world of Magic Trader. Okay, before we get started, I will mention everybody that copy of all disclaimers are available through themagictrader.com site, also our Facebook group, and also available from MetaStock. And all disclaimers we're going to include here will take some time because the lawyers want us to include them. Otherwise, I could finish in 5 seconds, right? But it is required by law, and that's why be patient with us, and I'll be quick. So entire discussion today on this webinar training is solely for education purpose only. No recommendations are being made or will be given here to buy, hold, or sell securities. All trading will solely at your own risk. Please consult your licensed investment advisor, lawyer, accountant for advice before making any investment decision. Past performance is not indicative of future results. I'm not a security attorney, advisor, or an accountant. Trading spot OTC, commodities, bond, mutual funds, ETFs, notes, foreign currencies, derivatives, futures, options, cryptos, REITs, they all fall under either securities or market vehicles or instrument, and they involve substantial risk, and you could lose all your money and sometimes more. Collectively, they are all falls under instrument or securities. Your trading results may vary because the risk factor is high in trading instrument. Only genuine risk fund should be used. If you do not have extra capital that you could afford to lose, you should not trade this instrument. You should be aware of the risk and be willing to accept them in order to invest in such instrument. No safe trading system has ever been devised, including Magic Trader, and no one can guarantee profits or freedom from loss. CFTC Rule 4.41, the results discussed are based on simulated or hypothetical performance results, and that have certain inherent limitations, unlike the results shown. For an actual performance record, these results do not represent the actual trading. Also, because these trades have not been actually executed, these results may have under or overcompensated for the impact, if any, due to the certain market factors such as lack of liquidity. Any testimonials may not be representative of the experience of other clients. Testimonials do not guarantee future performance or success. Hypothetical simulated performance results may have inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those we're going to discuss here. In hindsight, trades looks great. That doesn't mean that they will always work the same. We often talk about the disclaimer, and this software also has an option trading capability. So options involves high risk and may not be suitable for everybody. Prior to buying or selling options, get a copy of characteristics of standardized options. And I also get a copy of the supplement from docc.com, and look for the symbols once you get the software to buy calls or puts. It's on the software. Intellectual property right. This software is based on several patents. We have patents pending, and we are also filing new patents in a process. So all these intellectual property includes service mark, trademarks, register logo, and everything what you see is more or less copyrighted. So please respect our intellectual property rights. Last year, the Congress passed the Felony Streaming Act, and a lot of streaming things, what you see here, it falls under that law, and now it will be falling under felony, so please be careful. Now this is related to my company. Lawrence wants us to state here that Magic Trader software falls under simulated trading programs in general. Magic Trader is also subject to the fact that it is designed with the benefit of hindsight. No representation is made that any account will or is likely to achieve profits or losses similar to discussed today here. Hypothetical results may not adequately taking in account the ability to absorb losses or losses and margin calls. Many traders are unable to survive several consecutive trading losses or margin calls. Magic Trader is good for all the market. Magic Trader is good for trading in any market as long as Refinitiv provides you the data feed. Now, testimonials are hypothetical in nature and not typical. MetaStock has an exclusivity on our products and services, so Dalal Enterprises earns the royalty from MetaStock. Now, you could use this link and go over that, and it's stated here that all the advertisements are truthful and should not be misleading. So this is what Lawrence added recently to all our disclaimers. Now we're going to talk about the topics of today. I do believe that there is a typo here. I just saw it. Apologize for that, but basically I cannot change it. But the most important points today that we're going to talk about catalysts. And we're talking about some ingredients and how they're going to work together. And these are fairly new, which I'm going to explain to you what that means. Even for Jeff, he has not seen this thing. I give him also surprise. And then we're going to talk about several securities which came on a scanner utilizing today's topic. And that will give you more insight how Magic Trader works and how easily you could find the trades. So this is a picture of myself as well as my daughter. My daughter is very instrumental in design of this Magic Trader, and this girl has worked many years almost 16, 17 years just on a magic trader. She has a substantial background into the trading and financial world. So do many other aspects because we have several businesses. And currently, she got married a few years ago, and now she works for Goldman Sachs and also helping me into the business. And Jeff often communicates with her. And I've been trading more than 30 years, different markets, different areas of Wall Street business. And currently I have series 3 and 34, and previously I had a series 6, 63, and 7, and a bunch of other licenses into the financial industry. So my goal today is to introduce you Magic Trader, which is a patented technology, and it has been in use since 2006. And we have trained many professionals of this industry with this technology. And it is designed to get a low risk pinpoint entries and exit and uses least amount of technical analysis. So I'm going to talk to you guys simple step how to find trades for the entry as well as for the exit, at least one catalyst and at least 3 magic ingredients which will allow you to make quick decisions while you are trading. And you're going to see many colors on a chart. Make it simple and use what we're going to discuss, and you will find trades with least amount of the risk. Now, I will talk a little bit about how it's been designed so you get an idea. I'm a technical trader, and I thought Jeff was traveling with me all over the country and couple of country all over the United States as well as a couple of countries overseas. And I realized that it takes too much time of my life, and it is also not suitable to overwork. So I figured out. So with the simple logic of when people cumulatively believe that we could pull a trigger to go long or short, that's the way I want to trade, and identifying by colors. So I went back to the basic, like a high school, identifying color, crayons or whatever, and apply to the candlestick with the different colors. So we could naturally identify them and keep the technical analysis to a shorter period of time using to find the trade. That was the whole goal of designing this software. Now, what I would like to talk today, talk a little bit, what is this catalyst in a magic trader? So it is a clustered specialized risk color candle right here, also known as a magic catalyst, to represent warnings, spot risk, and risk transition in trading. Most of the people are looking to get into based on just price, but I'm looking to get into the trade with the lowest amount of the risk. So my drawdowns are low. I'm at the low risk area, and I feel confident to pull the trigger. Especially people do not have much money to trade. This software communicates with them easily that, hey, we have a low risk. So they also start getting into the business, and keeping that in mind, this software was designed accordingly. So basically, anybody can identify the colors. That's the idea. So this is a yellow bar or a candle. I'll get into this symbol description in the next few slides, but for now, recognize the color. So yellow color, then this is a turquoise color and a black candle. And black candle is empty. That's what you need to identify on the chart. And in a few minutes, we're going to also jump into the actual magic trader to just recognize them. And these are the bullish, and also we have a neutral believers shown by on a black empty candle goes with the bullish, and a filled candle goes with the bearish. And bearish believers also are having their own colors. One is the filled black candle, then this is a purple candle, and this is a golden candle. So that's how you recognize them on chart. So to make it simple, I will bring them to have them recognized on the chart, so it becomes easier for people to remember. So for instance, this is a yellow bar, this is also yellow bar, this is also yellow bar, then this is a black candle, we call the neutralizing candle, then the bunch of turquoise bar, and they have their own functionality, right? So for now, we just try to identify where they are. So on the chart, so you could see here, bunch of yellow bars showed up, right? So that's how you recognize them on any chart. And that's what we're going to talk and how to use them with a bunch of lines here. So as we are here, I'm going to briefly talk about things. So when we go back to the slides, you recognize them. So this is called a direction line, right? It says here. Then this is a health indicator overall. And these two lines are part of the health indicator. Then there is a spike, we call them, but this is an entry spike. When you put the arrow, it's going to show you what it is. Somehow it is giving me a hard time. It's okay, because too much resource is being used, but right here. So you could see here, that's a entry spike. It has a color, you can't miss it. Then this is a pure health, right? And this is the ribbon. And actually all ribbons are not same. This is specially designed with keeping in mind those which are affected by the time is calculating these kind of ribbons. So having said that, let's go back to some theoretical knowledge. So we're going to talk today, especially because everybody's mentality is a bullish market. So we're going to talk about bullish catalysts. So as you say before, right, these are the catalysts and these are the different classification. So yellow bar, we're going to talk in detail today, shows you a warning before we go bullish. So we could take advantage of this colored candle on the chart and figure out what will work with that. So we could enter the trade. Same way applies with the turquoise bar, which identify the spot risk, including suppose you're going down and you see this catalyst. That means it's slowing down the downward trend, and then we're going to look for the yellow bar. Simple, but they are bullish in nature. Suppose you already in trend, trending up, this will allow you to take another entry. And a black candle shows you that there is a fight went on between bullish and bearish believers, and bullish believers seems to be taking control. So in a real time, this is unique time, you could identify the fights between bulls and bears and see who is winning. And that is a big thing for a trader who is trying to get low risk entry and identify who win the game and take the entries accordingly. So these are the color candles that what I'm looking for, a catalyst to get into bullish trade. I will show you the ingredients in few that make this catalyst better. In entry or exit selection process using Magic Trader candlestick spectrum, so the chart you see, the candlestick part is called spectrum. Adding clustered specialized risk colored candle, also known as magic catalyst, to at least 2 out of 5 ingredients, a catalyst can identify stronger entries and exit at a low risk. So basically, you need 2 ingredients, which I'm going to talk in a minute. What is that ingredient means? But we need to know that we need at least 2 of those plus 1 of those. Then we could take the entry. More things matching, it gives you more stronger entry. So what the secret is into the trading, what I discovered, that one can identify stronger entries and exit at a lower risk by adding the clustered specialized risk colored candle, which we call catalyst Y. Catalyst Y because it has a catalyst as a Y yellow color, right? Y means yellow color is to identify that particular catalyst. 2, at least 2 out of 5 ingredients. So in this particular example, today we're going to talk about ingredient number 4 and 5, and pretty soon I'm going to show you who they are. So this is one way minimum you could enter the trade with low risk, and that will result into catalyst Y45. So this is newly added, even though people who are using Magic Trader have not known it. And this is what I came up with to make it easier to remember. So this number can change 1, 2, 3, 4, 5, all of them, or minimum you could use from 1 to 5 ingredients. In this particular case, 4 and 5, because those are the example we're going to talk about it. And that makes a stronger entry. Not just ingredients here, adding catalysts. So it fires up the uptrend. So how to identify them is you pick up one of the color, as we talked before, that is been identified by catalyst CATY, and we are also identifying them as a one bullish magic catalyst. We add 2 bullish magic ingredients. Who are they? Pure health and horizontal time risk. So they are identified on the chart by vertical line, which is green color, plus horizontal time risk, or we call them ribbon. So in reality, what is yellow bar? Yellow bar or candle indicates the clustering of specialized risk, which creates the warning for bullish believers for low risk entry. So this is more or less the warning. We were going down, and now all of a sudden yellow bar came in. That means they warn you, short your cover and be prepared to go long. And then we need a bunch of these, minimum 2 of them, and that will give you an entry on the chart. So you don't need to do too much technical work. Technical work still exists here because you got to identify, but we don't have to worry about higher lows, lower lows, whatever we normally use on technical analysis. So this is designed to have earlier stage traders to enter into the business of trading. So we're going to talk about ingredients now. What is ingredient? It is a component which is a part of any combination. So combination means there are a bunch of indicators and they all work together, and you pick them up from the mixture and bunch of elements. So this is called element, This is called element. This becomes then ingredient. So this is one of the ingredients, and this is the second type of ingredients, and that makes the entry. So in short, you take a yellow bar, and through these symbols, one is the vertical line on a chart and horizontal time risk, and you're good to go. That's how simple it is. Now let's talk about 5 ingredients. We talked about already 2. So what it is in nutshell for bullish direction? I'll talk briefly and we'll stay focused on this setup here. So direction line is the one you show on a chart on the top of the chart. Let me go and pull back right here. So this is your direction line. This is entire is a health window, and these 5 lines are the health indicator, and it's called as a health indicator. So we need this vertical line in a direction line. Then there is a method to the madness here, how to do interpretation. Do not worry today. We talk about this sometime later. However, we're going to talk about this spike, which is an entry spike. Then we're going to talk about yellow bar. Then we're going to talk about pure health, which is right here. And this is the ribbon we talk about. So let's go back to theoretical knowledge. So they are all here. The direction line, which you just saw it. This is the purple line, value 4 for bullishness. Then blue line, +1. It has to be above 0 line. So that's already 2 ingredients. Third one is the entry spike, which looks like this. And I further put ABC designation, and there is a way to take advantage of that, and that becomes a part of the trading methodology. Then pure health, right, is shown by the thin line, which you saw at the bottom of the chart, and horizontal time risk. So when you take these 3 and add yellow bar, it becomes a designation of get Y 345. So if you don't know anything, you look for those numbers on a scanning, 3, 4, and 5, and yellow bar is designated there in a scanner with the CAT. So that's about it. Suppose you don't want to do trade with that, you could substitute with turquoise bar, black bar, and they all coming in a scanner or combination of that. So it becomes as simple as by recognizing numbers and colors, and you do not need to get stressed out. All right, so I made it a little further to make it simple to understand it. So it's the same thing what you see it, but more simplified way. You pick up a yellow bar, which is get Y, then a spike, which is triangle, which is numbered by number 3. Then you add it to pure health, which is identified by 4. Then horizontal time risk, and that is designated by number 5, and that makes a stronger entry altogether with get Y 345. That's what it takes to find the good entry, and you do not need to go analyze for hours. So it's like a click and go. Now what I did it, you have that in a manual, but I tried to show you where you could find that explorer to find 345 get Y. So this is the description of that. All the catalysts are here, then all the ingredients are here, and number 3, 4, 5 and get Y is also here. So this way it is very simple to find when you get the software where all these things are. Now what I did it, the explorer, you saw the name. I tried to put some tags there, so when you get this software, you also can find these things, where to find these things. So you pick up this explorer, Then I added custom list because I wanted to scan few of them, right? And they have their own number in the Explorer 3, 4, 5, and Catalyst Y means yellow. And for convenience for you to understand, I put it the same number on top, which you saw on my charts before in a PowerPoint. And then I picked up the date randomly, and I found these trades, right? And I short it out, so it's easier for you to stay focused. So on a 524 day, on a daily chart, I identified a bunch of opportunity. Suppose I was looking to trade. So this is the American asset. We're going to look at the chart in a minute with all the designation. So now you have easily trading method developed in your mind, how to find it and how to pull trigger in a matter of minutes. And these are the assets we're going to look at the chart shortly. The reason why we put the boxes are here because we are using only number 3, 4, 5. That doesn't mean they don't exist. The other ingredients are there. But I identified on this charts, bunch of charts here for these assets, right? The number 1. So they have that ingredients also matching. So once you see this display again on a YouTube, you will have easier way to digest the methodology we are using to find the trade. So my focus is yellow bar and find these 3 different items. So in this case, these 2 securities has met all these conditions. This has met all the conditions. What we are focusing, get Y 345. So what I did it, I pulled out one of them, which is AAT, and you have the date. So people who has Magic Trader, they could go and also find the date 524, and you will see the same thing what you're seeing now. So for convenience, I screenshot that and put the same thing what you saw before. 345 and cat is here. And I designated yellow bar, the spike is here, pure health is here, and ribbon is here. So we need 3, 4, and 5 on a 524 date. Now, the date, what you see here is the base on the right of the triangle, and there is a supplement given by MetaStock once you have the account, how to trade with the spike. So I don't want people to get confused. It's very easily to understand it. And you will have that advantage of understanding quicker. So what we're looking here on a chart, looking for yellow bar, and these 2 lines are specially designed magic lines. It took me 6 months to design this thing. And each time frame has a different of them, but it doesn't matter. The idea of entry is the same. So you are above the magic line green, and you're looking for 345, which we just talked about it, and you're good to go. You don't need to be scientists. Now, where to put the stop? Usually we put the stop below this red line if we are going bullish. So that's about it. You need to worry about it, right? And this will give you confidence of trading with easiest way, and do not need to worry too much complicated things to learn overnight. So let's look at those catalysts on the chart. So what I'm going to do, I'm going to pull out several securities which we just listed. There are 5 of them, and we're going to identify them together. So we are opening security which was on the chart, so you feel confident how the chart looks like overall, AAT. And I'm going to find the date, which is here, right here. 524, and as you see, this triangle is here, then pure health is there. That's number 2, right? One is spike, second number is pure health, and ribbon. So 3 plus yellow bar. The results are very obvious what happened, and that's what you need to identify. Your scanner here identified right here, bunch of those, and you pick up, okay, here matching all these things, so 3, 4, and 5. If there is an extra here, it's good. There's nothing wrong with that. So it's more is better, right? The minimum I could trade with these 2 and a yellow bar, but in this particular discussion, we have 3 picked up. So, okay, we deal with those. So now what we're going to do, we're going to open up another one, and then probably we could ask few questions. People have it. And then I want to leave some time for Jeff also. So let's open up the other one. So 524, let's look at that. 524, right? So we bought it here. As I said, your stop should be below these things, right? And everybody can see what happened afterwards. So I'm going to open up the third one. $524 was here. We have yellow bar, we have pure health, we had ribbon, and on the left was spike, or in this case, we aligned with the direction line came into the picture. That's how it picked up. And you could see here, there was a direction line picked up, but still it is a trade, right? So sometimes, yes, we want to do everything 345. If it is not there, look at on the left and see if there is a direction line, health is good, then you could still trade. So 345 is only 2 or 3 trades, but you have to be flexible. You learn about minimum 2, you could add more if they are in the scanning, use it. So don't lose the opportunity. We already scan it. So these are 1, 2, 3. We need more. If the spike wasn't there, no problem. Let's see who else is there. 1 and 1. Then I would take a trade. And if you did not take a trade, look what you missed. You missed the whole ride. Look at that. How much it is. Let's see. So we were coming here and we went all the way from $10 to $10.95. It's not that much great, but percentage-wise, it's a good percentage, and the small guys will appreciate it. So that's how you find the trade. It will not be perfect looking, but you got to see it. And sometimes you get stopped out. Nothing we could do about it. In this case, it closed below the green magic line, but the magic line never crossed. So it's okay, right? And there was a support level which I could talk a little bit about it. This is a blue line. It comes with the software. I just made it dotted this time, but it's still close above it. So that's what it matters. And these are kind of scheduled event kind of magic lines. This is also falls under magic line, this dotted line. So security close above it, that's what it matters. So we teach you all these things, but I will trade it because I was already scanning the securities and opportunity was there, and I will take a trade. So let's see another one. Right here. So this seems to be new security. That's what a list data is available. That's why you see all the black thing. But idea here is yellow bar, health is there, right? And we are good to go here. And if you want to see it here, it had only 1, 2, 3, 4 and 5 items matching. So we could still trade it. So what we try to show you here, with based on a simple thing, you could pick up a trade and make few bucks. There is no guarantee. We all know that. But at the exit, somebody has questioned. I use normally the spike, right, as an exit. That's what I do it. So another way, if the spike wasn't there, if it closed below, I will get out, right? Because market is choppy. So I don't trust this market much. And I will always have an opportunity to enter again if it closes above it. So I have gone, or I will take less money. I'm a happy person. Now, as we are here, let's see what it did so good here in this Caravana or Caravana, yeah. Why so good? Look at here what transpired. The first requirement, CATY, then green ribbon was there, health was there, spike wasn't there, but HE was there, right? The ingredient number 2 and ingredient number 1, which is a direction line. So sometimes, right, you could have direction line and a spike existing, or either of them. So you could change those numbers from 345 to 145 if you want, and you could make your own numbers. I'm just trying to illustrate you today how I trade with the simple things, so I don't need to get stressed out and worry about too much technical things. But this is still technical analysis because I'm a technical trader. I made it simple for me, and then I introduced that first to Bernstein to correct their portfolio. And then I got a confident, wow, it can work like this? That's awesome. And my second challenge was with the FX solution. I got a phone call when I was trading Forex with them that, what do you figured out? That it's unreal. I said, this is what I'm doing it. And they were very shocked. So I did not expect it myself, because once you design and put it together, you are not sure that how dollar-wise it will produce. And that was shocking to many people. But that doesn't mean it's going to work for everybody. And we cannot guarantee anything. We could lose money too with Magic Trader. So now let's see here. Yellow bar was there. The health was there, the pure health. The ribbon was there, spike was there, and this vertical line was there. So you got to just eyeball it, right? And pick up your entry. Now, give you a little bit ideas. I use these little things. The software comes with the forecasting. And this is one of the best feature. People like it. And, they can live without it. So what it says here, Magic Trader indicates earlier highs plus 3.2. What does that mean? Its earlier stage is making a statement that we are going to the moon. Not necessary every time it will happen, but it so far so good, right? At least doing something. So I take the advantage, even though it's a red candle, I will take the advantage. If I see it, I'm going in there. So in this case, you are earlier into the game, and it's telling you we're going to go higher. Look here. It says again 3.2. So you could add more securities. So this is your, suppose you missed the yellow bar. So what? If the circle comes in with the number 3, and number 2 shows the risk on a scale of 1 to 6. So you get confident. Oh, it's going to go. Is there any guarantee? No, right? My another favorite thing is in a min risk reversion area. I have forecasting. We're going to go higher. So I add a lot here or another security here. And that's how, right, I trade. I just want to simply show you how you could take advantage of this software. Now let's open up one more or two more. So it's the same concept. So many opportunity, and I picked a few of them out of many of those. And this happens in every time frame, in every type of security, bond, forex, cryptos, you name it, same thing. There is nothing special about that. Oh, I need some different kind of things for different things. No. And look at here, yellow bar, the spike comes in. These are all in a scan. This pure health is there, ribbon is there. We good to go. On top of that, we have our direction line right there. So these all things are here. So you don't have to match and mix and match. You got to pick up from here and get used to adding those numbers. 1, 2, 3, 4, 5. 5 items matching. Only thing it wasn't there was the what you call other turquoise bar and neutral bar. So what, right? So basically, later on, you're going to learn this number has some meaning. We just did a test in alert room. Hopefully somebody is there in the audience that I have an access given that the institution taking their positions, and we've been teaching here. This color indicates institution positions right here. Look, institutional color they are entering into, and we got the confirmation on many securities by one of the biggest fund where they manage a bunch of things, right? And I've been seeing these things since we started, actually, including Bernstein, right? But for a general public, it's hard to believe, but we are doing such a thing in our alert room. I'm showing them transparent way that, hey, they're taking position. We're seeing these colors. So it is nothing new. I was one of them. That's how I know. So it's not a big deal, but I wanted not to talk to them anymore, and I could give this power to little guys, right? There's no guarantee every time it will be true, but we're seeing them over and over again, institution stepping into. Only way we know when we get this real confirmation from some of them, and that doesn't mean they are right either, right? But somehow we see the color, but there's no guarantee, and I'm not promising it will work all the time, but at least it helps a little bit. So let's open up another chart. Look at here, yellow bar, pure health, and ribbon, and spike. Be good to go. Everybody can see what happened after that. Another one. This will be the last one, okay? And if somebody wants to see it, we could see it, or we could help them. But we are not going to give you any recommendations. So here yellow bar came in, right? And sometimes when it's congested, wait for a day or two. Nothing wrong. Suppose we show you that it's parallel, right? So direction was clear. Spike came in, then you enter here. Nothing wrong with that. And you match with this 3.4 with the pure health and that. So you don't miss the trade. But in this case, the software already had figured out, right? Here is yellow bar. Then you got to trust the software, I guess. 1, 2, 3, 4, 5. What else you want? So make it simple is better. Initially, you have to do that way so you feel confident. Then we also teach you how to become professional trader, then institutional trader. We do that. So Jeff, anybody has question? Because we are into the last few minutes and you need a time too.
Right. Yeah, we do have a question. We do have a few questions that are coming in. Can you hear me okay, Peter?
Yeah, I could hear you.
Okay. The first question was by Randy. He wanted to know, can you use this to trade the futures ES on a 15-minute chart?
I also traded future first time with this software in 2006 and number of years. So basically 15 minutes, it goes all the way up to 1 minute. But I want to warn you, make it simple. Don't use all the indicator. My computer can do live with an expert live, because it will drain a lot of resources. And in a training, I show them, it does about trillion calculations or more. And I show in a training, recorded training, it's mind-boggling. And it is not a normal software because it was designed for institution, and Jeff was nice enough to bring it to retail, right? And hold it to myself between me and my clients, right? So yes, you could do with 15 minutes. So you want me to show him? Because I don't think we have time.
I was going to say, if you want to, you can pull up a
I
chart
don't
real
think
quick.
we have time. And
we are also,
yeah,
Randy.
Yeah.
Get in touch with us at metastock.com/sales chat.
Yeah.
We'll send you any chart you want.
Right. I could do whatever he wants. Yeah.
Yeah. Monica says, thank you for indicating where to place the stops. Do you also use targets? Thanks again.
Yeah, targets. So what we do here, Magic Trader has, hold on a second. Okay. Inbuilt capability of forecasting the levels where it's going to go every time frame. And they are not Fibonacci's. I just want to be clear. It automatically calculates and adapts the market right here. Look at here. And I could go, say for instance, right here, right, it was telling we're going to go here. And also, if you go with a higher time frame, let me see if I could do that. Otherwise, I got to pull out another setup here. Weekly. Let's see what weekly shows. Or I could do clean chart and look at here. I did it anyway. So you could see here, it automatically calculates. You don't have to stress out. And right here, it told you, right, those are the levels. So it has an inbuilt capability of doing automatic calculation of support resistance, or we call them magic zone lines, right? And these are magic zones. And you could see here, it's a different kind of spacing. It adapts the market changes as we go and forecasts at the same time.
Okay.
So you don't need to calculate anything. Go ahead.
Oh, no, I'm sorry. I thought you were done. So Rob wants to know if it'll work on tick charts. I let him know that it would work on multiple tick charts,
yeah,
but not single tick charts.
And be prepared to have a high duty computer. I have traded myself futures, so I don't have a problem, but you got to see the limitation because it does so much calculation. The way in which I would do, if they want it, right? We don't need everything here. Go here. I'll show you. Or probably I could attach the simple expert right here. Look, you do, you see this here, right? Expert. That's what you use it. And it has a less kind of noises, you know. Let me show you. See, here is about 20, 30 of them. The other one has about 112, and it will put a stress on your computer. And if it is the case, even though your computer, then turn off few of them. We don't need all. These are advanced price perceptors. A will do it, right? These advanced perceptors are institutional setups. We give it to you too, right?
Okay.
So you could do it.
All right, that's cool. Cigar wants to know if CAT-Y, what CAT-Y stands for in your PowerPoint. Okay. And I looked at it for a second. I thought it meant yellow catalyst, but I wanted to make sure that was true.
That's why I clarify. It's easy to remember for people. CAT means catalyst. Y means yellow. Then I could do CAT T is a turquoise bar. CAT B is a black bar. So it's easy to remember these things.
Yeah. Jonathan says, thank you so much, Peter. This is a very unique system with a nice difference in approach from what is normally taught. Amazing stuff. Please have a great weekend. Jonathan, you have a good weekend.
Right. And see, for your own review, right, you were doing what do you call waste management before, right? So I'm not trying to be cute here, but how it is too easy to identify. That's what I'm trying to tell people, and people can do their own homework, right? Let me get rid of these. The way in which I do it, I keep it on one time frame because I use multiple time frame windows open, right? So I like to stress my computer and test it out, the nerve of my system, but I go back and forth and plot this thing when I need it. It's easier. Look, and Jeff, you should do that too.
We do have a question that Deepak's asking. Do you have a time frame that you recommend?
Okay, this is what I do. I like to see bigger picture to identify bigger trend, right? And my whole thing is monthly, then weekly, and I identify counter cycles on a smaller time frame, or they meeting, or they are in the same direction or not. Once you do a template, it's easy, right? So long story short, I like to trade once I know what the monthly is and this magic line going to the moon kind of stuff. We don't have much time, and there is another gentleman after this, so I would rather not take away time, but on another time we could show them, right?
Yeah.
So this magic
we still have a lot of requests for charts for this, so just get in touch with us. We'd be happy to pull any chart, any time frame that you want. Our sales guys are happy to do that for you.
Yeah, and basically it goes all MetaStock standard charts, right? I hope they could see on a right-hand corner, and you could do it. Only thing is different here is the way in which the magic lines are designed, because we are not using the traditional stuff. It is specially designed for each time frame. So basically, starting from 1 minute, 5 minute, hourly, 30 minute, 240. Daily, weekly, monthly, be giving you different magic lines. Because also this was what I learned doing institutional trading. You can't put all these things in a one way, and there are technical reasons why, and that's what one of the discovery I did it. So please try to understand this software is time frame specific software. Everything else more or less remains same, but especially these two lines, and that's where the separations are. Then several lines people are used to use it, so you cannot do those stuff and apply here. Two different methodology and two different, totally different approach we took it here, and more or less the whole software is designed from scratch.
Okay. I think we're going to have to call it there, Peter.
So,
thank you very much. Great job.
Thank you very much. And Jeff, go ahead and talk, whatever you take control of this thing. And I appreciate everybody asking questions. That's how we learn, right? And any question, you could reach out to Jeff, and he will reach out to us. And whatever they need, we'll give it to them.
Absolutely.
I'll create a chart and give it to him.
Yeah, we can do that without even getting you involved. We've got it. So I know there was a lot of questions for different charts that came through, and there's a lot of people here. We just don't have time to do them, but we're happy to pull any chart you want to see.
Yes.
Just get in touch. MetaStock.com/sales-chat. Thank you very much, Peter. I want to say thanks for coming.
I appreciate your help, and I appreciate everybody coming in.
All right. Thank you very much. Very good.
Thank you.
Okay. Let's go ahead and kind of change this over just a little bit. All right, good. Thank you for turning on the light for me. Greg, I appreciate it. Let's see. Sheena does ask a question. Or Mike says, is there an options application? And one of the things that I do like is when he does see like a good put or a call, it'll say call, or call plus plus, or calls plus plus, and this is just kind of generated by the software. And yeah, absolutely, it'll actually do that for you automatically. It does a really good job of doing that. With MetaStock, a lot of people, about 40% of our database uses options. And typically, though, what they're looking for is direction and the instrument. And that's where MetaStock can really, Magic Trader can really help people. It's because obviously, if you kind of have a good idea of what the direction you think is going to go and what stock you want to do an option on, that kind of helps most of the process right there. So yes, Mike, he actually has very specifically put together an options application. Sheena says you can plot the software on chart adoption itself for additional analysis. Typically, Ed was showing some plotted options earlier, and you actually can pull up a chart of options in MetaStock. That's not a problem. You can actually grab them, chart them. The issue is a lot of options just don't have much history because they only trade really actively for like a week or two. And so generally speaking, most options, you won't have enough data to apply Magic Trader to. You can see what they're doing, and you can definitely apply it to the underlying security, just not the option chart itself, Sheena. So thank you for that question. Thank you for Peter again. Great job. As I had kind of mentioned a little bit earlier, I'm going to kind of take just a minute here and just show kind of how, like here you had a yellow, this is the same waste management we were looking at from my demo. You've got your yellow bar, you've got like spikes, you've got all of these different ingredients that just kind of show you that the stock is likely to go up. The thing I like about Magic Trader is it really kind of lays everything out for you. It does a really, really good job. People that try this out absolutely love it. So let's go ahead and kind of just talk a little bit about the Magic Trader. It's huge. It's got 58 indicators, 40 explorations, expert advisors. He's put together 35 templates, and it has a very, very well detailed manual. It is fully put together for MetaStock, and so you do have your expert advisor, your system test. He showed scanning. I'm sorry, it doesn't have a system test, but he showed scanning and how that works in the program. The commentary is really, really good. It actually kind of helps you break down all of the different Magic Trader stuff, and you deserve to. I mean, you should try this out. It is a subscription product, and so kind of the way that works is normally it's $199 per month. Here at the Trader Summit, what we're going to do is we're going to do $149 as part of our introductory offer, and that's a locked-in $149 rate. So when we kind of bump it up to the $199, you'll still keep paying that $149 a month rate. It is just a subscription, so if it's helpful for you, keep paying for it. If it doesn't work, you can just cancel. I would encourage you to try it. The people that use this thing are just for habit fans of the Magic Trader Elite. So you can add this to your MetaStock account at 800-882-3040. You can visit us online at metastock.com/saleschat. The other thing that we're also going to do is for those of you that do the full Summit Action Pack today, we're actually going to include 3 months of the Magic Trader. So you'll get Jeff Tompkins' Trade Trend. You'll get 12 months of that. You'll also get all of that training that he talked about. You'll get the Jake Bernstein setup and timing triggers, 3 months of the Fulgent AI, 3 months of the Magic Trader, 3 months of learnmetastock.com, the Unleash the Power of MetaStock, 2 years of stocks and commodities. Normally the cost for that all separately would be $3,835. You can get it for $1,691. And I would recommend you try this. It's a great way to kind of start with MetaStock with all of the training, some of the best add-ons we offer. So you can get that at metastock.com/summit deal. You can give us a call at 800-882-3040, or we do have reps that can help you with it at metastock.com/saleschat. So I really appreciate everybody for coming today. Peter, that was a great session. Really appreciate you having there. And we enjoy having you at the event. You did a good job today. So our next presenter today is Steve Primo. Steve, I do want to say thank you to Stocks and Commodities real quick for sponsoring today's event. They do a good job. We really love having them as part of our sponsors. They've been sponsoring us for 8 or 9 years. I hope you're enjoying the show today. Our next presenter is going to be a gentleman by the name of Steve Primo. Steve has been a friend of mine. I've seen him in person in the before coronavirus times many, many times. We've had him in the room a billion times. Steve has a way of kind of presenting things and showing things that just make sense. And I love that about Steve. I think he's got a presentation style that I would like to be able to emulate. I just think he does a great job. I also really like what he has to say about the markets as well. So Steve, let's go ahead and bring you on here. How are you doing today?
Great, Jeff. Thank you for that intro. Doing great. Let's see. I'm waiting for, there it is. Show my screen. And can you see everything and hear me okay?
Mm-hmm. I can see everything. I can see your chart. And I'm going to turn off my camera. I can hear you. You sound good. And I'm interested to see 2 things I can do right now to improve my trading.
Great. Thank you, Jeff. And thanks, everyone, for attending today, the Online Trader Summit. This promises to be a great educational presentation because I'm actually going to teach you 2 things, as the title says, you can immediately start to do right now that I strongly believe will improve you're trading. They're extremely simple, and it really doesn't matter what method or strategy or technique you trade, what market you trade. These two components will, in my opinion, greatly improve your chances for success in the market. Now, as we move on, I just want to start out by sharing with you what I learned trading on the floor of the stock exchange. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. Those are people that make markets in roughly about 50 or 60 stocks. So contrary to what most people believe, they think that you just have a license to steal if you're on the floor. But I really struggled my first year or two while I was trading on the floor. Even though I had advanced information, I was trading with institutions. I had a lot more money in my account, backed up by a big firm. I really had a very difficult time. And I was lucky enough to have some mentors. And here's what I learned. My mentors taught me when they saw that I was struggling that the market, not some guy in a chat room or a trading room, and not some economic indicator or announcement, but the market, the chart in front of you is always giving you a clue as to which direction it wants to go. Now, this was very difficult for me to absorb because, I was trained this exact same way probably most of you have been trained, where I have to get my information either coming from the earnings or coming from some economic announcements such as the jobless claims or the economic indicators, or maybe some guy on TV telling me, what he thinks of the market, or some trading guru. And basically, that's what I used. And 44 years ago, when I first started trading, it's probably the same as it is now. This is the way most people make their decisions. But the funny thing is that it didn't work. I mean, sure, every once in a while, I'd have a nice winning trade, but over a while, I just didn't have anything to show for it. For example, let's look at this chart here in PSA. Now, someone looking at this, the way I was trained as well, would say, okay, well, we've been going up, but now it looks like we hit some kind of a wall there. So that must be major resistance. That's where all the big sellers are coming in. So obviously, I don't want to buy this. If I'm going to do anything, I want to either stay away or go short this stock, right? I mean, that's just conventional wisdom. That's where we're all taught. But what I'm going to be sharing with you today, actually, just by looking at these bars right here, you would have learned that the market, remember, the market is telling you what it wants to do, that the market was telling me it wanted to go higher, and that this sell-off the last 2 or 3 bars here was not something I should look to go short, but actually this was a buying opportunity. And as we can see, the market was right once again. And this works the opposite direction as well. As you can see here, even just looking at 5 or 6 bars here, it looks like we're going higher, making higher highs, higher lows. Most traders would say, well, you want to buy this, right? But just off this 4 or 5 bars here, the tools I'm going to be teaching you today would have told you that the market actually wants to go lower. And as we can see, the market was right once again. So it's obvious that we've been trained the wrong way. We've always been taught that it's an outside source, either some guy in a chat room or trading room, or somebody on TV, or some economic indicator, or some institution, or some support and resistance line that's supposed to tell us what the market's going to do, what it wants to do. And in all actuality, it's right here in front of us. And so these 2 components, I feel, will help you tremendously in today's educational presentation. So welcome once again. My name is Primo. I'm the president and founder of Specialist Trading. As I stated earlier, I've been trading for 44 years. My career started on the floor of the stock exchange, and I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is, if you ever Google those old pictures of the trading floors and you see the guys yelling and screaming, and there's lots of paper all over the floor, and these gentlemen standing behind these large wooden booths, those were the specialists. They made a market in the stock. So if you wanted to buy a stock in the old days, let's say, we're talking about in the 60s and 70s, you would call up your broker, okay? And your broker say, I want to buy 100 shares of IBM. Your broker would take the order down, and then he'd call up the floor broker on the floor of the exchange. The floor broker would take the order, and then he'd walk up to the specialist in front of the specialist booth who made a market in IBM. And then the specialist would sell him at a price that he had determined the market for. So I did that for 9 years. IBM was one of the stocks I made markets in, also US Air and Reynolds Metals. I did that for 9 years during the crash of 1987 and the bull market that followed. So in my experience down there on the floor and in my 44 years of expertise, I know what works in terms of consistency, and I know what doesn't work. Unfortunately, we're mostly being taught things, conventional wisdom, that doesn't have high levels of consistency. So Roughly about 12, 13 years ago, I teamed up with Pro Trader Strategies, and we developed specialist trading with one purpose in mind, and that was simply to educate traders things that have high levels of consistency. All the things I've accumulated throughout the years that I use in my own personal trading, I teach my students around the world. And I'm happy to say now that we have students in over 115 countries in every state in the United States. So hopefully we'll be able to teach you something today to elevate your trading as well. Now, before we begin, as always, we're required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these two things that I strongly feel can immediately improve your trading. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember, since we are first and foremost an educational company, that all examples are strictly for educational purposes only. Now, if you'd like to get more education on a daily basis, I just want to invite each and every one of you to follow us on Twitter. There's our handle right there. I would suggest copying that down because every day I post about 6 or 7 different snapshots or words of wisdom that can help you along the way to trading things I've accumulated along the way. A lot of our snapshots are signals that our strategies and methods have generated, and I go into a little bit of detail as to what the concept or philosophy was behind that particular setup. So lots of great free educational information on a daily basis, so please feel free to follow us on Twitter. Now, once again, as I stated in the opening statements, we are a little bit different from other webinars and other presenters in that our only goal is simply to educate you. If you've come here thinking that I'm going to tell you what I think the market's going to do next week, or what I think the perfect stock is to buy, or what I think, what market or time frame you should be trading, you come to the wrong place, because that goes entirely against our philosophy. As an educator, our goal is to teach you how to trade, not to trade for you. You see, a good mentor does not trade for you. He teaches you so that ultimately you can be in charge of your own trading destiny. In my 44 years of trading, I've seen traders come and go. I've seen traders make tons of money in a relatively short time and then lose it all very quickly. But the only ones that are still trading, that have stood their ground and have stood the test of time, are the ones that make their own trading decisions. Most of these traders don't look at any fundamental news. These traders don't go to chat rooms or trading rooms. They don't watch guys on TV or subscribe to blogs. They simply have a plan in place that is highly consistent, and they just make their own decisions on their own. This is what my goal is, to teach you how to trade with a specialist edge. Same edge that I believe has sustained me now for over 4 decades, and hopefully it will do the same for you. So this is what we're going to be teaching you today, and I really strongly believe that you'll get something out of today's presentation. But if you have questions, just like the last presenter, I'll take them at the end. I have a lot of slides to share with you. I don't want to stop at every slide and take up too much time. So if you have a question, please wait till the end of the presentation, then I'll go over them with Jeff and with you as well, okay? Okay. Now, I always like to start out with a theme of my presentations. This is the theme today because it's extremely valuable, and that is trading is actually very simple. It really is. But it's the trader who makes it more complicated than it has to be. Now think about it. Trading is really simple. I have found out that trading is similar to fishing. I mean, a fisher would just go out on a boat, just sit there, cast his line, and then you wait, right? It's really simple. It's almost boring. Trading is the exact same way. You have a plan or a method in place that you trust that is shown to be consistent. You place your trade and all your orders, and you wait. That's it. There's no yelling and screaming. There's no 10 phones to be picking up. There's no multiple monitors to be looking at. There's not tons of screens to be watching. It's just simple. It's very basic, and that's the way trading should be. Okay, but it's the trader who makes it more complicated than it has to be. I mean, buying all the most expensive things and trading tools and getting tons of screens and watching multiple markets and time frames will no sooner make you a consistent trader than buying the most expensive pair of running shoes will make you a world-class sprinter. It just doesn't work that way. You have to put the work in, you have to study, and then you have to make your own trading decision. Now today, what I'm going to be teaching you, your eyes are going to light up when you see how simple this is. You can start applying what I'm going to be teaching you today. In fact, I want you to do the research and do the groundwork and see if it could really work for your plan. Okay, with that stated, let's begin today's educational presentation, and let's get right into it. Rule number 1. If price is above the 50-period simple moving average, well, then the overall trend is up. That's it. You don't have to look at support and resistance. You don't have to look at higher highs, higher low. It doesn't make any difference. If price is above whatever time frame, whatever market, the overall trend is up. Now, conversely, if price is below, then obviously the overall trend is down. Now, why is this so important? Well, the first rule we teach all of our students is this rule, that you will never trade against the overall trend. That means if price is above the 50-period moving average, you will never have a sell signal. You just won't look to sell. If price is below, you will never have a buy trade. You will never look to buy. Now, obviously, there will be some fantastic buys below the 50-period moving average and some fantastic shorts above. But remember, we're trying to instill consistency in you. We're not trying to have you hit a home run. We're trying to make you become a trader that just doesn't have a good couple of months and then gives it all back. We want you to be trading years, if not decades down the road. And if you apply this simple rule, you will increase your odds for consistency tremendously. So let's look at this generic chart right here. Most traders looking at this will say, well, Steve, there's absolutely no trend. We go down, we go back up, back down. I mean, this is kind of a whipsaw market here. So, I wouldn't trade this. Well, is there really no trend? Because the first rule is apply the 50-period moving average. And then we ask ourselves, where is price in relation to that? Price is above. So what is the market, not me, not some guy on TV, what is the market you're trading telling you? It's telling you the overall trend is up. Now, it makes no difference what time frame. Someone could say, well, yeah, Steve, this is a daily bar. What if I trade tick charts? Well, for all you know, this is a tick chart bar, or maybe this is a monthly bar. We specifically made it generic to make you aware that it doesn't matter what time frame or even what market. Let's look at this generic chart right here. Could be a monthly chart, could be weekly. It makes no difference. But once again, the way we're taught is, well, Steve, this is a no trend. Look at down, up, down. This is a range market. We always stay away from range markets because that's where I lose money. Well, is it really? Once you apply the 50-period moving average, what is the market telling you? It's telling you the overall trend is down. So therefore, we will never be buying below. The odds are in our favor over time, not in this particular individual trade, but over time, you will have higher consistency if you only sell if price is below the buy-sell line. Now, this is not a strategy or system. I'm not telling you, oh, well, okay, we're below, so I guess I sell at the market. No, you still have to have some structure. But this is just one of the basic rules as a part of that structure. Let's move on to rule number 2. All right, now that we know how to determine the overall trend, the simplest, easiest way to do it, well, now we look for this. When a bar closes in the top 25% of its range, the market is saying, once again, I want to go higher. Conversely, when a bar closes in the bottom 25% of its range, it's saying, I want to go lower. Okay, so if you don't understand what that means, let's look at this, once again, generic chart here. It could be a tick chart, could be a monthly bar, makes no difference. But what you want to do is divide by 4 separate but equal parts of the bar. And if you close in that top 25% range, what is the market telling you? It's telling you it wants to go higher on the short term. Okay? So as we look at this chart here, once again, we're above the 50, so the overall trend is up. Now we're looking for the shorter term trend, and here it is. That doesn't look like a lot, but for all you know, these were monthly bars, and that went hundreds of points. Now we had a sell-off right here, and someone could say, well, Steve, this doesn't work. Well, what do we have again? Another bar closing in the top 25%, and we're making new highs after that. So you see how the odds are in your favor to be in sync with the overall trend and the short-term trend as defined by the bottom 25% bar. Let's look at this bar right here, okay? Makes no difference what time frame or what market. But what you want to do is divide by 4 separate but equal parts. And if you close in that bottom quarter, that bottom 25%, what is the market telling you? Not me, not some indicator. What's the market telling you? The market wants to go lower on the short term. So let's couple this short-term identifier with the overall trend. All right, the overall trend is down. We are below the 50. So let's look for a bar that closes in the bottom 25%, right here, okay? You see how the market always tells you just about every time what it wants to do. The only trouble is we're never trained to listen to the market. We've always been trained to listen to the earnings, or trained to listen to see what direction the company is going, or trained to go to that blog and I'll find out by what this guy's telling me. We're always looking for help and to get our cue from an outside source. The only place we never look is at the chart right in front of us, because we've never been taught how to do that. The beauty of this is that it's so simple. If you ever look at earnings, or if some economic announcement comes out and you say, oh, that's great news, right? And then the market goes straight down. I'm sure this happened to a lot of people, right? Or the reverse. Some terrible news comes out and go, oh gosh, that's terrible for the economy, and the market goes straight up. Okay? It's too subjective. We want things that are cut and dry, that are black and white, just like this. If we're above or below the 50, if we close in the bottom or top 25%. It's easy, it's very simple, and very consistent. Now, I want to give you a homework assignment, all right? I bet you didn't think you were going to get a homework assignment on your weekend, right? But it's a simple one, and I'm sure you'll like it, actually, if you haven't started already. I want you to study and research these two components that I just taught you. Then go back and look at your last 10 to 20 trades. Paper trade to see if your results could have been improved by applying these edges. And I can almost guarantee that they would have. Because most of us, myself included, when I first started trading, will be having a series of losses because we were buying below the 50-period moving average, and a series of losses because we were selling short above, okay? Now, when you combine these two components that I just taught you, you have the makings of a high probability setup. So you can actually create your own method based off of these, all right? But these two techniques make up the preliminary rules to a strategy I've been trading for over 44 years. When my mentors turned my way of trading around so that I stopped, trying to listen to gurus and indicators and support and resistance and volume. When they turned my trading around and said, only listen to what the market's telling you, they introduced to me this strategy as well. And this is what I'm going to be sharing with you today. This is strategy number 4. I've been trading this strategy for over 4 decades now. I continue to trade it in my own personal trading. Let me give you some of the highlights of this particular method. It's a pattern recognition method, okay? So that means it's based off of a pattern that repeats itself over and over and over again in all markets, in all time frames, and in all directions. Now, it's designed for traders looking to catch momentum in advance. So the beauty of this strategy is that oftentimes you'll see those sideways range markets where most people wouldn't get involved. They said, oh, this is a whipsaw market. And that's where it will generate these signals, because it's determining in advance that momentum is just about to take off. Now, it only uses one indicator. You already know what that is. It's a 50-period simple moving average. It's that simple, okay? Now, strategy number 4 has a total of 4 rules. I've already given you 2 of them. These 2 components make up the preliminary rules. You've already got 50% of the rules to this really consistent method. I'm sorry I can't divulge the remaining 2 rules on how to identify this pattern, but we teach this in our course, okay? Now, the advantage of trading strategy 4 is that it's extremely consistent, one of our most consistent methods of all. It makes you a part of the process. It really gets you involved. It's not a system. It makes you a part of the process, and it's designed to be as simple as possible, extremely simple. Remember, you already have the first 2 rules, and if those were simple, think of the last 2 rules. They're extremely simple as well. All right, so let's look at some recent examples. And once again, I'll share with you, you'll see in all these examples how price was either above or below the 50-period moving average, and how we closed either in the top 25 or bottom 25, because those are 2 of the rules that make up. Now, I know you may see a number of examples and say to yourself, well, how come this wasn't a buy signal? I see it closed above and it was closing in the top 25%, because it didn't meet the remaining requirements of the strategy. That's why. Okay, so let's look at this chart here in gold. This is the ETF that represents gold, GLD. Obviously, looking at this, it's gone up, right, from April coming into May last month. But most traders would say, well, you know what? I got this really expensive indicator I purchased, and it's telling me that it's kind of gone up a little bit too fast and too soon. So I think it's overbought. So I'm interested in buying GLD, gold, the ETF, but I'll wait for it to come back down to here, fill this gap down here, okay? So let's say you even are a little bit more bold and you decide to sell, to go short, because you think it's got to come down. It's way overbought. Okay, so for the first week or so, you're feeling pretty good about yourself. Maybe you bought puts. Maybe you actually shorted the stock. Doesn't matter, it's up to you, but for about 5 days, you're feeling pretty good. You're not having a big gain, but you're on the right side. But remember, is this the way we teach our students? No. What's the first thing we talk about? It was rule number 1, always apply the 50-period moving average. Now that you've applied it, you ask yourself, where is price in relation to that? Price is above. So if price is above, the market is telling us the overall trend is up. Do we sell short if the overall trend is up? No. For higher consistency, we'll only look to identify buy signals. All right, so we want to find the second rule, which are bars that close in the top 25%. And if we look, we see we have 1, 2, 3, but these two met the requirements of the remaining 2 rules. So actually, where you're sitting there going short, strategy number 4 is generating a buy signal. And look what happened. What happened to the great sell-off there, right? And also one of the best things about strategy 4 is if you miss that, it continues many times to generate signals on the way, so you can jump back in. Okay, let's look at this example here in DraftKings. Most traders, myself included, when I was first trained, would say, hey, well, this is major support. This is where all the institutions of the big banks are buying. That's Fibonacci support. I got to buy it right here, right? And so you wait for a little bit just to get confirmation, and the next 3 days, it does go higher. It's making higher highs. So you say to yourself, I'm not going to miss this. This is going to be a big bounce. I think it bottomed out. So you jump in and buy, right? So you're all excited. Maybe you bought the calls. Maybe you're long the stock, but you're excited that you're getting in close to support. And this happens, okay? Look familiar? What's the first thing we tell our students to do? Apply the 50-period moving average. Now ask yourself, where is price in relation to that? It's below. So remember, you never want to buy below the 50. Sure, every once in a while, I'm not saying there won't be some great setups every once in a while. There'll be some great trades, but it's not just about hitting one home run and striking out the remainder of the game. You don't want it. That's not trading. That's really gambling. Professional traders are all about consistency. They want the odds in their favor. They want an edge. And this is the simplest edge I can teach you right now, to sell below. So we wouldn't have taken this buy signal. So our students would look for bars that close in the bottom 25% and then meet the remaining requirements of the strategy. And guess what? You could have sold right here at this high bar and potentially captured 19 points. You see how simple this is? Did you notice that these last 2 examples, I didn't talk about anything about earnings. I didn't talk about, support resistance, or I didn't talk about volume, or talk about economic, announcements. The market tells you what it wants to do. Keep it as simple as possible. All right, let's look at an example here in UFS. We are above the 50-period moving average. We've been selling off, but since we're above the 50, this is a buying opportunity. We just want to wait for all the requirements to be met for a strategy 4 setup. And here was one right here at the bottom, 20 points coming into mid-May. All right, now, most traders who took Technical Analysis 101 would say, Steve, this is a classic double bottom. You got to buy here. This is major support, and double bottoms are always, I've looked at charts, and these are always really good signs that it's going to go higher, okay? Well, I don't care if it's a triple bottom or a quadruple bottom. What is the first rule? Where is price in relation to the 50 period? Price is below. So I don't care if a double bottom is being made. I'm only going to look for sell signals. Now, strategy 4 generated 3. Now, here's the beauty of strategy 4. It will often generate signals, and something won't happen for a while. You'll still be in the sideways market. But once it does kick in, well, that's potentially 18 points you could have captured to the downside. Okay, let's look at BABA. All right, now this is a little bit more advanced scenario here. It doesn't happen a lot, but I wanted to share this with you because this is one of the techniques we teach our students. We were obviously below the 50-period moving average, and all of a sudden we had one huge big up day, possibly off some news event or something happening, and we closed above, okay? And on top of that, it met all the requirements for a strategy number 4 buy signal. So, should you take that trade? Now, on top of that, 2 days later, a sell signal was generated, all right? Closed below and in the bottom 25%. So which one do you take? Well, this is just a rule of thumb. It's not written in stone, but we always tell our students, look at the slope of the 50-period moving average, because that's giving you a little clue as to the momentum. If you get a buy signal and the slope is going down, most likely you should avoid that and not take that trade, because the market is telling you, once again, that momentum is still to the downside. So you would have taken the sell signal in BABA and potentially captured 35 points. See how simple this is coming into just this last week. Here's an example in PSA. Remember that chart I opened up the presentation with? Obviously, it went straight up, right? Coming into June this year. But remember, we said that right here, the market told us it wanted to go higher. So we knew in advance that it wanted to go higher. How did we know that? The 50-period moving average. The entire time, this stock has been above the 50-period moving average. Even though you had sell-offs here and a sell-off here, those were buying opportunities. And so what you want to do is look for a strategy for a setup. And what we had right here were actually a cluster of 3 buy setups that potentially could have captured you 45 points coming into this month. All right, let's look at Twitter now. This is what one student, a prospective student, was telling me, saying, Steve, I don't understand here. This is major institutional support. You know, the institutions, I took that $10,000 course, and it gives me an indicator, tells me what the institutions are doing, and they're never wrong, right? Because they have the big bucks. So I've got to buy this, right? What I usually tell my students, I say, listen, you can do whatever you want. I'm never going to tell anyone how they should not trade. I only teach what has worked for me and for hundreds and thousands of students that we have around the world. And that is, there is no consistency in following the institutions. I know because I personally traded with them when I was on the floor. They would come up to my booth and enter orders with me in my book. They would give me big orders, like 1 million shares to buy or sell, 2 million to sell here, 1.5 million to buy here. And they had the worst track record of anyone that I ever traded with. So I would follow the institutions more so than someone who'd been trading a couple of days. So you're free to do that if you want. But the first thing I would tell my students is that, well, where is the support now? Okay, what happened to the institutional support? So how could we have remedied this? Apply the 50-period moving average. We knew well in advance, a full week or two in advance, that the market wanted to go lower. Now, obviously, some news or some announcement came out that caused this big gap down to the market, and it kept going lower. How did we know that? Did the CEO of Twitter call me up and say, hey, Steve, you may want to tell your students, don't get long this because it's going lower. You issue some sell signals. No, they don't know who we are. We're a small independent company. How did we know? The market told us it's below the 50-period moving average. And on top of that, we had a sell signal right here based on that pattern that repeats itself over and over again. So instead of looking for institutional support, look for what the market wants to do. Okay, here's a range market. We're all taught to stay away from those. That's where you get whipsaw, right? Well, sure, it is a range market, but it's a range market above the 50-period moving average. So that's telling us that even though we're kind of going sideways right now and there's no momentum, momentum may be building up if we get a strategy number 4 signal. And guess what? We got 2. So this is the beauty of strategy 4, because oftentimes it will signal these setups well before the market decides to take off. And this was DDS coming into June this month. You could have potentially captured 70 points. All right, what about news announcements? I know a lot of students always say, well, Steve, yeah, this probably worked great when everything's real orderly and very nice in the market. But what about when a news announcement comes, okay? You could be on the wrong side of an announcement and get killed, right? Well, I've been trading for 44 years now. And since I learned these techniques, I'm not going to tell you that this works 100% of the time. But I would say a good majority of the time, the market already tells you in advance what it wants to do before the news announcement. Let me show an example here. This was announced in Yahoo Finance just about a month ago on May 5th. Peloton, feds agreed to treadmill recall, okay? Exercise giant Peloton, PTON, has agreed to recall its popular and pricey treadmill after at least one child was killed after becoming caught underneath the machine's belt. So that's obviously terrible news. Very tragic news, very bad. Obviously, it's not going to be good for the company. All right, this was on May 5th when that was announced. And as you can see, here's May 5th. If you were lucky enough to see that announcement and get short during the day, sure, maybe you made 5-10 points. That's a nice little day trade. I'm not going to complain about that. But wouldn't you have liked to know to get out up here? Let's say you were long the stock. Let's say it was in your portfolio. Would you have liked to know to get out here and then maybe go short up here? How could we have done that? After all, the news came out, and that's what made us sell our position, right? This is a way we're all taught, to rely on outside sources to tell us how to make our decision. We never rely on the chart in front of us. If you only had applied the 50-period moving average, you would have known weeks in advance not to be in this stock. If you were, you should move your stop up or look to get out. That's not coming from me. That's not my own opinion. That's coming from the market. Why? Because it's below the 50, and the 50 has a very nice, strong downward trend here. Now, if you're bold enough to go short before that news came out, look for bars that closed in the bottom 25% and met the requirements of the strategy number 4 pattern, and you had 2 chances to get short here. And instead of making 5 or 10 points in a quick day, you could have made potentially 36 points. So this has been my experience. You see this happen over and over again. When a news announcement comes out, people say, oh yeah, I bet your stuff would have gotten killed, right? Well, sure, it doesn't work all the time, but most of the time, we've already been on the right side of the market. Here's an example in Airbnb. As you can see here, we have 3 sell signals. They're below the 50-period moving average, and ultimately, you could have captured up to 55 points. Now, here's the question I'm sure a lot of you are saying. They're saying, well, Steve, this is all well and good, but where do I get out? You say I could have potentially made 55 points, but that's if I sold at the exact high. How do I get out? Okay, that's a fair question. In our course, we teach you upwards of 7 different exit methods. Remember, our goal is to educate you. So we want to give you a smorgasbord of different ideas and different methods, and then let you choose. Now, this is just one of the methods. It's the most popular exit levels that we teach. It generated an exit level in Amazon right here. A buy signal was generated right here coming into May, and then an exit level was right here. And this is why it's one of the most popular, because it has an uncanny ability at times to pick these tops. As you can see, you would have been given a level before the actual trade took place, and you could decide for yourself if you wanted to take the trade based on the exit. We also furnish all of our students with stop placements and with ways in which to track the trade if you like, also money management. So this is not just sharing with you where the buy setup is and then good luck getting out and good luck protecting yourself. No, we also include all of that in our courses. All right, as we see Roku right here, we are below the 50. We opened a couple of times above, but quickly closed below. So we have a cluster of sell signals right here. This was coming into May, 85 points in roughly about a week. All right, let's look at some different markets and timeframes, because I know not everyone just trades stocks and daily bars. Here is an example of the E-mini futures. This is the market I primarily trade. Here's a 30-minute chart. This was last month. As you can see, right at this point on a 30-minute time frame, we went below the 50. So now the market says, I'm changing my mind. I want to go lower. 2 sell signals are generated. Potentially, you could have captured 90 points. Okay, that's upwards of $4,500 per contract. That was a 30-minute chart of the E-mini. Now let's look at a 4-hour chart of the Japanese yen. Okay, same thing, same principles apply. Just because we changed market and time frames makes absolutely no difference. We're above the 50, so we're only looking for buy signals. We have one and then another one generated. You could have captured 80 pips in just 2 or 3 days. That's roughly $800 per unit. And then lastly, 4-hour chart of Bitcoin. Remember last month when Bitcoin was really strongly falling out of bed? Well, it's easy, same thing. Once it crossed below the 50-period moving average on this 4-hour time frame, all you had to do was look for sell signals. So it doesn't have to be difficult. Remember, trading is simple. It's the trader that makes it more difficult than it has to be. Okay, so let's recap before we come to the end with questions, and I'll tell you about a great offer we have for all of you. Remember, apply the 50-period simple moving average. I don't care what time frame you trade. I don't care what market you trade. It absolutely makes no difference, but you should have a 50-period moving average always plotted on your chart, and then just ask yourself, where is price in relationship right now to the 50-period moving average? If it's above, you should only be trading buy signals of whatever method you're trading. If it's below, you should only be trading sell signals. You will have a higher level of consistency over time. Same thing with the top bottom 25%. If you are above the 50-period moving average, look for bars that close in the top 25% of the range. A lot of students like to just apply these two rules to their current strategy. And they'll say, you know what, I'm really not changing the rules to my method that much, but I'm just applying these two little components here, and they've really increased my odds for consistency. So instead of going long when the bar closed at its very low, they'll wait for a bar to close in the top 25% to give them confirmation to go long. And then lastly, these two very powerful but simple rules make up the preliminary requirements to strategy number 4. This is a strategy I've been trading for over 4 decades, and it's one of our most consistent methods, and I think you'll really like it if you decide to become a course member. Remember, strategy number 4 can be applied to virtually any market, any time frame, and any direction. I know we showed the most charts today based on stocks, daily bars, but I shared with you a couple in totally different markets and different time frames. It makes absolutely no difference. So ask yourself, before you ask me questions, do you think this strategy can help your trading for the remainder of 2021? Remember, we're just about halfway through. In a couple of weeks, we're halfway through the year, if you can believe it. So do you want to keep doing the same things you've been doing for the last 6 months? I don't think so. Well, here's a way we can help you. We have a great special for all the attendees today at the Online Trader Summit. This is a great offer. We're actually going to offer you strategy number 4 at a great discount. All right, you're going to get instant course access, detailed instruction. You'll learn all the entries, all the exits, and all the different stop placements. Remember, our job as an educator is to provide you with this information so that you can ultimately make your own decision. None of these things are black box, are systems. We don't teach nor trade systems because they require everyone to trade the same way. That's why we don't have statistics, because statistics based off what? We have 1,000,001 ways to trade each method. They're all highly consistent, but as long as you find the way that meets your needs, that's how you will really see the odds turn in your favor, all right? Now, you're going to get the complete course of rules and educational correspondence as well. That means you're going to get my personal email address where you can contact me whenever you'd like. Now, we're not going to stop there because we share with you a strategy right now, strategy number 4, that's based off of momentum, capturing momentum. What happens if the stock or future or currency pair takes off already? How are we going to catch it, if it's already taken off? Will we get another method that can generate signals like that? Sure. We're going to throw on strategy number 3A. This is a course specifically designed to trade continuation markets. It's a premier continuation method. Continuation means that it generates signals in continuation with the trend. So oftentimes, if you've seen a market take off, you don't have to sit there and say, gosh, my strategy missed it. I guess I missed that one. This is a perfect strategy for that. It's based off a unique Bollinger Band setting, and we share with you the setting in our proprietary method, okay? All the complete rules, once again, all the entries, exits, and stops, you can apply it to any market, any time frame. Let me share with you an older example of how this works. For example, looking at CGC, let's say you had said, boy, I really wanted to short this. I wanted to buy the puts or some type of spread strategy with a downward bias, and I totally missed it. Well, the beauty of strategy 3A is it will continue to generate signals all along the way of the trend. As you can see here, these are all strategy 3A signals all along the way down. So based off completely different rules, completely different parameters, completely different indicator, you're going to get that as well. But we have extra bonuses. We're going to throw in 5 of the Online Trader Summit bonuses. Bonus number 1, you're going to get the add-ons for MetaStock for both strategy 4 and 3A. So what this means is you'll get the up and down arrows that automatically signal the setups that are being generated using these strategies. Bonus number 2, you'll get the full Secrets of a Stock Exchange Specialist course. This is a 3-hour video seminar. Years ago, I spoke in Denver at a conference, and I was the head speaker there, and they recorded it. And it's a 3-hour video seminar where I go into detail and give a lot more edges and techniques on how to trade. Bonus number 3, you'll get the PDF version of my book, Secrets of a Stock Exchange Specialist. This is where I go into detail on a trade-by-trade account of what it was like to trade on the floor during the crash of '87. I think a lot of you will be surprised how crazy it was, and I tell you exactly what it was like while trading on the floor. Bonus number 4, this is our Secrets 2.0 course. This is where we take it up a notch and give you many more advanced edges and techniques. And then lastly, bonus number 5 is the scanning capability on MetaStock to identify these strategy setups. So you can scan whenever you'd like for these setups in 3A and in strategy number 4. Okay, so let's break it down. We're going to get all this plus the extra bonuses, 2 strategies, all the complete rules. They're yours to keep. They're yours for life. They're online courses, and you're going to get all the extra bonuses on top of that. Here's our special summit discount. Now, normally, if you purchase all these things separately, it would cost you over $4,400. Don't worry, we're not even going to come close to offering it at that price. We're going to discount it down to only $297. That's a savings of over $4,100. Think of that. This is a great, great offer, a chance to really elevate your trading, but this is for a limited time only. This is not going to be around. If you watch, I think Jeff is making this video available next week or so. If you watch it for the next couple of weeks and sit on your own style and a month later say, you know what, I'm going to try that offer that Specialist Trading have for 2 strategies and the extra bonuses, well, it'll be back up to $4,100 by that time. So I believe this is only going to be lasting for the next few days. So take advantage of this. This is 44 years of things I've accumulated, things that I personally use in my own trading, things that you won't see anywhere else, techniques and edges, things that I took from the floor for less than $300. All right, so this is really a great way to increase your odds for consistency. If you're not convinced yet, let me share with you what you could have done. Let's say we had this presentation a week or so ago, okay, and you signed up on board with this great $297 offer. Well, you could have used the scanning capability on MetaStock and scanned and seen on the night of June 4th, just about a week ago, a week from yesterday, there was a buy signal, strategy number 4 buy signal in Adobe. Okay, we're above the 50-period moving average. Sure, we had one close below, but we have a nice upward slope. And here's the strategy number 4 buy signal. And we know it's expensive, $500 stock, but let's say you purchase calls or maybe some type of spread strategy with an upward bias. Let's say you purchase 10 shares, okay? Well, look what happened this week. Stock went up 37 points, okay? So if you had only purchased, let's say 7 or 8, maybe 10 shares, that could have paid for the course right there. I'm not saying that there's all the signals are going to pay for the course. I'm just saying that this is how consistent this method is. It really, I've been to a lot of webinars and I see a lot of people giving examples that are like years old. And I say, well, yeah, but I want to see something that worked in the last week or so. Well, here's a perfect example of that. This was a strategy number 4 signal that you could have scanned for on MetaStock, decided to get in the next day and potentially captured 37 points. So this is an actual updated chart up until yesterday. So in closing, you owe it to yourself to take your trading to the next level. Invest in yourself. Don't wait any longer to become a consistent trader. These things work over time. I trade these on a daily basis. Take your trading to the next level. Become a student of the strategy number 4 course. Here's how to do this. You can contact Pro Trader Strategies. They're my sister site. They're in charge of all the discounts and all the pricing. You can call them directly at area code 310-598-6677. They have trading consultants manning the phones right now. They would be happy to take your order over the phone. And lastly, if you'd like to sign up online, there's the link you see right there. That's not a live link, but you have to copy and paste that, or I believe Jeff may be posting that for you. But that's where, if you'd like to do it on your own and just sign up and pay online, you can go to that info page and do that as well, okay? I believe we have about 5 or so minutes for questions. I promised I would reserve the last portion. So if we do have questions, I don't know, Jeff, do you want to read them to me, or should I just take them off the live question and answer?
Just give me half a second here. We do have quite a number of questions coming through. Great job. It generally tends to be the thing. Let me look at the questions we've got. So there's a few of them that I promised that we'd ask. So from YouTube today, Zaid probably. Steve, where would you put your stop loss level on the 50 MA setup? And how much would you recommend risking your capital per trade?
Okay, it's good questions. The first thing is we have upwards of 7 different stop placements for our students in the course. So it's up to the student. Remember, I think I said in the very beginning of the presentation, our job as an educator is to provide you with this information so that you make your decision. That's why we don't have statistics or any type of stats or numbers, because everyone trades differently, and we encourage that. No two traders should ever trade alike. Now, you can still be looking at the same signal, but how you decide to get in, how you decide to get out, how you decide to protect yourself with a stop is your decision, because it has to make you feel comfortable. if there's one thing I've learned, and I knew this myself, when I first started trading, I spent thousands and tens of thousands of dollars buying these systems and these things that didn't work. And it would tell me to place a stop here or do this. And I had no idea what it was based on because it was a black box. But the stop placement was so large and the risk was so great. I said, I can't take this trade. I wouldn't be able to sleep at night risking this much. Now, a lot of times I wouldn't take the trade. Whereas someone else may have said, yeah, I have a huge account. I can take this trade. It makes no difference for me. So I learned that the great lesson is everyone has to find their own way, what makes them feel comfortable. So we provide our students with risk management, upwards of 7 different stop placements. Some are very mild risk, minor risk. Others are greater risk. And it's up to you to decide. It's the same thing with the exits. We do the exact same thing. A lot of traders like to get in and out quickly. So we have exit methods for that. A lot of traders like to track the trade and stay in as long as possible. We have an exit method for that. But you won't really be successful and consistent until you are comfortable with your own strategy, okay? Now, in terms of how much do I always tell my students, and this is just, trading 101, you should have the bare minimum risk no more than 2% of your account per trade. And this is something I didn't make up. This is just conventional wisdom. I personally risk about 1%, sometimes less than that. And so it's up to you if you want to risk less, but it should be no greater than 2%, because if you start to go up to 2.5%, 3%, if you get a series of losses, well, then you may be wiped out rather soon, or have a big chunk. So I would, per trade, risk no more than 2% per trade.
Okay, perfect. That's a great answer. Thanks, Steve. A question from John. Do you only want to go long when PA is already above its 50 SMA? Or can you trade it when the PA crosses above and not when it crosses?
What, I'm sorry, I may be old school. What is he referring to PA? Is that price analysis or
I thought you might know. I was thinking that he was referencing a stock symbol or something that you might have been looking at.
He's talking about Pennsylvania or something. I'm not sure.
Yeah.
But well, here's the thing.
I think he means the instrument. I think he was referencing a specific one, but reading this, it looks like instrument.
Okay.
Stock.
Okay. The stock, in other words, if price is above, that is just giving you a heads up that going forward, you should only look to identify buy signals. That's it. Now, it doesn't have to be strategy 4. It could be one of yours. That's why I gave that homework assignment. I said, go back and check your last 10 to 20 trades. This could really have helped you. I can almost guarantee it, because I teach students this and they go, this is amazing. I wish I had known this before I had all these losses. And I said, yeah, I found out the same way myself. So it's not guaranteed to be 100% correct. It's just guaranteed, though, to really give you consistency. And that's all we're trying to instill. So you can look for any buy setup, whatever it's based off. It could be based off the full moon. I don't care. But it should be, price action should be above the 50-period moving average. Okay, that's it. If price is below, well, then you should look for sell setups or stay out altogether.
All right, cool. Sheena from YouTube wants to know if this is if this cost includes lifetime access to the MetaStock indicators.
That's a good question. You mean the indicators, the up and down arrows, the add-ons? I would imagine so. Yeah.
Yeah, they do. Yeah. They do.
They're yours. Yeah, you purchase them. They're yours.
Let's see. One of the questions that we have all day long today is, do I get access to the recording? And so I'll answer that, Steve, just in case you don't know. We will send you, if you're watching on YouTube, you've already got the link. It's just the link you're watching now. If you're watching on GoToWebinar, we will send you the YouTube link within an hour of the end time. We do ask that you like and subscribe to our channel while you're up there, because it's worth karma points. And that's the end of the questions that we have, Steve. I don't see a lot more.
Okay,
a lot of really good feedback. In fact, one of them I wanted to read to you. Jonathan earlier said, "I absolutely love your point of view. I 100% agree with what you said today."
Oh, well, it feels good to hear that, but really our real goal is mainly just to tell students that we want to teach you something. That's mainly what we want to do. We want to teach you something, and we want to even if you don't decide to become a course member, at least I knew that in today's presentation, I taught you a few things that could help you. So we're really an educational company first, and that's really what where our motivation is in trying to help traders.
All right. That's it. Steve, I want to say thank you for coming in today. Appreciate it.
Thank you so much. I enjoyed it.
I did type in and add to the chat the Pro Trader Strategies link there, and you can get in touch with Steve at, you can give them a call at 310-598-6677. Great job as always, Steve. Appreciate it.
Okay, thanks, Jeff. Thanks, everyone. Bye-bye.
Okay. All right, thank you. And Mike, to get that package, again, the phone number is 310-598-6677. Thank you for your interest in it. All right. Very cool. And all right, let's go ahead and kind of get things changed over right here. And it just takes a second. Yeah, Steve, thank you. Steve does such a great job with that. Want to say thank you for everybody that's here today. I hope you're still enjoying yourself. Hope you're doing well still. And let's go ahead and kind of talk a little bit about the summit offer that we're doing today. So we're going to offer Jeff Tompkins Trade Trend 12 months plus all of the training that he was kind of talking about, the ebook, the personal one-on-one training, and just that whole package. It includes 12 months of Trade Trend. You also get the Jake Bernstein Setup and Timing Triggers 2.0. You'll get the AI version of Fulgent AI, the artificial intelligence program that Ed Dan showed a little bit earlier. You're going to get the Magic Trader. You're going to get 3 months of that. We're going to include the training on MetaStock, Unleash the Power of MetaStock, the 2 years of the Stocks and Commodities magazine. And all of this purchased separately normally would be $3,835. This is a great package that includes some of our most popular add-ons this year. And so to take advantage of it, give it a try, you can give us a call at 800-882-3040. You can visit us online at metastock.com/saleschat. And you can also order it online at metastock.com/summitdeal. So again, that's normally if you bought everything separately, it'd be $3,835. You can get all of that for $1,691 today. Let's see. Sheena says the price is different. Okay, that's it. Thank you for going there, Sheena. If you're new to MetaStock, it will give you the option to do a 3-for-1 option on MetaStock. So if you actually select to get the MetaStock offer for end of day, for example, it'll be $59 higher. If you do the real-time option, it'll be $250 higher. So it should be $16.91. If you need to get MetaStock, you can also add that to your subscription for $59 or more higher. So we can also walk you through it, Sheena, if you're having issues. Just give us a call, 800-882-3040. Our guys would love to help you. So, and thank you. I appreciate you going up there and looking at it. So, all right, very good. I'm getting notes that the URL does not work and is not correct. I'm going to see if I can't get a hold of Steve and get a correct link for that. So I'll be working on that and I'll chat it to you. You can also get in touch with him at 310-598-6677. And I will try and, if you email me, jeffrey.gibby@metastock.com, I'll make sure that you get a working URL as well.
Hey,
so,
Jeff.
Sorry that URL doesn't work that Steve had. I probably typed it in wrong. I'm going to go check. So let me work on that after we get Kurt started.
Jeff, your headset's on?
The other thing I'd like to do is kind of talk a little bit about our sponsor offer, Stocks and Commodities magazine. You can get a free issue. If you're watching on YouTube, you just have to go to metastock.com/tradersummit. And that'll allow you to do that. Also, if you get the Trader Summit Action Package today, we'll give you a free 2 years of the subscription. So they're a great sponsor of ours. We love them. It's a fantastic magazine. You should definitely check out at least the free issue. So our next speaker today is Kurt Christensen. Kurt has a very good strategy that he's going to talk about today. He's been in the room quite a number of times. I'm going to kind of bring him in here right now. How you doing, Kurt?
Doing great, Jeff. Can you hear me okay?
Yeah, you sound great. There's always that little bit, is it going to work? Is it going to work?
Right.
Kind
Exactly.
of feeling. I know you turned your,
I think we actually both hit the mute button at the same time. So you unmuted me, then I muted myself, and I muted myself. You know how it goes.
yeah. I did turn off your webcam earlier, but now I can see you. And I just realized I forgot to turn mine on. So, all right. Let's go ahead and make you the presenter here.
All right.
Yes.
Fantastic.
All right.
All right. Let me get my. All right. Slide should be showing. Everything's rolling.
Well, I can see everything, and I'm going to go ahead and get out of the way. Your turn.
All right, fantastic. Well, hey, thanks everyone for being here today. And I know you have many other things that you could be doing on a Saturday in June. And actually, I'm here sitting out at the lake. So I'm in a coffee shop doing this presentation because we're out at the lake. The place where we're at is actually remote enough that doesn't have Wi-Fi, so I have to come into town a little bit. So fantastic opportunity to be here. We're going to cover very quickly today how to trade stocks and predictably fatten your accounts by laser focusing on one simple setup that has really one page of trading rules that you can trade in 15 minutes a day. So if you take nothing else away from this presentation, quite simply, what we're talking about today is a simple setup with one page of trading rules. And remember that as we go through this, everything that we're talking about can basically be summed up in that one page of rules. So kind of what we're going to do today is I'm going to give you everything that's contained in that one page of rules so you can walk away and trade this to your heart's content. And of course, if you're interested, you can get some more training and some more kind of over-the-shoulder kind of support from me at the end. But I'm going to give you up front everything that we're doing, nothing held back, no secrets or anything like that. So of course, the usual legal stuff our attorneys advise that we say, the financial markets are risky, past performance does not guarantee future performance, and this is obviously not a solicitation to buy or sell any security. So the one thing that changes everything, and this is pretty important that we get taken care of right up front, is that you need to make sure that your trading is simple. You need to make sure that your trading is mechanical and methodical. And so when we talk about trading, I'm going to give you the exact setup, and with the same set of rules, you'd get the same results that I'm going to get. And we're going to share with you exactly what's on that one-page set of rules. So let's start off with a real-life trade example. This is on a little stock that some of you may have heard of called Tesla. So of course, most of us on the call have heard of Tesla. And you'll notice that Tesla, I'm showing that this is a daily chart on the screen. You can see that I've drawn in a triangle here and a triangle kind of down here on this chart. It was in a narrowing range, right? Had a volatility to contraction. And on this day right here, where you see that teal line, I entered. And you see over here, I exited a portion of the position here for a gain and the remainder of the position there for a gain. So that's all fine and dandy, but here's the actual numbers. So we bought on 11/17 for $439.20. We had a maximum risk the day that we bought. This is critically important. Our maximum risk was $6.19, which is, frankly, nothing on a $400 stock, a max risk of $6.19. We had a realized gain or profit of over $200 a share. So our risk reward, and if you're not familiar with the concept of risk reward, that's one of the concepts you absolutely positively need to study this weekend and get up to speed on. Basically, our risk was $6.19. Our reward in this case for this trade was $200.20, which is for every dollar that we risked, we made $32 in profit. Now, obviously, with a risk reward ratio of 1 to 32, how often do you have to be right on the trade to break even? Right? I mean, every $1 risk, you're making $32 in profit. How often do you have to be right? Well, you frankly only have to be right 3.1% of the time to break even. Now, I don't know about you, but I'm pretty confident that I can be right more than 3% of the time. So that sets up the stage. So if I can find these trades that have these huge risk reward ratios where my reward is huge up here and my risk is low down here, I don't have to be right very often to make good money. So you can do this. Using the system, you will see results, and I'm going to share some of those results with you as we go. So what you're going to look for is one simple setup with trading rules that can be explained in one page. You're going to hold on to your winners, and you're going to try to squeeze as much out of them as you can. I don't know about you, but this is probably one of the hardest things in trading to get conveyed to people and to do in your own trading, is to hold on to your winners and squeeze as much out of them as you can. There's always this tendency to let losers compound and run, right? And simply be thinking, oh, it's going to come back to break even. I'm going to get back to break even today or next week or in a couple months, right? It's always easy to hold on to losers, but the real success in trading comes when you hold on to winners and catch your losers quickly. So I'm going to go ahead and turn off my webcam, just because it's hard to look right into the webcam the whole time we're talking. So I'm going to hit stop on that real quick. Just makes it a little easier. I kind of concentrating on the screen and my drawing and all kinds of stuff. So make sure that we can do this okay. All right, so we still should be seeing the screen. And like we were talking about, we need to be able to cut our losses quickly and for tiny paper cuts instead of stomach churning losses. So I don't know about how many of you, but can you recall the exact amount of your largest loss? Yeah, I mean, raise your hand. I mean, I'm sure almost everybody can, right? Because it was huge. It was so destructive. It was so painful. It was emotional. Had all those memories attached to it, right? Well, now tell me, what's the size of your largest winner? Most of us can think of maybe a couple of decent winners or big winners, but it's not etched in our brain like these losses. So this is one of the real keys, is to make sure that we're managing our losses. And preferably, I would like to take lots of small losses rather than a few large, stomach churning, account grinding, margin calling type of losses. So we're going to teach you how to do that. So in the trade setup that we're going to teach you today, we're going to teach you something that generally is going to have a risk return ratio of 1 to 10. That means for every dollar that you risk, you're looking to make $10 as the reward if the trade goes in your favor, as the norm, and a minimum of 1 to 5. If you trade at a minimum of 1 to 5, that's going to greatly stack the odds in your favor. And you don't have to, your batting percentage, the percent chance that you're right doesn't have to be that good, and you can still break even and make money. We're going to teach you how to only trade the long side of the market. Now, I know lots of people are fascinated with the short side of the market and shorting and all that kind of stuff, but let's take a look at a wall chart of the stock market over the last 50 years or 10 years or any period of time. Well, the market does tend to drift up, does it not? There's just so many things stacked against going short in terms of the infinite loss potential, a capped upside, right? I mean, if you short a stock at 100, what's the best possible thing that could happen? Well, the best possible thing, if you short a stock at 100, it goes all the way to 0. Frankly, that hardly ever happens, but obviously it could. And that's a capped maximum profit. Going in, that's the best that could possibly happen. Well, what if you went long a stock at $100? What's the best possible outcome? Well, you're not able to calculate it because that stock could theoretically go to infinity. Is that not correct? Right? So that's why we only trade the long side of the market. And we want something that can be traded from any brokerage account in the world, preferably one with 0 commissions. Most of you are probably familiar with brokerage accounts that you can get 0 commissions. They're all across the board now for the last couple of years. Thinkorswim, TD Ameritrade, Schwab, I believe E-Trade and Fidelity, and some of those are getting close to, if not already have 0 commissions. And we created these charts and scans, and these can be run on Thinkorswim, which is the platform that I'm most familiar with, or TC2000, or MetaStock, which obviously you guys are all familiar with, or TradeStation. Oh, I want to add one on there as well. We've got these now for TradingView. Skeptical? Well, great. We're going to prove it to you, as long as this sounds fair to you. This is going to require a very reasonable time investment, something almost anyone can find the time to do. It's not going to cost you a king's ransom, or not even close. I mean, frankly, the biggest cost for you is going to be your time to learn to find these setups in the market as they appear. And it's a system that's been getting consistent results across the board for my stock trading partners and customers and clients and friends. And it is something you just have to commit to for at least 6 months to make sure that you get the nuances down, to make sure that you get your understanding of the rules correct, and to make sure you give yourself some time to go through the different market cycles. Because obviously not every stock market day is created equal. Some days there's lots of opportunities presented, and some days there's nothing presented. So first, before we get into the actual rules, I do have kind of a glaring confession. Now, this glaring confession is the reason that I developed these this one page of trading rules. And the embarrassing confession is I used to really struggle with the discretionary and subjective trading. I don't know if any of you have that trouble, but go ahead and raise your hand in the chat if you have trouble with discretionary subjective trading. Now, when I talk about discretionary subjective trading, what I really mean is any trading methodology where the burden of all the decisions is on your shoulders. You know, what stock to enter, what setup to look for, how much profit to take, where to set your stop, position sizing, you know, right, all of those things. Discretionary or subjective trading is very, very, very hard. I mean, emotionally, it's a disaster. So let me tell you, when I discovered rules-based trading or mechanical trading systems, and that's, you know, completely changed my trading life. And all we mean by rules-based trading or mechanical trading is that we have a preset of rules or a strategy that we follow that has objective, easy to follow entry, exit, and position sizing rules. Because what that allows you to do is get better at the system, get better at trading those rules, and not worry so much on the outcome. The whole goal of mechanical or rules-based trading is that you simply take the trades as they come up and get better and better at taking those trades. Now, some of those trades are going to work out and some of those trades are not, and that's perfectly fine. That's how trading works. That's how real life works. Your job as a trader is to continue to be present and take the trades as they come up in the correct size and with the correct entries and exits. So if you're feeling challenged, stressed, or even a little bit fearful, you know, this is really for you. So just a little bit about my background. I don't want to go too much in that because I want to get exactly into what the one page of rules is. And by the time you walk away at the end of this presentation, you'll have exactly what we're doing with this one page of rules that's resulted in over 500% net percentage gain in just the last 6 months. So my very humble beginnings, I grew up in a dairy farm in Mink Creek, Idaho, which is outside of Preston, Idaho. If you ever seen the 2004 movie Napoleon Dynamite, you know, that was set in my hometown, you know, so it's not like I grew up with a silver spoon in my mouth or anything like that, but I did have the fortune to go to college at Brigham Young University in Provo, Utah, met my wife. These are our 3 kids. Kind of got to update that picture. The kid here on the left now is a little bit bigger than that. He's 6'10" now, and she's about 6 feet tall. So need to update that picture, but you get the idea. So I figured out all this trading stuff when I was young. I've been trading over 22 years, you know, so since I was in college. Life is pretty decent. You know, I'm not a Lambo and Ferrari type of guy or anything like that. But things that I do kind of put in my lifestyle venue is I take every Friday off. You know, I generally don't work Fridays. I trade a couple hours in the morning, Monday, Tuesday through Thursday. And then after glancing at some charts on Friday morning, I'm done by about 7:30 my time. My family and I, we travel a lot, obviously asterisk, not in 2020, but I've taken my wife and kids all over the world, everywhere from Cuba to China to this is my wife and I in Vienna, Austria a couple years ago. This is one of the famous baths in Budapest. So I love to snowboard. I snowboard about 15 days a year, and I wakeboard and wake surf about another 15 days a year. And so today is going to count as one of my wake surfing days because I'm going to go wake surfing as soon as we get off this call here today. And this is where I spend most of my time in the summer. Like we mentioned, this is right here in Spirit Lake, Idaho. So I do believe in serving and giving back to the community. Sometimes I've given away over 20 hours of my time a week, and give as in, you know, charitable contributions. I've given over $500,000 so far. Spent a lot of time in the mountains of backpacking, camping, hiking, all that kind of stuff. But, you know, in my day job, I run online businesses and sold over $20 million so far, and speak at events all over the world. You know, this is me and London, UK, one of those last live seminars we had before the whole COVID shut down. And you know, this isn't something that I take lightly. I don't work out of my basement. I have an office here in Spokane Valley, and if you guys ever happen to be in the area, except for obviously when we're on the road, this is just one of my recent trading locations. You know, the kind of trading that I do, you don't even need Wi-Fi really. This was from a couple weeks ago, traded from that exact chair and made a couple nice trades, 10%, 20% gains over a couple days in Dominical, Costa Rica. So I believe in the opportunity to trade gives us the opportunity to give back and gives us the opportunity to do, you know, things like that, things all over the world. So if you ever happen to be in Spokane, give us a call. We'd love to go to lunch with my customers. That's one of my favorite things, actually. It happens on a monthly basis or so that a customer happens to be in Spokane for whatever reason. We go out to lunch at my favorite Thai food place. It's kind of a tradition. So I'm going to give you right now exactly the one page of rules that we've talked about so far. And as you're taking notes, make sure that you ask questions in the questions box. I can't really answer the questions as we're going just because they're on my screen and I only have one screen where we're at, obviously right here, but we'll take some time at the end to answer any questions. So here's really the steps. Here's really the key to get all that I already talked about. Step number one is you're going to want to scan for and trade the BMWs and Ferraris of the stock market. And I'm going to tell you that those are momentum stocks. I'm going to teach you how to trade long. I'm going to teach you how to look for one very specific, very learnable, easy to identify setup. I'm going to show you tons of examples of that setup here in just a second. And I'm going to teach you step number 3, which is how to keep your risk reward ratio absurdly high, let your winners run, and cut your losses quickly. Okay, so let's talk about step 1. Why momentum stocks and what are we looking for? Why are we going to trade? Why do I call momentum stocks the BMWs and Ferraris of the stock market? Because quite frankly, it's next to impossible to screw up stock trading if you can follow these 3 steps. So stock trading success defined. There are 1,000 ways to make money in the markets. The problem, all of them are hidden amongst tons of crap that doesn't work. This is one of my favorite quotes from Richard Dennis. Now, if you're not familiar with Richard Dennis, you should definitely look up the story of the turtle traders. And the turtle traders were a 1980s version of kind of what we're doing here today. It was a trend following system. Sponsored by Richard Dennis, who's one of the most famous futures traders in the world. He took, I believe it was $5,000 and turned it into about 20 million in the course of a couple years. And that's what we're going to teach you today. We're going to teach you a way of timing the markets and making money in the markets that does work and is proven out over time. And you can prove it for yourself as well. Once you get the setup down, sure, you can branch out, trade other setups, learn, discover, and research other methods, but get this down first. I want you to have just a rock solid bedrock foundation of trades that you can take. Now, we're not talking day trading or anything crazy like that. We're talking typically these trades last from a couple days to a week or so. And, excuse me. And in the average month, let me take a drink of water here real quick. And in the average month, we perhaps have 20 total trades that come on. So we're not talking about high volume or anything like that at all. Because I want to teach you, frankly, how to have consistency over months, which is much more than having just consistency over weeks, which is much more important than just having winning trades. And you can always kind of tell where someone's at in their trading career by the results that they talk about. If they just talk about having a winning trade here and there, right? That's great, but that's the very beginning. You also want to have winning weeks, which is a lot harder, and then you want to have winning months, and obviously on top of that, you want to have winning years. So let's talk about this momentum trading, exactly what momentum trading is, and why I call it the BMWs and Ferraris of the stock market. Well, momentum investing, this is direct from Investopedia. Momentum investing involves a strategy to capitalize on the continuance of an existing market trend, right? So we're not trying to time the exact bottom or get the exact top. We're going to get in on the continuance of an existing market trend. It involves going long stocks, futures, or market ETFs showing upward trending prices and short the respective assets with downward trending prices. Momentum investing holds that trends can persist for some time, and it's possible to profit by staying with the trend until its conclusion, regardless, no matter how long that be. For example, momentum investors that entered the U.S. stock market in 2009 generally enjoyed an uptrend until December 2018. So is everybody in general familiar with that concept of momentum investing and momentum trading? Let me make sure. I can't really see the questions as I'm going, so that's going to make it a little bit hard. But if you have questions as you're going through, go ahead and type them in the questions platform. So that's what we're talking about, momentum trades, momentum investing. So here's some of the benefits of trading momentum stocks. Well, benefit number 1, you have the potential for high profits over a short period of time, right? These are stocks that are going to move. I mean, they're stocks that have moved and have a good chance of continuing to move. You're going to actually leverage the market's volatility to your advantage, and you're going to leverage the emotional decisions of other traders. So why is this important? Well, because quite simply, trading the right stock, ones that are momentum leaders, tilts the odds slightly in your favor right out of the gate. One of the Newtonian laws of motion is an object in motion tends to stay in motion until acted upon by an outside force, right? When a stock's going up, it has a tendency to drift higher, right? It's not a 50-50, it's not a 50-50 bet. If you have a stock that's continuing to build a trend, no, I'm not talking like, you know, parabolic or anything like that, but I'm talking about something that's building a nice trend at a 45-degree angle. Well, it's not a 50-50 shot that it's going to go up or down on any particular day. It's slightly slanted in favor of continuing to rise. And that's the advantage of trading these momentum stocks that are already moving. It also speeds up the trading process, such that trades will either be losers or winners in a matter of days, right, instead of weeks or months. This allows you to compound your wins much more quickly. Which would you rather trade? A stock that goes up 15% in 2 weeks, or a stock that goes up 15% in 2 months? You know, it's quite obvious. It's a lot better to trade something that goes up 15% in 2 weeks. So can you see why so many experts and successful traders view scanning and picking the right stocks as critical for your success? You know, it's pretty obvious. So here's some more proof. This is from NASDAQ.com. This is one of their articles. This is proof that momentum strategies work. These are usually scientific or academic articles that kind of go through and establish, talking about stocks that have momentum, and typically those are going to be growth stocks, and proof that if you get into those stocks that actually works. This is from UCLA School of Business. Momentum investing works, but why? Right? After a quarter century of sprawling study, it's time to narrow the focus and settle on an explanation. And from the Wall Street Journal, 5 investment trends that skyrocketed in 2020. Well, one of them was growth stocks and momentum stocks. So how do you exactly define these growth momentum stocks? Well, here's exactly how you do it in Thinkorswim, TC2000, MetaStock, or whatever platform that you want to use. Here's what you want to look for. You want to look for momentum stocks and ETFs, excuse me, that over the past month, 3 months, or 6 months. These are 3 different scans. So one is 1 month, one is 3 months, and one is 6 months. You want to find stocks that have grown faster than the rest of the market, the rest of the comparable universe, at a 90% percentile compared to their competitors. Now, you won't be able to get that kind of operation in some of the Thinkorswim or MetaStock, so you're going to have to use a proxy for that, and the proxy would probably be something like, in 1 month, the price growth has increased over 20%, over 3 months it's increased 40%, and over 6 months it's increased 80%. But to simplify it, you're looking for, and this is a TC2000 scan, and it might exist in MetaStock as well, you're looking for something that has outpaced the growth of all of its competitors over the last 1 month, 3 months, and 6 months. Right, so the stock has already moved quite substantially. We want to scan for an ADR of 6%. We'll explain what ADR is real quickly. ADR is just your average daily range. This is not including overnight movement or anything that happens when the regular market's closed. It's just basically the high minus the low, averaged out over the last 20 periods. And this is expressed in a percentage. Now, when it's expressed as a percentage, this is basically a proxy for volatility, right? So a 6% volatility means that the stock starts the day at $100 and it has an ADR of 6%. It's quite probable by the end of the day that stock will move to 106 on the upside or down to 94 on the downside. We also are going to scan for stocks that have at least $10 million in daily price volume. Price volume is the number of shares traded times the average price that day, or as a proxy for that, if that doesn't exist in your platform, you can simply scan for stocks that have at least 1 million shares traded. Okay, quite simple. So those 3 things, those 3 elements, put those in your scans. And remember, you're going to do that for 3 different time periods: 1 month, 3 months, and 6 months. And what that's going to do, you're going to get some crossover. The ideal would be to have no more than 30 stocks appear in each of those scans. If you're getting too many, you can lower if you're not getting enough, you can lower your requirements. If you're getting too many, you can tighten your requirements. So sometimes this number that stocks to qualify will obviously fluctuate. So even up to about a month ago, this number was really low. We were only getting a couple stocks a day that qualified. Well, now the market's turned and is a little bit more on the bullish side, of course, and that number is accelerating. I think just the other day we had 30 or 40 that qualified in each of the 1 month, 3 month, and 6 month. Now, we only want to start trading lower ADR stocks as your account grows. Now, remember, by lower ADR, if you have less than $200,000, I wouldn't recommend trading anything less than 5%. Now, what's the reason for that? Like we talked about, it goes back to compounding periods and the ability to get your money reinvested. If you're in a stock and it's only moving on average of 1% a day, even if it continues to go up, you're stuck in that stock for a number of days when you can put it in something that moves 5%, 6%, 7%, or 8% a day. Now, obviously, when we're talking about ADR and the volatility, that's not, that doesn't mean that it's going to go up 5%. It also could mean it could go down 5%. Volatility is volatility. It's not a measure of market prediction or direction, just a measure of the volatility of the actual stock. So here's what we're looking for. Step number 2, we want you to trade long, looking for one very specific, very learnable, easy to identify setup. So here's the entry criteria and chart setup for this one very specific setup, which we usually refer to as a HTF, or high tight flag. HTF. Goes by a lot of other names. Some people call it a bull triangle. Some people call it a pennant. There's 1,000 different names for it, but high tight flag is the most descriptive and frankly the most accurate. Here's what we're looking for. I want you to pull up a daily chart and a 1 hour chart. And the 1 hour chart is just for entries. And I want you to put a 10, 20, and a 50 SMA on both charts. What we're looking for is a clean, smooth chart surfing the moving averages. It's a momentum stock, obviously, because it came up in our scan. So we know it's gone up quite significantly last 1 month, 3 months, and 6 months. It has a minor, small pullback. And as it pulls back, it goes to the 10, the 20, or sometimes the 50 SMA and surfs alongside of it. The trading range narrows over a few weeks or days. As the narrow range price candles are put in, the price consolidates and kisses an SMA. This right here can be worth millions of dollars in your trading just by following this specific, very simple setup. I know it has for me and for many others of my friends. This combined with this stuff that I'm teaching you today really is kind of the bedrock of a trading career. If it's a low cap stock, don't settle for any choppiness. It should be smooth. If it's a large cap, it's okay to accept a little bit more bouncing around. So here's some examples. I've got some MetaStock examples here in a minute. These are these are daily charts on Thinkorswim. So you can see here's Tupperware, TUP. Not a growth stock, not a tech stock, a high flyer, but nevertheless, you can see you had pretty significant price movement from the bottom here. And as the price continued up, it formed a high tight flag right in that area. You can see I drew in those white lines, and the horizontal white line is actually my entry. So we entered at the horizontal white line, 1386, and we held it till about right here, which was about 27. So it was about an 80% gain on that particular one. Hold on, I need to just take a little sip of water here. Okay, sorry, I'm back. The next one, also not a high flyer, not a tech company or anything like that. Lumber Liquidators. It's a retail lumber liquidating company. You can see it also forms a high tight flag right in here that we entered. And there was another entry on this one right here. Here's Kirkland Products, which is the company behind Costco. You can see the high tight flag drawn right there. You see where we entered, and this line up here is actually where we got out. Oh, actually, no, we actually entered again right in that area. That's why we have a white line there. This one is Celsius, which is a energy company, energy drink. You can see it's forming this high tight flag right here. After a very significant run up, traded sideways, the volatility contracts. It appeared on our scans, and we entered right in there. How about MetaStock? Obviously, since a ton of you use it, here's what the scans look like in MetaStock. This is for Appian Corporation, APPN. This one is, let's see, we have the, excuse me. So this is the 1 hour over here, so we can ignore that. Just take a look at the daily chart. You can see on the daily chart, it's forming a high tight flag right there and right there when it popped up on our scans. Or here's another one for MRTX. You can see it forming a high tight flag right there after having very huge price movement from its base here at 55 or so all the way up in the 200 range here. Here's another one. This is mRNA. And mRNA has had tons of different setups over the past year or so. You can see one back here. You can see another one right here, obviously. And some other decent ones right here. This one didn't have a ton of follow through, but still would have been a profitable trade. And it goes on and on. This is Kodak. Kodak forming a high tight flag right there. And all of these went on to be, at least profitable trades, if not huge winners. So step number 2 is we're going to teach you how to trade that one very specific setup, like we mentioned. Very learnable, easy to identify. The strongest ones are going to find support on the 10-day SMA. The stronger ones on the 20. And the ones that are a little bit slower on the 50-day SMA. What you want to do is you want to buy at the opening range highs of the 1 hour candle when you have an obvious range break from that high tight flag. When it's obvious that the range is no longer consolidating, getting smaller and smaller, the range is expanding and it's having a breakout, that's what you want, then that's when you want to enter. Excuse me. For a valid trade, you want to make sure that the your entry price minus the low of the day is less than or equal to the average true range on a 14-day basis. Okay, so we talk about these two. This may be a little bit confusing. We got ATR, which is average true range. And we got ADR, which is average daily range. Remember, average daily range is expressed in percentage. ATR, which is average true range, is expressed in dollars and cents, right? So we want to make sure that we get into a stock before it's moved what it usually moves in the day. So ATR does include gaps because it includes yesterday's close with today's prices. ADR doesn't include gaps, and it's just based on the daily highs and lows of the last 20 days. And here's the simple formula for ADR. Basically, take the highs and the lows of the last 20 days. The high divided by the low, the last 20 days, and add them all together, divide by 20, turn it into percentage, and that's how you get ADR. So here's more proof. This is from Investors Business Daily, which is one of my personal favorites. Smart chart reading, high tight flag can deliver skyscraper sized gains. This is from Yahoo Finance. High tight flag is rare pattern that can deliver incredible gains. And let's move on to step 3. How do you decide when to enter and exit these exact trades? Now that we've found stocks that are moving faster than the market, they're momentum stocks, they're high flyers, right? They're exhibiting pretty substantial price growth over the last 1 month, 3 months, or 6 months. They've now had a nice pullback. They've consolidated, the volatility's contracted a little bit, and they're surfing a 10, 20, or 50 SMA. Well, when we initially get into the trade, our initial stop is going to be a few cents or ticks below the low of the day, not a number that ends in 5 or 0. We're going to set our stop and go away. We're not going to watch every tick. This is not day trading. That's not anything that we want to be involved in. We want to be involved in trades where we get in at exactly the right time and milk it for all it's worth. That's what this is about. Then 3 to 5 days after entry, if you're not stopped at your initial stop, sell 1/3 to 1/2 of the entire position and move your stop to break even. So if the market's choppy or the position doesn't look super healthy, or if there's something weird going on in the market, be super conservative and sell 50% on day 3 and hold the balance. If you're in a great trending market or positions that look A+, be super aggressive and just sell 1/3 on day 5. That's going to give you the highest potential to milk as much out as you can while still taking some of the profits off the table and still getting your stop to break even as soon as you can. You're going to exit the remainder of the position on the first close below the trailing 10 SMA, right? So you're going to hold the remainder as long as the stock continues to go up. Why would we ever get out, right? And how do we know when it's kind of starting to falter? Well, when it closes below the 10 SMA, that's usually the first sign that something's faltering. So let's talk about our risk-reward ratios, kind of like we covered in the beginning. And this is why swing trading is so much easier than day trading by far. a lot of times when people get into day trading, they're getting into situations like this where they're risking $5 and the reward is $1. Well, how often do you have to be right if those are the kinds of trades that you're taking, right? If you're risking $5 and the reward is $1, well, your break even on that has to be 83%, right? So you have to get 83% of your trades right, and that's just to break even. That's not to make money. Now, on the flip side, when we're talking about swing trading, when we're talking about putting on small positions in exactly the exact spot where the market's taking off in this particular stock, well, what can happen? Well, we can risk $1 and oftentimes make 5. In that case, we only have to be right 17% of the time. Or in ideal situations, if we can find setups where our risk is 1 and our potential reward is 10, well, with that kind of risk reward ratio, we only have to be right 9% of the time to break even, right? Currently, right now through this year, I think our current batting average is we're right at about 28 to 30% in terms of win to loss ratio, and we're still making a ton of money. Well, why is that? Well, because when we have a winner, the winners are big, and we have a loser, which we have lots of losers. The losers are very small. I mean, they're so small that you generally forget about them the same day or the next day, right? We're talking about a couple $100 in losses, and the average winner is 5 times that, so at least 1,000 or so. So how do you do that? How do we make sure that we keep our risk reward ratio absurdly high, let our winners run and cut the losers quickly? Well, that involves talking about expectancy. So expectancy is quite simply, what would happen if we took 1,000 or 10,000 or 1,000,000 of these same trades? What would we make on average? Well, with a win rate of 30 to 40%, let's be pessimistic and use 30%. Our winners should be 5 to 10 times the size of the losers. So let's use the worst case scenario. Let's just say we can only find trades that are 5 times. Well, your R is your risk on each trade. And if you aren't familiar with the concept of R, you should get familiar with it very, very quickly, because it will become your best friend very quickly. So if you have your risk on each trade, let's assume $100. Your expectancy, or the mathematical calculation to tell you whether this actually has an edge or not, has a profitable edge, would be the formula there at the bottom. And so that formula is right here. 30% of the time, we're going to earn $500. So 30.3 times 500. And then the rest of the universe is 70% of the time, we're going to lose $100. Well, that turns out gives us the number of 80. That's our expectancy. That means on average, you risk the possibility of losing $100 on each time that you make a trade. But over time, we're not talking any one individual trade. Every single trade nets you $80. So if that was the case, as long as the expected value is positive and you use proper risk management and you don't put too much capital risk in any one trade, the count is going to grow over time. This is $1 million takeaway right here. As long as your expected value is positive and you use proper risk management, don't put too much capital at risk on any one particular trade, the count will grow over time. That's just a simple fact. Well, how many of those trades would you want to make? Let's use that same exact setup. The expectancy of 80. You're risking 100. How many of those trades would you want to make? How many times do you want to take that same trade? What do you think? I'm looking in the answered questions here. Let me see if I can get to the unanswered questions. Yeah, I can't actually see any of the questions moving on my screen. So if you guys have questions, go ahead and type them in the questions box. Well, the correct answer is you take the trade as many times as it came up, right? You would take an infinite amount of those trades, right? Because if you're risking $100, but on average, you're making back every $80 for every single transaction. That's averaging out your winners, averaging out your losers, right? That is a profitable trading system, and that is the holy grail. That's what you're looking for. You're not looking for something that has a 100% win rate or a 95% win rate. You're looking for something that statistically and mathematically and mechanically grows over time. And that's exactly what this is. So when are these setups available to trade?
Hey, Kurt.
Yeah, sorry, Jeff, can you hear me okay?
Yeah, I thought it might be a good idea to break in with a YouTube question for you.
Oh, okay. Yeah, great.
Zaid from our YouTube chat says, great presentation. I notice you're using the normal scale on daily charts, even though the stock price has moved significantly higher. Do you ever switch that to a semi-log scale?
I don't personally, but yeah, obviously it would make it easier to see over time. Obviously, price discrepancies between charts that have moved quite dramatically. Log scale is going to give you a better representation. Absolutely.
Right. And then we have a request from the audience. It's a bit unique for today. Somebody wants to know if they can get a copy of your slides.
Yeah, I think we can do that, can't we?
Sure.
If you want to copy the slides, sure. I'll just mention our customer support email here, and people can email us for that. It'd be support@tradingscience.com if you want to copy the slides.
Okay, sounds good. I'll let you get back to your normally scheduled programming.
All right, thanks. Awesome, Jeff. Okay, so here's when these trades present themselves. Now, remember, we're only going long, so we're not looking for short opportunities, and we're looking for momentum stocks that have outpaced the market. So in general, you can say, yeah, we're looking for certain time periods in the market, but this time period in the market exists all the time. Not all the time, but quite frequently. It's a normal occurrence, and that a normal occurrence is on something like the QQQ or the Russell 2000, but the NASDAQ tech index is what I use for most of this. If you're in periods of time where the 10 and the 20 SMA are pointing up, you're going to have these trades exist. So if I'm going to draw a red line from here to here, was a lot of trades in there. Well, then what happens in the periods when the 10 and 20 SMA aren't pointing up and the market isn't either neutral or slightly bullish or really bullish? Well, during that period of time, you're going to get stopped out, and there will be some opportunities present themselves, but not as many, and it's kind of a slow period, and you can either take it as a slow period or trade something else, trade a mean reversion setup, or go on vacation, do whatever you want. So in this period, this lasted a month or two before we had that huge sell-off. This was last year, but then again, last year from May until about November was crazy good for trading, and then we were slow again for November or so, and then December till about February was fantastic. And then again, we had a little bit of slow period the last couple of months, and now we're finally into a huge up period again. So let's go over just a few recent trades. Here is Zillow, entry on 9/15, 17% gain. You can see the setup right here. The white line was our entry. Apps on 9/15, 26% gain. You can see our entry there, and that one is actually pretty crappy entry. We still got 26% gain. Fiverr 9/23 entry, 18% gain. NIO 9/29 entry. We traded this multiple times. You can see entry here, and our entry right there that we're talking about here was 19.95% gain. DNLI 22% gain. Kirk 56% gain. Rig 15% gain. Tupperware, of course. Who would have thought you could make 80% gain trading Tupperware stock? So hopefully by this point we've come to the conclusion, getting close to our end of our time, not totally end, but we're at 1:44 Pacific time, so we've got a few more minutes. I hope you enjoyed our time together. I hope you found this information valuable. I hope you can try at least some of these strategies. I've really literally have laid out exactly what we're doing, exactly what I trade on a daily basis. And hopefully you know much more about trading and specifically risk and reward than we first got started. And perhaps it's possible you might feel a bit overwhelmed and curious on how to start. So just as a recap of what we covered so far, we've covered step 1, which is how to scan for and trade the BMWs and Ferraris, which are momentum stocks. We've covered how to trade long, looking for one specific, very learnable, easy to identify setup. We've taught you how to keep the risk-reward ratio absurdly high, let your winners run, and cut your losses quickly. And as I was coming through this and talking with Jeff and about this presentation, I presented here from MetaStock a couple of times. Of course, it's going to be hard, almost impossible for you to create lasting change of your trading just from this information. I did it. I kind of pick up these pieces. I'm not the inventor of this information by any means, but I kind of pieced some stuff together from multiple sources over the years and put it together and made this trading methodology. And it's something that really works, and it's worked for a lot of people, a lot of my customers, and myself, of course, as well. So you're going to love what I've got for you next. Of course, my first choice is I could share what we've learned thus far, and we can part ways. But the second option would be for me to take a more active role in responsibility and your success, and help you create an ongoing, growing, and mutual rewarding situation. I'm going to give you some shortcuts and support systems and additional insights that are going to make this change even deeper. So if you'd love to hear more about what I can do, that's what we're going to talk about now. So I'd like to introduce to you quite quickly our Stock Trading Science mentorship. So this mentorship program is what you'll receive if you decide to join with us. The normal price, when we're going to advertise this on YouTube, you may start seeing our ads on YouTube and Facebook. It's going to be $2,995 for an unlimited lifetime membership, never expires. I hate nickel and diming people. I hate upcharges. I hate an additional product you got to buy at every turn. For people who invest in this is a one-time fee for basically a lifetime of access to this trading system and all the advancements and nuances and tweaks and additional things that we add to it. So once you invest in our mentorship with this Stock Trading Science, that's the last thing you would ever have to buy. Now, it's going to be a small price to pay. The profits from maybe 1 to 5 good trades for a lifetime of great trades. So basically you can think of it as we phrase as a mentorship, and quite simply, learn to trade this way. After your first 1 to 5 trades, you're going to be at break even considering what you pay for the membership, and everything after that obviously is profit in your pocket for a lifetime of great trades. And this is a matter of trading that's not going to change. It's not an algorithm thing or black box that's going to break. It's a methodology. The stock market has traded this way for hundreds of years and will most likely trade this way for hundreds more years. So here's what you're going to receive today. The mentorship includes training. So it's online video training in our membership area. You get 3 recorded training sessions that cover the 3 core aspects of the strategy, which includes our scans, the setup and entry and exit rules, and the position sizing. You get the software plus every scan, indicator, and setting you'll need, completely up and running on your trading platform. We'll log in with you if we need to help make sure you get it all set up. Now, remember, we talked about the trainings. The trainings are all posted on the membership site, along with the indicator package, the software, the scans, and everything you need. It's all on one membership site. When you log in, immediately upon logging in, you'll be able to start going through the training, and you'll be able to load the trading platforms into Thinkorswim, TC2000, MetaStock, TradeStation, TradingView, and possibly a couple more that we're working on right now. So basically, you're going to get everything that we see right here on the screen. You'll get this complete setup for this is what it will look like in Thinkorswim. You're also going to get on a daily basis mentorship from me and my mentoring students through a Slack group. Slack is a free software that you download. Kind of works like group chat, but you get daily trading chat, notifications of setups, covering our active trades with members and moderators using Slack. So as I take a trade, you can look over my shoulder and see exactly as I take trades according to exactly to following the rules, the same rules that you're going to be following. We also give you our full trade journal, which is an updated Google Docs that's going to show all the moderator trades or trades that I take with complete results. Right there, we're already in 6 months of this program, we're already well in excess of 550% net percentage gain. Like we take this trade was up 10%, this game trades down 5%, this trade's up 20%. If you add all those up, it comes up to 550% that I've taken live in front of students since I started this program just in December in the last 6 months. You also get monthly live customer support webinars. Those are live interactive with me. They're generally at 6 p.m. Pacific on the 4th Monday of every month. And if you can't make it live, of course, they're recorded. And you get unlimited access to personal support. All of this, quite simply, total value is well over $8,000. When I run this in a retail basis and sell it, when I have to pay for advertising, it's going to be a minimum of $3,000. This is all backed by solid evidence, real results. Can kind of show you some recent portfolios of real gains in real accounts. 19% gain here on a variety of instruments, 5 different stocks. 17% here, 7% here, 6% here. One of these is a Tesla trade that we took. Another one is TAN, which is a solar ETF. 22% here, 14% here on a huge amount of different stocks, everything under the sun. Futu, GPTC, Kirk, Snap, SQ, TAN, Tesla, and in other accounts. It just goes on and on. And just to show you one crazy screenshot, this is not my personal account. This is another colleague who's trading the same strategy. Just take a look here. When the strategy is going well, it goes really well. We hold on to our gains. That was 3.8 million unrealized gains How many times would you need to do that to have a decent trading career? Yeah, right there. 3.8 million in open unrealized profit at that point, trading the exact same stocks that I'm going to teach you how to trade. So we're going to show you every single closed out trade, winner or loser, since we opened our doors in December 2020. So far, we're at 560% net gain, 36% win rate. Average win is 26%, average loss of 5%. The risk reward ratio of 1 to 5.2. So that means for every dollar we're risking, we're making back $5.20. And our expectancy, this is most important, is 1.23. So a 1.23 R. So like if you risked $100 in each trade, on average, you'd make back $123 on each trade. This is all covered by our ironclad 2-part performance guarantee, which is quite simply go through the entire training, participate, start trading live or in demo mode. If you don't love it, just simply submit your trading log. Show us that you've done something. We don't want looky-loos. We want people to actually do something. Show us that you've done something, either taking a demo trade or taking a trade live, and submit your trading log. We'll issue a refund. Learn the system, use it for a full 6 months, execute all the trades as they come up. If you don't make at least 10x your system investment and profit, I'll personally work with you for free until you do. So either way, you love it, you make good money with it, or you hate it and you get your money back. I don't think we could be much more fair with that. So I'm going to skip a couple of these, but the basic thing to help you treat your bank account kindly today, I want to give you guys a deal because you're here with MetaStock on a Saturday. I love Jeff. I love MetaStock. I love the company. We're going to do this for you guys today for the simple price of $14.95 if you sign up by midnight 4 calendar days from today. Now, to claim the spot in the mentorship, you get the full online access that we mentioned, the full indicator software, you get the online trading, the Slack group, the trade journal, the customer support, the personal support, all for $14.95. You can order online, stocktradingsites.com/order, or book a 15-minute phone call with Kurt directly, stocktradingsites.com/call. Now, that mentorship offer, the discounted price of $14.95 expires at midnight, 4 days from today, no exceptions. And I'm going to take just a 30-second break here, Jeff. If you could come on for a second, I need to do something. Just
do you want me to sing? We do have some questions if you're ready. And
okay, yep. Just give me 30 seconds and I'll be back.
You're fine. Okay. I'd like to actually type the link in there. So let's see, stocktradingScience.com/order. Let's go ahead and get that in there. Hope everybody's enjoying themselves. Okay. Here's that. We'll go ahead and get that posted out. I think he had the cough. That's my guess. In any case, hope everybody's doing well. We are getting a lot of questions in regard to whether this works for stocks and options. And I will definitely ask that once we get Kurt back. And I'm just looking for questions that we normally get and stuff like that. So one of the questions that's been asked all day long is, am I going to get a copy of the recording? And I will tell you, yes, absolutely. If you're watching on YouTube, the video link that you're using is basically the recording. If you're watching a GoToWebinar, you will get a recording, or you'll get a link over to our YouTube channel. So that'll allow you to go in and see it and subscribe and all that kind of stuff. So Doug actually asked, will this stay on YouTube for a while so we can watch it next week? Yes. In fact, you can watch it, Doug. We're going to leave it live and probably have like 10 or 15,000 views on it by next week. Zaid, I'll ask you a question once we get Kurt back. Shiana says, is this plotted in MetaStock or something else? I actually helped them put together the code for MetaStock. It works with MetaStock, and so you can absolutely use it with MetaStock. So it doesn't work with just MetaStock, but that is definitely the preferred option today. So in any case. Jonathan says, amazing stuff, such a great presentation. Thank you. And there you go. I hope you're enjoying yourself today. Thank you for coming. Kind of out of things to talk about. Anyway, so for those of you that, let's see. So we'll just talk, I can talk forever. If you are new to MetaStock, I want to say thank you for coming today. If this is your first time on the YouTube channel today, make sure to like and subscribe and maybe even share the stream. We do appreciate that. That does help quite a bit. In regard to those of you that are watching on YouTube, if you want to get a free copy of Stocks and Commodities Magazine, Stocks and Commodities Magazine is the sponsor for today's event. You can go to Traders Summit or metastock.com/Traders Summit. You can sign up, register for today's event, and you can get a free copy of the Stocks and Commodities Magazine. So Frankie Kurt says, do you have any experience with European brokers? Not a lot. I've done some work with European brokers. We do get the ability to, I have had the privilege of traveling a lot for MetaStock over the years, and Europe's one of my favorite places. I don't know, we've done, let's say, demos of MetaStock over the years as part of that. So in that particular case, Jonathan says, what a phenomenal day. I'm glad you're enjoying yourself, Jonathan. Thanks for coming today. It was good. Kurt, are you back?
Hey, Jeff, I'm back. Yep, I'm back.
Okay. All right. I was going to have to start telling dad jokes or something. Good.
Sorry, you know when you're holding back a cough and you're continue to talk and you're drinking a little water and then the cough kind of
Yeah.
So I had to come into the room and hack some lungs out for a couple seconds. Sorry about that.
I call that a rinse.
Yeah.
Listen, we have a lot of questions that have come in about options and how well this will work with options.
Right. Okay. So let me flip to. I don't actually have an option screen, but yes, it does work with options. Obviously, you have to be trading stocks that are optionable or have options available on them. And we have a little training on that in our advanced section that kind of details, okay, if you want to use options, here's what you do. Typically, we're going to be buying options that are 4 to 6 months out that are in the money options. So we're not using, out of the money options, we're using in the money options kind of as a proxy for the stock. But what that allows you to do is kind of, for the same dollar for dollar bang for the buck, you invest about 1/3 the amount. So it really helps with people with smaller accounts. But yeah, that's something we use and recommend. And you're going to be doing pretty simple stuff with some in the money call options 4 to 6 months out.
Sounds great.
Let me answer a couple of the other questions that are generally come up. People ask, how much capital do I need? What kind of computer do I need? What kind of brokerage account, trading software? Or for capital, I'd recommend that you had at least $5,000 to invest. The simple reason for that is, we don't want you to put we don't want you to put all your eggs in one basket. Would never recommend you putting more than 20% of your account in any one stock. So with $5,000, you could get 5 different positions started with about $1,000. And generally, our average winning trade is what was it, 24% or something like that. So you're talking, the loss would be, if you took a loss on it, it'd be $50-$60, and a winner would be $250-$300. Number 2, what kind of computer do you need? I'm personally a Mac guy, but any PC or Mac will work perfectly fine. Most of the software providers now are kind of agnostic. Whatever you want to run it on, you can get it for that. What kind of brokerage account, what kind of trading software you need? I highly recommend you use something like MetaStock or Thinkorswim, and then whatever brokerage account for the executions. Really, in our world, doesn't really matter that much because we're not day trading. You don't have to have hotkeys or lightning fast execution. So whatever you want, really, as long as you can get your charting platform to do what you want to do, the executions are a piece of cake. We talked about the guarantee. The guarantee is pretty simple. We want people to try it out. We want you to come do it and learn the methodology and take a couple trades. Even if you take them in a demo account, that's perfectly fine. And we can't promise, we can't guarantee anything. All we can guarantee is that you're happy. So we're guaranteeing that if you take the trades and you follow along, that you're going to be happy with how it works. Number 2, who's the most likely to succeed? Who's the most likely to fail? The most likely to succeed is kind of an advanced beginner or a low-level intermediate trader, I would say, because they don't have all these bad skills built up. They're willing to follow directions and they're willing to follow some mechanical rules and learn it over time. The third one is, how long does it take to learn this and get good at it? I'd say you got to do it for at least a couple months to really get good at it. But hopefully that answers most of the questions. Again, to claim your spot, go to stocktrading.science.com/order. Or if you're on the fence, I understand that. I get it. It's still, I did cut the price in half from 3,000 to 1,500. If you want to book a 15-minute call and kind of see if it's for you, go to stocktrading.science.com/call. Happy to talk with you directly and give you, a no BS response on whether it's, it's right for someone in your position. So again, mentorship offer, the $14.95 price expires at midnight, 4 calendar days from today, no exception. And I'm basically out of time, so turn it back over to Jeff. Sorry about my coughing issue. This is one of those weird, crazy stuff. Of course, we do have tons of people that have success with it. These two gentlemen have already doubled their accounts in less than 6 months doing this exact same methodology. This one here, Brad, had never traded before, and this one here, Devin, had traded a little bit, and both of them were up around 100% in the last 5 months. So I've got tons of testimonials, obviously, to go on for days, but just turn back over to Jeff and sign up, stocktrading.science.com/order, $14.95. That's the last dime you'd ever pay. Everything else is free upgrades on this methodology as we continue to add and build to it. Glad you guys could have me here today.
Quick question for Sheena for you. How often do you open positions? Like how often are you in a stock, or how long? Might be a good one.
I'd say typically about one a day. So, in a month, you're talking about maybe 20 positions. The last couple of months have been a little bit slow, frankly. And then once we're in a position, we either get stopped out in that first 3 to 5 days, or, we turn it into a runner and we trim and trail it a little bit. And then those typically last, probably on average 10 to 14 days.
Okay. All right. Thank you very much, Kurt. I appreciate your coming in here. The link for that again is stock trading. I can't talk anymore. StockTradingScience.com/order. Thanks for coming in, Kurt. We appreciate it.
Hey, thanks, Jeff.
All right. Okay. We're going to go ahead and kind of just migrate over here a little bit. Let me change the presenter back to me. I hope you're still enjoying everything. I hope you have as much energy as when you started today. In any case, let me go ahead and go back over here, and we will talk about today's sponsor. I want to say thank you to Stocks and Commodities for sponsoring our event for the last decade or so. Such a good magazine. They've been doing articles. They've got 1.3 million subscribers. As part of like a subscription to MetaStock, you actually do get a historical archive of all of their 17,000 articles that are available, and just a fantastic magazine. One of the things I think is true about trading as well as life is like you generally got to keep getting better about trading. There's always things that you can improve about trading. And I think by having a subscription to a magazine where you can kind of get an idea of some things you didn't think about every month, it's just going to help you make sure that you're kind of on the road to improving the trading that you're doing. So Stocks and Commodities, thank you for the sponsorship of the events. We certainly appreciate it. You can get the free bonus you can get a free issue. If you're watching on YouTube, go to metastock.com/traders-summit and just fill out the registration form and you can get a free copy for yourself. It is also, we are including 2 years for free of Stocks and Commodities magazine as part of the Summit Action Pack that we're going to do today. It includes all of the training Jeff Tompkins offered at the very start of today, the Jake Bernstein add-on, 3 months of the Fulgent Artificial Intelligence add-on for MetaStock, the Magic Trader that Peter showed and did a really good job showing. You're also going to get 3 months of Learn MetaStock, Unleash the Power of MetaStock, and of course that 2 years of Stocks and Commodities. Normally all of that would be $3,835. Here today at the event, you're going to do it for $1,691. So you can take advantage of that by giving us a call, 800-882-3040. They'll be happy to answer any questions you've got, get you some information, and help you get everything set up. You can also chat online with them at metastock.com/sales-chat, and you can also sign up at metastock.com/summit deal. So there you go. I would recommend it. I love MetaStock. I think you should use it. I really do. In any case, the last speaker that we've got today is Bubba Horowitz. Bubba is very entertaining. We saved I was going to say we saved the best for last. I'll let him say that. He does a great job. I love the way he kind of talks about things, and I love kind of his style when it comes to talking. So, Bubba, how are you doing today?
I'm doing great, Jeff. How are you?
Good. I love it already. All right.
It's always great to be with you. I mean, it's an honor to be part of this event. Let me see if I can share my camera too. Maybe, I don't know if they want to look at me or not, but maybe I'll try and share. So let's say I got to share my screen first. Okay, which screen are you seeing? That's my first question.
Portfolio models presented by Todd Bubba Horowitz.
Okay, good. So we're in good shape. Well, so far we're in good shape. And let me see if I can share my camera too. And you can see my smiling face. There you go. Okay.
There you are. We can see you.
Here I am, and it's great to be here. And I do appreciate being a part of the event. It's always great to be with MetaStock. I mean, they do a great job, and they've got some great education. And it's interesting. A lot of what Kurt said are some of the things that we do just a little bit differently. But I'm a big believer in mechanical trading. I think it's very important to understand. So, and I'm going to actually try to do a twofer today because we do the same thing with futures as we do with equities. Okay. And this is supposed to be futures, but I'm going to do both. I'm going to try to do the triple Lindy today. So in the meantime, thanks for having me. And thanks to Stock Magazine. We've written a number of articles for them as well. In the meantime, I want to welcome everybody. And again, I know it's late on a Saturday. Maybe you're on the Eastern time zone. You're ready to go out to dinner and have a cocktail. Well, have a cocktail with me and we can get rocking here. In the meantime, today we're going to talk about our futures portfolio management using micros and minis, and also our equity portfolios, because they're so similar that I'm going to give you your choice of either one when you decide, if you decide to become a member. And of course, only you can change your life. No one can do it for you. Okay, so you have to make the decision in life of where you want to go and what you expect. I mean, that's really what it comes down to. And you have to make decisions. Are you willing to follow rules? Are you willing to be part of a program? And do you want to do better than you've done in the past? And I think that's always key to understand. In the meantime, as you get with everybody, I'm sure you got the natural disclaimer, because obviously past results are not indicative of future. But I have been trading for myself for 43 years. Okay, I started out as a floor trader for just over 30 of those years in 1980, and now a screen trader like everybody else, because there basically is no floor anymore. So, but in the meantime, again, there was always risk, and you have to be aware of the risk, because we make sure that you understand. See that in about 3 seconds. In the meantime, what are your goals? Okay, as a trader, as an investor, what are you trying to achieve? Well, I know most people are going to say make money, but how do you want to make money? Do you want to gamble? Do you want to trade a model that works? I mean, that's always the toughest question to ask and to get answered is, what's your goals? And if you understand what your goals are and you understand trading and the models, all you've really done is put yourself in the best position to be successful. And that's all we can do, is be in position for success and understand that markets have ebbs and flows and go ups and downs. And we are using models that we are always in the markets 365 days a year, or the 241 trading days a year, but we are never out. We are long or short constantly. Okay. Now, this is a common theory and a common stat. Amateurs want to be right. Professionals want to make money. Which are you? Okay. Do you want to outguess the market? Do you want to inflect your opinion on a market, or do you want to let the market tell you what to do? And that is probably one of the most important things I can tell you, is to quit trying to outsmart, outguess, or outthink the market. The market is neutral to people. It just trades based on money. Okay. So you want to be with the trend, as Kurt had mentioned before me. I mean, it's trend trading. And I traded with Richard Dennis back in the 80s on the floor of the CBOE. So, I know Richard, and I know his methods, and I think we've gone one better with our algorithms. But in the meantime, so today we're going to talk about drawdowns. That's the first thing. Nobody likes to talk about it, but it is a fact of life. Okay. There is no guarantees that you're not going to have a drawdown. Being prepared for the drawdowns is more important. We have a saying here at Bubba Trading: Be prepared, not surprised. Okay. I'm going to show you the portfolio models, both futures and equities. I'm going to talk to you about algorithmic trading. I'm going to talk to you about who is enemy number one. It's the math. I'll show you all the portfolios, and of course, how you can take advantage. And as always, I'll answer all your questions. Of course, if you've been with me before, you know I talk a lot, and I'll run out of time here, so I have to narrow my scope and focus. Okay, which I will do right now. In the meantime, there are drawdowns. There is no way to avoid a drawdown. I don't care who you are, how good you think you are. Drawdowns are a part of the business. Okay. If you don't understand that, you don't belong trading. Okay. It's very simple. Okay. You're going to get them. Okay. We can actually sometimes kind of pinpoint when they're going to come, but we know that they're going to come. Okay. And the point is how are you going to handle it? And if you can stay the course and follow the rules, you're going to have the best opportunity you've ever had to make money. Okay. That's what it comes down to. But know that they're coming. And I can't tell you exactly when. I just know they're going to come. Now I'll show you how I have some ideas of when they will come. But at the end of the day, it's a part of the business. And any of you who tells you differently is a liar. Okay. Algorithmic trading. Okay. Look, at the end of the day, okay, what we've really done is we built a model, based on trend trading, based on the very model that the turtle traders have built, but we have actually mechanized it totally, where it actually tells you the trades you're going to make. Okay, we only trade, once a day, if at all. We don't trade. The trades that I send come out at about 2 a.m. Chicago time. I send them. Okay, and if there's no trades, I send you an email that says none. If there's a trade, I'll tell you what the trade is, and that's it. We never reverse during the trading day. We do not get caught up with the emotion. Okay, what the algorithm is doing is it's reading all of the things that I teach people how to do, but it takes the one key ingredient out, which is the emotion and the opinion of others. Okay, so keep that in mind as you trade. And again, whether you become a member or not, remember to follow the price, follow the action, and leave your opinion at home. Mechanical trading, the major reason traders lose money in the long run is because they miss trades, let losses run, and then trades are in and they take profits far too early. Now, look, have you ever done that before? And any of you would say, no, I would have to give them a puzzled look, because we've all done it. Okay. My methods do none of the three. Therefore, our odds of winning are greatly enhanced and proven by real-time performance. We cannot miss a major move in any market. We do not let losses run. We always let the profits run. That is because the algorithm was designed to do exactly those three things. And that's our focus is always on hitting a home run on every trade. We don't always. Of course, we have losing trades. But at the end of the day, we do have a win percentage of 66%. That's pretty sustainable and also fairly profitable. Okay. Who is the enemy? You are the enemy. You're your own worst enemy. Okay. Again, look in the mirror the next time you have a problem, because you already know you have everything inside of you already to be successful. But of course, that thing between your ears happens to get in the way, and you make decisions more often than not based on an emotional basis, something going wrong, or some news item you read or heard. And you will hear this often if you become a member, which is, if you trade the news, you lose. Okay. Now, I'm a commentator. I do a lot of news for Fox and CNBC. I'm on, all the time. But again, I always tell them, they ask me about reports. What do I care about the report? The price action will tell me anything I need to know about markets. Okay. The secret is there are no secrets. Okay. That's what I want you to understand. Okay. There is nothing secretive about any formula other than our algorithm is proprietary, so I don't give out the formula, but it's about trading. Okay. Forget about all these promises of riches tomorrow. There is no such thing. There is no secret strategies. Okay. There's regular trading and learning how to understand how the market works. If you learn that, you have created a position for yourself to become successful. If you don't learn that, you will never be successful. It's really that simple. Okay. We always talk about, get your head in the game. That was actually That is my jersey. I was a coach for many years. Even I coached my son, but I also coached others. Okay. And I coached even when my son was off to college, I was still coaching. And when I retired, my saying was get your head in the game. And this is the same as trading. You have to have your head in the game. Okay. You have to understand what you're doing. Now, you don't have to watch the markets. Okay. You really just have to make the decision. Okay. Once a day. Okay. You'll know what the trade is, and you put the trade on or you reverse out, whatever you're doing, and it's over. You're done for the day. You can turn the machine off. You can go to the pool. You can go to the golf course. You can go to work, whatever it's going to do. But you got to keep your head in the formula and what we're doing. Success doesn't happen overnight. You keep an eye on the prize. The prize is long-term successful trading, not what happens today or tomorrow. Okay. Now, basically, we are trading a straight probability model. Okay. As I said, we hit 66%. Okay. That is our average over years and years and years of winning trades to losing trades. And we also know that the winners are much bigger than the losers. But if you think of trading as a game, because it is a game, it's no different than poker, gin, backgammon, or bridge. Those are all games that have a mathematical outcome, okay, that will determine. Okay, so the best trader, the best players will always win eventually. They don't win every time, but they win over time. Okay, and that's what you have to, again, keep in mind that you're playing a probability model to begin with. So if you're putting on the correct trades and doing the right type of trading, it puts you in a position for success. And again, all you can do is set yourself up to succeed. But most, unfortunately, set themselves up to fail and end up, chasing their tail away because, of course, either there's too many fake promises or they've heard too much on the news, whatever, for whatever reason, it does not matter. The reasons are very simple. Follow the rules, follow the game plan, because in algorithmic or mechanical trading, you have no opinion. Okay. We're not subjective. We're not opinionized. We don't care. Okay. Our goal is to make money. We don't care how we make it, which side of the market. I don't care what the pundits say. I don't care what news I read. In fact, I will go on record here as well. In 43 years, I've never read the Wall Street Journal or Barron's. And as of a year now, I don't even watch the business news. I watch VSiN, Sports and Information Network, all available. Okay. I could care less what they had to say because they're never right anyways. They're like the Federal Reserve. They're always wrong. Okay. We're not timing trades. We're not trying to time the market. We are looking for a trend, whether it be up or down. Okay. We only use facts to trade, which the facts are always determined by what? The price action of the market. The market tells you the path of least resistance. Okay. And you have to make every trade no matter what. Now you'll have a series of different portfolios you can choose from, but if you try to hand pick the trades, okay, you will end up losing. There is no way that you're going to outsmart the markets in general. Okay. But we have no emotional bias. We don't gamble. Okay. We simply trade the price action of the markets, which is based on the algorithms, which is based on the phases of the market, which I teach, volatility, and some other mathematical equations that come to set the market. But Richard Dennis did prove the fact that if you take people, if you take any walks of life, Harvard education, somebody has no education, it does not matter. If you have the ability to follow the program, you have the chance and the opportunity to make money. If you don't, you have no chance. Okay, and that's really what it comes down to. Okay, so what are our objectives? Well, obviously, the first one is to make money. We try to keep the variance small. We can't always control. Again, we cannot control the outcome of the market, but our positions are set in such a way. We try to be balanced within our portfolios, and we like to keep the drawdown small. And again, those are things we'd like to do. They don't always work out that way. Okay, and again, a lot depends on you if you follow the program correctly, which is do not get over leveraged, as some tend to do, especially when you're making money, because there's nothing more fun than pressing up and making money, right? But of course, we always seem to forget about the other side of that equation. Okay. And, this is a quote from Richard Dennis. I always say you could publish the rules in a newspaper and no one would follow them. The key is always the same. consistency and discipline. Okay, it's hard. Okay, look, it's hard to remain. That's why I don't like people to watch. I like them to put their trades on and go do something else, because sitting in front of a machine can only create headaches for you. Okay, so at the end of the day, you follow the program, follow the rules, you make money. Okay, now, if you've ever heard of a family office, those are typically for the very wealthy. Okay, the average guy can't get into a family office, but what I want to do is I want to create a family type atmosphere in my office, which is a way that we can all make money. We can share together. I've got my own private chat room where members of all walks of life help each other out, okay, and share ideas of markets and basically follow the protocol of the markets. That's and so that's how we help and become our own family office, because we can create an edge, as I said, which is 66%. Okay. Trend trading. Okay. Very simple. Price is everything. Direction does not matter. If it's going down, you want to be short. If it's going up, you want to be long. Ignore the news. You're going to hear that often from me, because I know how often that news affects an opinion. And if you have an opinion, you're going to lose to begin with. Okay, because opinions are rarely correct. Markets are always right. You buy a future or an option when it breaks out of a range, and you sell it when the trend changes. You never get out before the trend changes, and you stick to this system. And I can tell you that in 2019, okay, we were long the NASDAQ, either the QQQ or the futures, for 48 weeks out of the 52. And if you recall, back in October of that year, when Amazon came out with earnings, everybody started to panic. And I said, no, you have to follow the rules. And of course, the NASDAQ went on to earn an additional 50K versus those who got out. I know many got out because they couldn't take the pressure of Amazon, but it doesn't matter. One stock doesn't affect the overall index. You have to always keep that in mind as you trade. Okay, our win rate is 66%. Okay, that is a mathematical certainty. At least that's what we have done in the history of all of our models, and some of them go back almost 10 years. Okay, but is it important? It's 100% important. Okay, if you have an idea of why it's important, go ahead and chat. If you have an idea. If you don't, it doesn't matter. I mean, obviously, I'll always explain it to you, but I think it's very important for you to understand why it's important, why understanding what your win rate is, because the truth of the matter is I can teach you, no matter what your win rate is, I can teach you how to make any system a winner over time. Of course, obviously, if it has a very low win rate, it's a little bit more risk to do so. But, 66%, it makes it relatively easy. And it's something that you have to, understand. And again, if you have questions, feel free to fire them in. But self-discipline begins with the mastery of your thoughts. If you don't control what you think, you can't control what you do. Okay. And, look, I'm a big believer in that. And I'm teaching everybody off the sweat of my own back, okay, of the mistakes that I have made. After 43 years, you would think I've learned enough in this business. I'm still learning. I try to learn something every day about trading and about markets to make it even better, because we always continue to monitor our models and make sure that we're doing what is always in the best interest, of my own portfolios, because I have a position in everything. There's nothing that leaves my office if I'm not in it. Okay. So you can know that, okay, that I trade every recommendation that I send out. Okay. I'm in every portfolio that we own and that we have. Okay. Now, in the futures models, okay, we've got 5 different what we call micro portfolios. Okay, and I'm going to show those to you. Okay, as we go. So the 45K. This is as of this morning. Every Saturday morning, you get a live update report. Okay, we have 18 markets we trade in this portfolio. Okay, right now we have 7 losers, 11 winners. Okay, our average winner is 307. Our average loser is 62. Okay, obviously 61%. our profit factor is 7 to 1 here. Okay. The profit since inception of this portfolio is 85%. Okay. And that was with a pretty big drawdown at the end of last year when they went crazy with margins. But every week you get the full results. Okay. Win or lose. Again, I don't hide from anybody. Okay. I give you the honest to God truth because that's the easiest way to do business. I believe in the truth, right? I'm me and Jack Nicholson. You can't handle the truth. And of course, I knew in my mind that we were close to a drawdown. When you start to spike, because the equity curve that I send you is no different than any other chart. Okay. And a chart is a chart. So I want you to understand that, you understand that here is a spot where you might be getting a little bit frothy. And here was a spot where you might consider pressing. Now, we have certain rules and we always discuss those in training because we do a couple of training sessions a month at least live. Okay. Plus you get to come to my Monday night strategy call. Plus they're all recorded. Everything. There isn't a word that I say, good or bad, that is not recorded. Okay. But again, this is a market that's in consolidation, which is a good thing if you're looking to build on and potentially add to your portfolio. And you can only add if you have made enough money and you have the capital to do so, which means, we want you to have 3 times margin. Okay. In other words, the margin required is 15,000. You want you to have 45,000 in that account. Now you're controlling it. I'm not taking the money, but you need to have 45,000 because you have to have enough margin to cover any potential drawdowns. The 36K portfolio, okay, is very similar to the 45 with the exception it has a couple of products that are out. It only trades 15 markets, okay, with just over a 5 to 1 profit factor. And of course, you get the same thing, right? The results every week, win or lose, they show up. And again, similar pattern in where we stand. Okay, big profits since inception, but again, at this particular time, we're flat to just coming out of a drawdown, which we have in history. Every drawdown has been met with new equity highs. Okay. The 28K, again, that's another portfolio. Again, these are I'm showing them all to you just so you can get a feel for what we're doing. We're using all the micros and minis, and of course, this portfolio is too new to have an equity curve, but it is up 46%. Okay, since it started, which was in November. Okay, it was actually created when the exchanges went bonkers and raised margins too quickly, and we needed to make sure everybody could accommodate. Okay, but what you really see in all of my portfolios is our entry date. Okay, and the P&L overall, and of course we give you full disclosure on all information, and all trades come out. Everybody's got the same trade at the same time. Okay, and the overall portfolio, these are the returns since inception. The 45K, 85%, 36, 122, the 28, 46.6, 17, 27.4, and the 5K, which is our minimum, is 95%. Now, in our equity models, okay, which what we're doing in equities, so you understand, I haven't really talked about it, but we're using options to create a synthetic stock, okay? So we're leveraging up big numbers, okay, with little money, okay? And of course, the 1A, which is the biggest of them, is our model that trades 23 markets at once. And again, remember, we're trading all these markets simultaneously using a synthetic option model, okay, which is creating a long or short stock with very little margin. For example, this is 32,000 worth of margin, which we want you to have 96,000. You're actually controlling 540,000. Okay. Now, when you see these results, multiply all numbers by 100. Okay. Why? Because I can't track everybody's options position because everybody gets in at different times. I can only track. So we use to track this, we use 1 share of stock just to give us an idea. So multiply by 100. But in the meantime, what do you see? You see a similar equity curve, which is very similar to what the markets have done, which has really been a whole lot of nothing for the last, few months. Yes, we're higher, but we're going higher at a pace. I mean, here's a live chart, okay? And if you just look at any particular index, okay, yes, we're going higher, but it's grinding so slowly. These are weeklies. Okay, look at the lack of movement. So at the end of the day, okay, you get to see, you can expect why we are here, because you're basically in a lot of chop. Okay, the 2A, okay, is just obviously the same model except it trades 8 markets. Okay, it takes 18,000. Okay, and of course it's a little bit better than others. And again, it just depends on what's going on at the time. But all markets, again, everything will trend eventually. Okay, if you have the patience to stay, you will get a trending market. Okay, that was the whole theory behind Richard Dennis and his turtle traders, was the ability. So we got from the 96 all the way down to 5. Okay, we have margin requirements from 32 all the way to 1900. And again, it depends on what is best for you. I don't want you to be over leveraged or over invested into a market. I want you to be comfortable with what you have on, because you have to be able to deal with when you do go into a drawdown. And if you're over leveraged, you will never be comfortable. Okay. And of course, the results here, the 1A 913% since inception, the 2A 691, the 3A 971, and the 5A 304. Okay. And these are real results. Okay. Again, they're sent to you each and every week. So you can understand that I can say that because, again, A, I'm in them. Okay. And B, I send them each and every week to you. Okay. And we have a couple of interesting facts that we can share with you. Okay. And, 12 bullshit lies you tell yourself that hold your restaurant hostage. Look, again, are you ready for a change? Are you ready to change your mindset? That's really what this comes down to. Okay. You're going to have to make an adjustment to what you do or what you've done in the past, because this requires the optimum discipline to be successful. How do I know? Well, I went through it. Listen, I've been trading, again, 43 years. I used to trade on the floor. I would trade 40 to 50,000 contracts a day. Okay. And I understand all these things about markets. And in fact, we didn't use charts or algorithms when you were a floor trader. You were trading the order flow of the market. So again, you're going to have to make a decision if you can make a change and understand what you're trying to accomplish. Okay. Now, every Saturday morning, you get a publication from me. Okay, either the equity portfolios or the futures portfolios, or both. I have many who do it all. I have some that do one or the other. Okay, again, that's up to you. Okay, I want you to be comfortable at what you're doing. I'm not interested. My subscription fees, my membership fees are very inexpensive in relationship, and all I want is to help others make money, which is the same reason why I have a free program that I give to high schools. Okay, right now we're in about 600 high schools, and I finance that myself. Okay, helping them because I can't stand the financial literacy that we have in this country right now. It really becomes problematic to me because, of course, my kids, well, they're older now, but when they went through high school, I couldn't take it. So I developed a financial literacy program for high schools, which basically teaches trading and investing and everything else all the way from very beginning to the end. And it's a program I donate and I finance myself for the high schools. Okay. And of course, every day at about 2 a.m., you will get an update. Okay. Either in equities or in the futures or both. Okay. And you get a text at the same time. Okay. I will text and email you every day. I am very accessible via email. Okay. It generally takes me less than 5 minutes to respond. If I'm really busy, I say, hey, I can't answer now. I'll get back to you. But I always look to see if it's something that is earth-shattering right now. Okay. But we do have the chat room as well, which then allows you to get in touch with either me or somebody quicker because it's a lot faster. And of course, there's people in my chat room all day long. And believe it or not, no matter what's going on, they're always in a very positive frame. Why? Because, again, what we do works. Okay. And I'm just going to show you, even though this is not a micro, but I'm going to share with you the oldest and the biggest of them all. This is the originator of all the portfolio models. This is the $350,000 portfolio. Okay, that was again the beginning of it all. Okay, and it's had huge profits. Okay, and this is based on, remember, it's based on 3 times the leverage. Okay, so if you throw off the leverage, it would be a hell of a lot bigger profit. But I'm not interested in creating a bigger profit. I'm interested in making money. I'm interested in making real money. Okay, but here you can see another equity curve that is tilted higher, and this thing just made all-time new highs about 6 weeks ago. Okay, and of course I'm in this one as well, as I am in all of them. Okay, and because I can then talk about them legitimately, number one, and number two, listen, I like making money. At the end of the day, you know, when I had to come off the floor, I had to find better ways to make money, and of course there's nothing better than this. And these are the different portfolios that we use. Okay, and of course, as I said, every week you get the equity curve. Every day you get an update. And of course, between the Monday night call that I do with Andy Hecht, if you know who he is, writes for Seeking Alpha, he's a partner of mine in Puppet Trading. Okay, and you know, the other training sessions, we are always in basic constant communication. Okay, making sure that you have the right education, making sure that you are prepared, okay, to what is going on, because again, I understand how markets work. I've only traded for my own account for 43 years. I don't have any investors. I don't have money coming in. I strictly do my own trading based on my own algorithms. Okay, and I do that, you know, obviously on a regular basis. So it's important to me that you are in good shape and in good stead, because that's what I want. Now we also have the opportunity for you. Okay, we've got 2 brokers. Now I've got many brokers. Okay, I don't want to limit it to 2, but I have 2 brokers that, if you want, okay, in the future side, that will do what they call letter of direction trading. Okay, and that means that you sign a letter with them, allowing them to execute my trades only. Okay, and that would be through Capital Trading Group. Okay, and again, they do all my accounts. Okay, but they execute at 7:30 Eastern. No matter what time the trade comes up, they start at 7:30 Eastern. That's when they do the execution, which is fine. That's 6:30 Chicago time. I have no problem with it. Okay, and in equities, we use Tradier brokerage. Okay, well, and Tradier is, you know, it's $10 a month flat. So I can't beat that. Okay, and plus the fact that we have been able to automate, if you choose, it's part of your membership. There's no additional cost, but we have automated our trading models. Okay, which is either our portfolio models that do everything automated, so you don't have to do anything. Okay, it does it for you. Okay, now again, that's up to you. It's not required. It is just a perk or part of it. Okay, it's something that we wanted to offer to everybody. Again, I have accounts at many different brokers. In fact, I still have my commercial account, but I use CTG for my futures because I let them execute for me. And I use my automated trading from Trading. Okay, again, $10 a month, it saves me 5 figures a month in capital. So, you know, I should have the money than a broker. Okay, and you know, just what others have to say. Well, again, this is from a month ago. You just follow the rules. It's like winning the lottery. I can't thank you enough for what you do. I am retired and I make more money now than I did as an engineering manager, and I made a lot of money. God bless you, Bubba, because he sure has blessed me. You know, I get these all the time. Okay, and here's one more just for you to share, and that is, I want to thank you for sharing what I consider to be the closest thing to the Holy Grail in investing. I've spent countless thousands on investment subscriptions that helped me become financial literate, but when it comes to making money on investments, luck kept entering into the equation. Profits came and went. I kept running into a brick wall until I found you. As an engineer, which they always excel because they can follow rules, right? They got to have a reason. I have always looked for a method of investing that has a mathematical and statistical certainty. Your strategy does. I cannot thank you enough and look forward to following the markets with you for many years. And again, these are things that we do on a regular basis. Okay, and I get these all the time because look, we're honest, we're truthful. We have your best interest at heart. That's all I care about, is that my members make money. Okay, and I sympathize with them when we're going down, because I've been through it, so I understand it. But again, I have a pretty thick skin after doing this for 43 years and being on the floor. So if you want to become a member, I'd love to have you. But again, you got to want to be part of it. Okay. In the meantime, if you want to take advantage, you get daily text and email updates. Okay. You get a daily video. Okay, my weekly updates. You get a weekly portfolio with all the P&Ls. You get trading sessions live and recorded. Letter of direction trading available. Automation for equities if you want. I have a free 6-session option course I just did. Okay. Plus, you can get 2 of my books in a PDF. I've written 2 books on options trading, which you're welcome to have if you become a member today. Okay. And all you got to do, okay, for 25 people only, okay, it's $99 a month, and it's bubbatrading.com/futures. But if you want equities instead, you can just tell me and I will make the switch for you. Or it's $1,000 annual, and that's bubbatrading.com/futures year. You get either one you want. I will make the adjustment. You just have to email me and tell me. Okay. And this is a one-time offer. Okay. The normal price is $299, and of course, it will go back up after this. And again, if you want to become a member, great. And if you want both, I'll make you a special price on both. But in the meantime, again, that is entirely up to you. But remember, no matter whether you become a member or not, follow rules. Don't let markets dictate to you. You just follow their price action, and you'll have a much greater chance of success. Okay. So once again, it's $99 per month if you want to go monthly, and cancel anytime if you want to cancel. Now, we do retain approximately 90% of our members. So I don't see anybody canceling, but you never know. Okay. And it's $1,000 annual. And again, as I tell you, we have our ups and downs, but the equity curve, as you saw in live time view as of this morning, although in congestion now, are slanted higher, which is what we expect. So it's bubbatrading.com/futures or bubbatrading.com/futures year. And I will answer all of your questions because, I did finish a little faster than usual, but again, it's hard for me to kind of gauge. I'm used to just, phasing myself, but I know it's Saturday and I don't want to hold anybody up. But if you have questions, I don't know, the questions come to me, Jeff, or they come to you and you ask me?
We can do it either way. Either way.
I'm easy.
Sheena 2005 says, I'm not sure how in YouTube says, I'm not sure how you create a long stock position synthetically. Do you mean long calls?
I can I'll actually share that right now. Okay. If I wanted to get long, let's use the spiders, which is one of our current positions, and it's currently long. Okay. And so I go to trade and Thinkorswim, that's the one I use. And right now we're using June 25th. Okay. So the stock is trading at 424. So I would create first a synthetic combo. So that's buying the call and selling the put. Now this alone actually is the stock. Okay. That's known from a trader standpoint, from a floor trader, that's known as a risk reversal. Okay. However, that's the same as buying the stock, and the margin requirement is the same. Well, that doesn't do me any good. So simply what we do is we go down and buy. Oops, I didn't want that window. We go down and buy the put, and we're going to buy the 419 put, which is $5 away. Okay, so now we bought basically almost 70 shares of stock at this point, which will grow if the stock, if we're correct, into 100. Okay, and we now have the representation of 100 shares of stock. Okay, and somebody will say, well, why don't you buy the long call by itself? Well, because if I buy the call, I'm paying $2.80. Here, I'm paying $1.18 for the same call. Okay, so why wouldn't I want to take advantage of the market movement or the trend overall? And that is how you create a synthetic long. Now, for those who want to take a little bit more exposure or risk, I mean, this has a risk to it of how much? Okay, $1.18 debit and $5 in the spread width is $618. If I wanted to take a little bit more exposure and go to the 414, I can buy it for 42 cents. My margin is now 1,042. Okay, so that is something that some that are more experienced, they do. Okay, but that's how you create a synthetic long. And to create a synthetic short, you reverse the two, bang, bang. Okay, oops. And instead of a call, you buy instead of a put, you buy a call. Okay, and then we go up above. Okay, and this is a representation of a synthetic short. Okay, and that is how you create. That is that simple to create them. Okay, so you can do that on a regular basis, which we do. Okay, we do it with in the 1A 23 different positions, always creating synthetics that allows us to use leverage. It allows us to participate, and it allows us to participate in some bigger stocks that we might not normally be able to trade.
All right, let's see. Glenn says, I'll let you kind of speak to this a little bit, but Glenn in the YouTube or in Gochi says, Bubba has some philosophy that he wants to be in the market, either long or short. Does that go against some of the other presenters here? So I don't necessarily think that goes against the presenters. Most of them are directional, but I didn't really have a comment about that other than that. I was wondering if maybe you wanted to comment about it.
Well, again, look, we want to be in the market because what we're trying to do is catch the longer term trend, okay, in any market. So we're going to always be in the market. Okay, I'm going to give you a perfect example. This is why we're always in the market. Okay, here's an example. This is copper, which is a future, but we trade it in one of our portfolios. Okay, but if I go to copper, and the reason I'm showing you this is because this has had every emotion you could ever ask for. Okay, we made a lot of money on the initial move of copper on the way up. Okay, if I go back farther, but in the meantime, we then got a little bit chopped up in here, long and short, because again, it was consolidating, which is the greatest time of torment for any trader is consolidation. But of course, so we got chopped up a little bit, but then of course it got long again, and bang, straight up it went, and we made a ton here. And then now, the last few weeks, we've been getting chopped up a little bit, but still net profitable. But over time, again, I don't want to miss the move. It's easier to always be in because what we're trying to share with you is we want to take out all opinions and all emotions and just always be in. Either if the trend is down, we're going to be short. If the trend is up, we're going to be long. And it doesn't matter what product we're trading because they're all the same. And one thing you want to understand is that all charts and all patterns are the same. They repeat themselves in all commodities, futures, equities. It doesn't matter. They all go through the same basic phases. So there's nobody who's right or wrong, okay, is what they do. Everybody's got their own views. We just like to always be in because it takes out the human element of making a decision.
All right. One more comment from the community. Not really a question. Glenn says, he, meaning you, Bubba, is a really straight shooter, and I appreciate that. So that's it. That's all the comments we've got.
Oh, that's great. Listen, Jeff, it's always great to be with you. And if anybody needs to get a hold of me, I will answer, whether you become a member or not, I will answer your questions. You can reach me at bubba@bubbatrading.com. I'm always free to answer questions. I help everybody. Obviously, I'm very, to my members, I like to take care of them, but I will answer a question for anybody. If you need help, you can always reach out. I have no problem. It's bubba@bubbatrading.com. And Jeff, as always, it's a pleasure to be a part of your series of webinars. You're a great company, and MetaStock is a wonderful platform, and it's great to be with you. And thank you so much.
I have one more question, if it's okay.
Yeah. Listen, I got nowhere to go. My wife's in Big Bear.
She wants to know. So, is a synthetic long position just to reduce platform premium and to get a better risk reward? Is that primarily why you would do it?
The reason that you create a synthetic is to reduce the premium and also give you more representation of a long stock or a short stock. Okay, it's a market maker trade. Actually, most of these trades or styles came from me as a market maker. It's got a built-in risk that you can lose. It's got a max loss, which is not the max of the stock. And it also has a much quicker opportunity because if you buy an at the money option, it goes up, 50 deltas and it goes up a little bit versus you create it. So now what we basically created is a deep in the money option that has no time decay and doesn't have as much risk to the downside. Okay, the at the money option is the key in the models that we use, and that's how we create them. So it's really to create and get true representation based on what the stock is doing, not based on the implied volatility of the option.
All right. That's it. Dwight says, Bubba rocks. He's the real deal. Jonathan says, fantastic. Thank you so much for your time. He also added, make sure you have an incredible rest of your weekend.
Yeah.
And Sheena says, I loved your presentation.
If
So
I was
good
in
job.
Vegas, I'd be happier, but I'm back in Chicago right now. I go back and forth between the two. But what can I tell you? In the meantime, I appreciate everybody. It's Saturday. I know it's a tough day, especially with the pandemic kind of not over, but we can go out and do our thing. So I appreciate all of you being here and participating, and thanks for the questions. And Jeff, I thank you, my man.
Thank you. And Greg, let's get the lights one more time. Thank you, Bubba. It's good having you on here. Oh,
Thank
wow.
you, brother. Appreciate it.
Magic. All right, thanks. Okay. All right, that's it today, guys. I hope everybody enjoyed it. I hope you had a great day today. I'm going to go ahead and switch over here to and remind you one more time of the summit offer. Today it's a great time for you to be able to try out the software that's been rated #1 in its price category. We do have a great bundle that's put together for you. I've talked about it all day. Thank you for everybody that signed up so far. This does include so much training and so much information. We've got the Jeff Tompkins trade trend package, Jake Bernstein, his add-on, the setup and timing triggers, Fulgent AI, the artificial intelligence, Peter Dalal's Magic Trader Elite 3-for-1. Learn MetaStock. Again, you're going to get 3 months with this. Unleash the power of MetaStock. You'll get the training that helps you get everything set up and running, and 2 years of Stocks and Commodities magazine. So all of that, if you've just bought it off of our website, would cost you $3,835. Today, at the session, you're going to get $1,691. So $1,691, I think that was the year Gregory was born. You can do that at 800-882-3040. You can visit us online at metastock.com/summit deal. And you can also go to metastock.com/sales-chat. I hope you enjoyed today. I would encourage you to try MetaStock. There's a reason it's been rated #1 for so many years in a row. 800-882-3040. metastock.com/sales-chat. Thanks for coming, everybody. I want to say thank you to the presenters for being personal friends of mine, for coming and supporting the event. And great job. I think we did a good job. Have a great rest of your weekend, everybody. Thanks.